As I mentioned yesterday, at the end of the day, we will plan to go a little later tonight. See how much progress that we can make on this case this evening. Mr. Vaughn, well, first, before we get started today, does anybody have anything that they need to bring to our attention?
Your Honor, just two items briefly. First, the company plans to call company witness McKenzie after Mr. Vaughn is finished on the stand, and then we'll take our remaining witnesses in order that is provided in our notice regarding witness order.
Okay.
And the second item was just a follow-up from yesterday regarding the timing, the commission's planned timing to recall company witness Kearns.
Mm-hmm.
We said we were going to take that up this morning, so just wanted to inquire of that as well.
Okay. So that'll be fine with regards to witness McKenzie. I already see Mr. Garcia champing at the bit, so we'll happy to take Mr. McKenzie next after Mr. Vaughn. That'll be fine.
Thank you.
I want to check something before I address your other item. Let's take Mr. Kern after Mr. McKenzie.
Yes, Your Honor. Thank you.
Anything else? I want to make sure we've got Mr. McCann, Mr. Cook. All right. Mr. Font, let me be a little more straightforward about a couple of questions I asked you yesterday. I was asking you questions about the what's called the avoided capacity benefit of Solar Garden, which is the nameplate reduction of the FRR capacity. Do you remember those questions?
Yes.
So it reduces your overall requirement under the sort of fictional scenario we were talking about. If it produces exactly on the 5 CP at full contribution. Do you have your testimony in front of you? Your direct testimony?
Yes.
All right. Which line in that? I'm forgetting. Is it AEV 7 or AEV 8?
8.
AEV 8. Which line on AEV 8 of the NPV economic prudency test does that show up?
It would be. I was about to say G, but that is the avoided capacity cost. It's really there in C, but where it says average 12 CP reduction, it should be average 5 CP reduction. Oh no, that's just I guess a.
Well, I wondered
it should
about that.
It should be. We have basically this exhibit has the OAT line item in there twice, the 12 CP. So I got to sub one of those out, and it should say the NPV of avoided capacity costs. So under C, it has average 12 CP reduction times annual transmission revenue requirement, dollars per megawatt year.
Those are different values, right? That's a reduction of that's the OAT LS. That's how the OAT LSE costs get allocated, right?
Correct. Yeah. It's missing. The AEV work paper 3 includes it. It shows in that example the avoided capacity charges. Like it shows that is an illustrative example of the full 25 megawatts with all of these value streams shown in it. This figure AEV8 is missing the benefit stream of the NPV of capacity value. So it would need to be added in here.
Okay, so you're saying there's a work paper that has an Excel spreadsheet that actually has this
Yes, sir.
calculation that looks different? Do you know
What it does is it shows, this is a illustrative summary. The AEV Work Paper 3 shows in detail how you would calculate all of these things. I do not offhand remember what staff data request we provided all of our work papers in, but I know it's
That's okay, it's 2-1.
my, yeah. I know it was provided somewhere.
You imagine how slow these hearings would have been with the number of questions I have without a computer? So it's Vaughn 3?
Yes.
Vaughn Work Paper 3, that's great. So I see the tab, I just want to make sure that I'm looking at the thing that you're wanting me to look at. The tabs are summary, AS credit, generation capacity value, energy, 12 CP, LSE oat.
Yes,
on
it'd
and
be on the generation capacity value tab, where it shows how the solar load shape would reduce essentially what it would be worth at the time of the 5 CPs using, I think, a 3-year historic of the 5 CP hours, the dates and hours. And then it shows the capacity curve, includes the gross up for the reserve margin, because you are reducing the load obligation with these facilities.
And that's the tab generation capacity value.
I'm sorry, can you say that again?
That's the tab generation capacity value.
Yes, sir.
Okay. So that is, I just want to make sure I have an appreciation here. That entire value stream is just not on the test input.
Correct. Yeah, I just need to insert something in there, because you have the A is the total cost of service from the project, which is summarized above, and then you have the energy, ancillary services, the reduction in the 12 CP, and then the rec value. So yes, it's missing the generation capacity reduction value.
Right.
Mr. Chairman, we'll make an update when we file our other changes to the.
I appreciate that. Could you all provide Mr. Vaughn a copy of that Vaughn Work Paper 3?
Can we provide one?
Yeah, you all, I mean, we can bring it up, but it really is not necessarily productive to bring it up on the screen, but we can if we need to.
I can provide it electronically on my laptop. I'll just need to
Yeah,
log
I'm
into
gonna do
the
that right
app.
now.
Do you mind? Thank you.
Not at all. Let me have a second to get logged on.
So I'll just ask you questions, and if you need the,
Yeah.
well, I'll just stop asking questions.
Yeah, sure.
On the calculation of generation capacity value, you've got June, July, August, and September on here.
Yes.
Why 4 months?
Because those are the months under current rules in which you can set a 5 CP for
Yeah.
purposes of your capacity obligation,
And we'll
PJ.
come back to current rules, because I just want to make sure I have an appreciation for it. So at some point, the FRR plan is based on a backwards-looking 5 CP usage, or 5 CP demand during those months from the previous year. Is that how the FRR plan is set roughly?
Well, I mean, all capacity obligations are set based on the
That's
previous year's CPs.
Yeah. So either, whether you're BRA or FRR, but I just want to focus on the FRR.
Yes, yeah.
Yeah, okay. And then you apply, I'm guessing here that since there are no values in these months for particular days, that until like 6 a.m., for instance, and then it increases and then it decreases, you're just, that this is the overlay of a hypothetical or an expected production of a solar facility?
Yeah, as it states in my testimony, we took weather station data from PV Watts, I believe, NREL's website in our service territory to get the shape, and then we applied capacity factor based on what we've observed on projects that we have in service.
Okay. And then the peak reduction goes down every year over as the facility gets older. That's just a degradation of the facility's output.
That is panel degradation and
Okay.
assumed like 0.5%.
Okay. Would you mind? Just
Yeah,
get-
that's
you
what
got
it
it ready, sir. And then, how do you just assume, for purposes of this calculation, that, and this is, sorry, generation capacity value tab. Do you just assume for purposes of this that the peak is the same as the max production that day, max production that month?
No, that's why we laid the actual solar load shape in there. So you match up what the expected production is in that hour with what if you look down there in rows 31 through 38, we have kind of a 3-year average of when the hours were. So you'll see the peak reduction goes between as low as 11 megawatts to as high as 16, depending on which hour that peak is. Then we took a 3-year average of that peak reduction. So you're never going to get 25, full nameplate, unless it's, these are afternoon hours, so you're already starting to go down the solar generation curve somewhat at that time. It would need to be closer to noon to get a much closer to nameplate value.
All right, and so I only knew about the AEVA, and I guess I missed the work paper here. Yesterday, you were talking about how the capacity value was relatively small compared to the other value streams. You remember that?
I do,
Okay, so going across on the summary tab,
yes.
so the generation capacity value on this is a fifth of the value stream, right?
Roughly, yeah,
Roughly, yeah.
in the early years.
I'm sorry, I'm looking at 2027, sorry, just
Sure.
rough estimates. The energy value is always more than the capacity value and outpaces the capacity value, is that right?
Yes, that's what it
then-
looks like.
The LSE oat charge value. Do you see that?
Yep.
Higher than the capacity value, outpaces the capacity value, and seems to correlate pretty strongly with the energy value. At least on a linear basis, they start around the same place, and
Yeah, they both have assumed escalating prices over time.
so the 12 CP. Just to make sure I've got this. It takes the, and I'll talk to Mr. Burkholder. I know this is Mr. Burkholder's thing, so but the 12 CP effectively is the way that the FERC tariff allocates the AEP SC bill for transmission amongst the operating companies, right?
Yes, that's how Kentucky Power incurs LSEO costs, through 12 CPs.
And so this is just a reflection that insofar on a megawatt to megawatt basis, you can reduce, all else equal, your 5 of those 12 allocators. That's a value. That's an avoided value.
Well,
right?
just to be clear, it's more than just the 5. I mean, I think when you look at that tab, you get some value in almost every month.
That's fair.
But yeah.
Okay. As long
It's
as
lower on average, right?
As long as
than just a summer measure.
as long as the CP allocator in any given month happens coincident with the production of the facility, that's a benefit.
Yes, because the facilities would be reducing the company's load, reported for settlement purposes.
Do you have, is Kentucky the only state that's going to have a solar garden?
It's the only place we've named it that. I mean, we have approximately 140 megawatts of these projects already operational or approved in Virginia. Theirs is done for a different reason. They have a statutorily mandated renewable portfolio standard that escalates annually that the APCO is complying with. And so we do have distribution level solar there, but not not the same proposal, I guess, or we won't call it solar gardens, but yes, we have distribution level solar in other places.
I guess what I'm, the FERC, size of the pie at FERC, the FERC revenue requirement is going to be what it is.
Mhm.
This is effectively reducing the slice of the pie for Kentucky Power, right?
Yes.
If other states are simultaneously reducing their demand during those 12 CP allocators, if Kentucky Power doesn't also reduce its demand, it's going to be allocated a greater piece, all else equal, right?
Yeah, correct. I mean, Kentucky Power can only control Kentucky Power, right? Just like we have other entities in the zone that install solar and batteries and peak shave, and they also reduce what they would pay as part of that annual revenue requirement.
Yeah. And so if some action isn't taken to reduce that, then it just means more costs are going to be allocated. That's just the reality of the situation, right?
I mean, it's kind of a, if you think about it from an economic standpoint, it's a but-for type calculation. So if you didn't do this, yeah, something would be different. But the same is true if when another state adds load. You know, there's a lot of things that are going to affect those relative 12 CP allocators.
So, okay, just taking your calculations here at face value. Okay. Reduces the overall load requirements, or it reduces the overall generation requirements for your FRR plan.
Reduces the load obligation.
Reduces the load obligation. Reduces, helps avoid ancillary service charges.
And any of the load-based ancillary service charges that get billed on your load settled with PJM, you are avoiding, yes.
Avoids purchasing energy, commensurate with its production.
Yes.
What is it with the production? Reduces allocation of PJM, LSE, or OAT expenses.
Yes.
And
It also produces
reduces
RECs.
RECs.
Yes.
That's what, sorry.
Fungible commodity.
Yeah,
Yep.
so actually produces value in, the production of energy has a additional value stream in the form of a renewable energy certificate, right?
Yes.
Okay. And all of those values, those value streams, however many they are and at whatever level they are, is netted against the cost of the facility to determine whether it's cost effective on an MPV basis. Is that right?
So what we did is we compared it to what's proposed in AEV. What's proposed in AEV 8, in the company's case here, is that if the MPV of what you just described, so all of the benefits subtracted from the MPV of all of the costs expected over the life, if that is less than the NPV of avoided capacity, then it's economic. So it might not necessarily be NPV positive, meaning that all of the benefits are greater than all of the costs, but it is relatively less expensive than your avoided capacity. So I think I think a lot of these we've seen are NPV positive based on the curves we're using and the prices we're observing at the time and the cost of the facility. But it could still be true that something passes the economic test where it's a net cost over the life, but it's less of a net cost than the avoided capacity, expected cost of avoided capacity. That's what's shown in line, F and G in that AEV 8.
Cost of service less the value streams compared to your avoided costs.
Yeah, so
Avoided
you get,
capacity costs.
yeah, so if you go down to figure 9, it's putting numbers to it to,
So I just want to make sure I have an appreciation. You're using the energy that you avoid as a calculation to determine whether something is cost effective, but only comparing it to avoiding capacity costs.
can you state that again?
Yeah. You're taking a calculation that includes a value reflective of avoided energy costs to compare to something that's only related to avoided capacity value.
We're taking all the value streams, which include energy, yes, and comparing it to capacity. I mean, that was one of the, part of the impetus for, as I state in my testimony, for proposing this plan, why Kentucky Power said, let's look at this. We know we have a capacity need in 2026. IRP shows solar coming on as part of the preferred plan. And so that was the driver. So, I mean, yes, you could add avoided cost of energy as well to line G in the economic test. You could do that. That's just the way that we propose to structure it.
Well, I know I could. I guess what I'm asking for is, wouldn't it be reasonable to?
It could be, yeah. I mean, just we did it that way just because that was the use case, I guess, or the reason we were proposing the program was for capacity.
Okay. Well, the idea of an avoided capacity and avoided energy charges that, like, going back to PURPA, would you agree that it's, I don't think, I'll just tell you, my guess is Kentucky wouldn't have avoided energy and avoided capacity values if it wasn't for PURPA necessarily. I just, a lot of these states wouldn't have done this absent PURPA, right?
Wouldn't have done what?
Wouldn't have had, we wouldn't have a statutory or regulatory mandated requirement that utilities mandate or have avoided capacity values ready and willing, and tariffs that anybody shows up at a time of a need, the utility has to buy it at a certain price. I mean, all of that is mandated under PURPA.
Yeah, the unilateral put to the utility is mandated under PURPA, and that's just the price measure at which that happens.
Yeah.
Correct.
But the at least the idea, and I'm going blank on the order numbers, but at least I think maybe 872. But at least the idea under PURPA is that the utility should be indifferent in its price it has to pay to qualifying facilities because it reflects their avoided costs.
Correct.
Yeah.
Exactly right.
And-
So
and-
if you can bring a facility online and everyone else is indifferent, then
Yeah.
why not?
Yeah, but
I guess back to your original question, yeah, when you start thinking about it from a PURPA avoided cost standpoint, yeah, it would be reasonable to add the avoided cost of energy to the economic test.
okay. Current rules. RTOs are regulated by FERC. An RTO is a utility per FERC, right? They just, that's a statement. That's okay. But regulation is what it is. Rules change prospectively. Tariffs can change. So, sorry. Could you keep that up for a second? I'm sorry. Just so that it's okay. So rec values don't really. Oh, rec values really have very little interaction with what FERC rule is. Would you agree? FERC doesn't set those rates. Would you agree? Okay.
Correct. I mean, generally, we're selling RECs in the bilateral market, broker market.
Ancillary services, wholesale ancillary services have been around and calculated in a very similar way for years. Would you agree?
Yeah, correct. They are part of a FERC-approved tariff. Yes.
And have been since open access came around. Would you agree?
I would agree with that.
Okay. Energy value, wholesale energy value versus the cost of production. There is some cost at this point of energy production that could be avoided. So that, let me ask you this way. You're not worried about a revenue stream going away with regard to column D there of energy value?
No, I believe
Okay.
there'll probably always be some sort of cost to energy.
Okay. And then,
These hearings will be easier if there isn't.
what's that?
If there's no longer a cost to energy, these hearings will be easier. in the future, but yeah, I
For
don't
you,
expect that.
given your new position, I would certainly agree. I don't know about it for everybody else, but for you, as long as you keep your current job, for sure. So I want to focus then on C and E in terms of this caveat of current rules. And part of my concern is this is a 35-year investment, right? That's the depreciable life that you're looking at.
Correct.
Using, okay. And I'm not asking about prudency in terms of knowing what you knew at the time, but I'm just trying to have an appreciation for what the risk of being wrong to the upside or downside of the NPV analysis might be
Sure.
over the life of the asset. So the generation capacity value is avoiding currently the rules today, the load obligation for FRR,
Yes, reducing it.
reducing it. Would you agree as a general matter, well, let me ask, do you expect, knowing the production of generation and the demand of Kentucky Power customers, that over the life of approximately 35 years of a fictional 25 megawatt system, that there's a real risk or an expected risk of that value stream going to zero?
The value stream in question being the capacity value?
Avoiding generation capacity.
I don't think it's going to go to zero, but I think it could very well be something different. I mean, I believe PJM is going to institute a winter, some measure of winter obligation, whether it's a separate market in itself or it is a new annual market that includes winter peaks in the calculation. Yeah, I think it's very clear from the stakeholder process that's coming. It's not in the current rule changes, but we expect it to be in the next round. And so the caveat with that is about not knowing the future here is, yes, you may end up with a lower peak reduction for your capacity value, but we'd also expect those market changes to increase the price of capacity. And so you could have a push-pull scenario where you end up with relatively the same value because the market is short capacity in the future. You know, we're seeing the first half of that here with how they have changed resource accreditation to an annual figure. It's no longer summer. It's now, they've included winter in at least the ELCC side, and they've transitioned thermal resources to marginal ELCC calculation. So now there's less capacity in the RTO from an accreditation standpoint. So, right, you got to think about it in terms of, yeah, the megawatt reduction you get credit for may be less in the future, but the price you're applying to it might be higher. I don't know as I sit here.
Yeah, but like even if let's just even say hypothetically that it moves to a winter, it's not going to happen. But PJM moves to a 5 CP for winter months type allocation or determination of load requirements. That doesn't mean that production in the middle of summer has zero capacity value. Would you agree? It just may not necessarily be monetized as a capacity value stream within the market.
Yeah, I mean, it's going to be whatever the market, for how we're proposing it, it's going to be whatever the market rules are at the time.
Yeah, but I'm sorry. I guess what I'm really trying to ask is, you all have load requirements outside of 5 peak times in the middle of the summer.
Absolutely,
right?
yeah.
And there's a value of having adequate capacity to meet your load during those remaining 8,755 hours, right?
Yes, there is a value to having supply resources and diversity of supply resources and all of that. There's other benefits, yes.
And you don't expect, even if PJM moved to a 5 CP calculation, that customers wouldn't receive a capacity benefit, whether it could be monetized or not through a reduction in the FR load requirement, a capacity benefit of having energy being produced in the middle of the day throughout the summer.
Certainly, and I mean, I would attribute that more to on-peak energy value, but yes, there's value there, correct.
I mean, the value of capacity is that can produce energy. Would you agree?
Yeah, capacity is potential energy production.
And then we'll move on to the PJM LLC OAT charge value.
Okay.
So we walk through everything else. Forget FERC. There's always going to be some energy value to the production of energy Ancillary services have been around for years, cost of service format, whatever. Rec value has nothing to do with set by rules. Generation capacity value, we just talked about that. PJM LSE OAT charge value, that is a result exclusively of an allocation of a FERC-approved tariff. Would you agree?
Yes.
Okay. And then the value here is merely avoiding the billing determinants applied to that FERC rate.
Yes, you're reducing your billing determinants, absolutely.
And so if, I don't think I need you to answer any more on that front. Last set of questions on the solar garden is the allocation, I'll call it allocation, don't know a better word, but the allocation of credits to the LIHEAP customers it was discussed previously in the hearing. You're generally aware of that?
Yes.
Yeah. And the my understanding is that the half of the value of the facility will be allocated, half of the, well, let me just actually withdraw that. What value is actually being allocated to those LIHEAP customers under your proposal, and how is that calculated?
Yeah, so we chose half of the energy value pretty specifically and tactically because there are provisions in the IRA where there's the potential for bonus ITC credits if you have a qualifying low-income program where some percentage, I believe it's 50, there's like some hurdle rate in there, from your facility benefit low-income customers. And so that was kind of two birds with one stone with the proposal. Let's try and establish some low-income assistance in the winter months here with our customers and potentially make the projects more economic for customers if when we do that, if when we look at a proposed project, ITCs at 50% are more beneficial to the cost service than PTCs. So that's the reason for the 50% and why we chose that. But the calculation itself would be, I think it's in my direct testimony somewhere, it would be the previous 12 months of production, regardless of when it happens, times the applicable day ahead LMP, so that would be the energy value that would create the total energy value, and then we'd say you take one half of that, and that would be applied to the LIHEAP customers. Through, I believe we indicated in discovery it would be 3 winter months where we'd credit on their bill.
Okay, so you take 12 months production, prevailing LMP on an hourly basis, 15-minute basis? That was
Hourly.
the question, hourly basis,
Yes.
okay. All right, so the average hourly LMP for a particular billing period for a enrolled LIHEAP customer, take that 12 months of production, multiply it by the LMP, divide by 2, take that as a dollar denominated amount and put that on the bill as a reduction to the total.
Yeah, it's on my
Subtotal.
direct testimony, page 33, begins on line 18, carries over to line 2 of page 34. But yeah, it says exactly that.
Okay.
And I think we estimated it to be $66 per customer. Based on our illustrative example that's included in that work paper we've been looking at.
All right, so I have a big picture question. Let's just say that a 25 megawatt facility, after asking all this, with all this in mind, take a 25 megawatt facility, you said approximately, that would cost just overnight capital dollars, everything, $60 million.
Somewhere in there.
Yeah,
Yes.
that's fun range. Okay. I have an appreciation for what you were saying, that you're comparing this to the avoided costs to determine whether or not it's cost effective or not. That's fine. Would you agree that there's a difference between cost-effective and being the most efficient use of money?
I mean, yeah, the two things are
Different.
Yeah, they're different things.
Okay. Are you generally aware of, I'm not asking you for a legal opinion, but I'm just asking you, are you generally aware of the commission's standard for a CPCN?
Generally, but
Okay. Yeah, and I just, the standard is what it is, it's recounted in orders, but if I said it was something like that a utility needed to prove need in the absence of wasteful duplication, and that as part of proving those, that you needed to indicate that the proposal is the least cost, most reasonable option. That's kind of the precedent. Does that sound familiar?
that's vaguely familiar, yeah. And
Okay.
the reason we looked at it this way, we wanted to get the economic hurdle in there because it will be administratively and cost inefficient to come back here to ask for every 5 megawatt project, right? I mean,
I'm not really asking about the need for a CPCN, but I've always read the law in a way that says you need a CPCN to do everything. It's the original rule. But then there's like this incredibly broad exception that says, except for extensions in the ordinary course of business. Okay? And so most all utility spending falls under the exemption for the ordinary course of business in terms of capital. But that doesn't necessarily negate the need under our regulations to still show that things don't result in wasteful duplication. Right? I'm providing all of that as a preface to say, is this the least cost, most reasonable option to spend $60 million to reduce the utilities cost of service and to provide assistance to customers to either help them use less or to pay less for their bills?
I don't think it's one or the other. I mean, I think we looked at the reason for proposing this program, and we also said what other things could we do to help contribute to solving issues that Kentucky Power brought to us when we were considering what to put in this case. And so that's why we added on the low income option. It also gives us potential to have potentially more economic projects if we qualify for a 50% ITC. Again, it's 60 million, but if that's our overnight capital cost for the solar, and when we qualify for 50% ITC, we're getting 30 million of that back free from the government, right? And that's going to be reflected in the cost of service for that. Is it the lowest cost of energy? I don't know.
Yeah.
I mean, we're evaluating those things now. We have an open RFP, we have bids in. It's hard to compare, right? Because when you're comparing other resources, there's going to be gas curve assumptions and everything. So I can't tell you it's the least cost. I think the way we've proposed it with the economic hurdle, it would, in my mind, pass the least reasonable cost standard, but I can't tell you it's the least cost.
Well, I mean, what you've got as your prudency test is whether it has a 1.0 cost benefit, right? Effectively.
Yeah, it's costs are costs are less than the avoided cost.
Yeah, it's this amount is greater than this amount.
Yes.
1.0 or greater than 1.0, right? Relative to the other cost.
Sure.
Okay. I guess what I'm trying to ask is, has anybody taken pen to paper to figure out whether there are other options that are 1.5 or 2 or some other? Let me draw that. Do you remember yesterday when Mr. Blankenship used the terms something like talking about the DRR and the investments that maybe that the biggest bang for the utilities buck?
Generally, yeah.
Okay. Is this the biggest bang for the utilities buck?
I can't answer that. I mean,
Okay.
I'm focused on energy supply, tariff issues. I'm focused on what I'm focused on. Like I can't tell you that these $60 million or net 30 after you get the money back from the government it would be most efficiently spent here versus giving it to Mr. Blankenship versus giving it to Mr. Kearns versus wherever. I do not prioritize capital for Kentucky Power
Yeah, do you know if anybody at Kentucky Power prioritizes the capital at Kentucky Power, or whether that's done at the AEP level?
No, that's Mr. West
Okay.
at Kentucky Power. You know, when we talked about the EEI deck yesterday, we mentioned this isn't in there. I mean, that's one of the, you know, that capital wasn't in for this program wasn't in the pie chart, right? And that's where Mr. West and his counterparts at the other companies work through service companies to optimize the total amount of capital that we're putting in the utilities. And so you might have a project get delayed somewhere else. Mr. West needs capital for this or for Mr. Blankenship or something else. That's how dollars get moved around. So just because it wasn't in the wheel doesn't mean that it can't be funded.
Yeah, and I think that's a great word, Mr. West, optimizing. Okay. I just want one last question on, I think, this entire line. AEV 8, when you're talking about your prudency test, I'm not talking about the bottom part, the actual prudency test, but the calculation of the cost of service above. Does it take into account that ITC savings?
ITC or PTC, yes. It depends. So regardless of where, you know, post-IRA, you've always been able to take ITCs or PTCs on wind projects. Post-IRA, it's now a technology neutral PTC. So since when we do a solar project, we evaluate the individual project to see if ratepayers would be better off lower cost of service under PTCs or ITCs.
Yeah, I just was curious. It had the PTC on it. I just wondered if you had an opinion about the over a 35-year life. I know there's the length of time, and there's a lot of considerations go into whether a PTC or an ITC versus a break even between the two. Do you have an expectation that if this is distributed solar in the Kentucky Power, one of the 20 counties in Kentucky Power's territory, over 35 years at a distributed level, do you have an idea of whether the ITC or the PTC would likely pay off? Or which one would likely be chosen?
Generally speaking, when we do this analysis, we end up with PTCs being greater than ITCs from a customer cost perspective. It's just the rate of the PTCs and then the production of the facility over the 10 years that it's PTC eligible tends to provide a larger cost of service benefit. There is a tipping point though where if production is below a certain level, estimated production is below a certain level, or capital costs are over some level, where it will then say that, well, an ITC for that specific project is more beneficial.
Yeah, and I guess your irradiance or production values that you used in the Vaughn WP3, were those Eastern Kentucky specific, or were those just general production values of a solar facility over 35 years?
I'd say they're from the region. We used what we're seeing from kind of an average of what we're seeing from the same type of projects across the state line in Southwest Virginia in our affiliate. I mean,
Okay.
there's no difference there.
As I asked Mr. Blankenship, there's not much difference across the border in terms
Just
of
an invisible
the policy.
line.
Yeah. A good sized river, but yeah, I got you. All right. Good on all those, Mr. Vaughn. Are you helping Kentucky Power with its review of responses to the request for proposal for for power purchase agreements?
Yes.
Okay, and what is the status of that process?
So the bidding process is closed, and so now it's in the bid evaluation process.
Okay, have you had a chance to? Do you have them in hand? In
I do not right now.
you have? I know you don't have them in your hand, but you have them when you go back to your office. They're available to you. They're collated. The company has them.
The company has the bid packages, right?
Okay.
So now you're starting your due diligence on the bids. This may shock you, but you know we always have to go ask for more. You know, it's like filling out an application, and the team that deals with the commercial team will be going back to bidders saying, hey, you didn't fill in this. We got to get. So it's kind of making sure you have all the information you need from everybody, and then you begin the evaluation process.
Okay. Have you started to review those?
I have only reviewed it at the summary level. We'll really be getting into that here in the coming weeks.
Okay. I'd like to go into a confidential session. Directed. So going back to AEV4 here, your testimony, were you involved in the decision not to renew the Rockport UPA?
I don't think I was involved in the decision. I was involved in the regulatory cases, surround like the 2017 case, where, the settlement agreement did what it did. I myself was not a decider there.
I'm not saying you were, did you provide guidance and information to Kentucky Power in their decision-making regarding not to renew the Rockport UPA?
I did not, no, not that I can recall.
Okay, do you know whether anybody in your group did?
No, so at that time, I was in, I would say, Miss Walsh's position. So I was in a different group. I was in this kind of more cost service, standard pricing team.
In December?
Well, I mean, are you saying like as of, I think the decision was made prior to December of 2022, right? December was made, or the decision not to renew was done prior to that.
Do you know when the decision was made?
I don't have that. No, I don't have that date on me. I don't know. It was done well in advance of December of 22, though. I mean, we transacted for short-term capacity to replace the megawatts that you lost in the UPA, prior to the 22-23 delivery year, right? Because you lost that capacity for Kentucky Power halfway through the delivery year, so we had to have something else in place, which was a bilateral purchase.
Yeah, I've got some questions about that. So, it's a December, it was like second week of December kind of date, right? Which is not a planning date for PJM, right?
Correct.
Yeah. Why? Well, okay. That's the best place to start. So you all had to, in order to satisfy your FRR plan, Kentucky Power effectively had to do something unique to ensure that they had enough capacity, there was enough capacity to cover their obligation throughout the year, even though a portion of the Rockport UPA, the Rockport UPA only covered a portion of it through a portion of the year, correct?
It only covered a portion of the delivery year, correct? Because it ended in
And
December.
And PJM doesn't care if you've got capacity to cover a portion of the year, you have to have capacity to cover the year, right?
Yes, you must cover the entire June 1 through May 31st delivery year.
Okay, and in order to have enough capacity to cover that entire, last delivery year,
Yes.
Kentucky Power did what?
They purchased bilaterally from other members of the FRR plan at the avoided or opportunity cost to them. The plan in that year was long, so it had made excess sales into the RPM market. And so by selling or committing some of those long megawatts to Kentucky Power to fill its need for the balance of the delivery year, at the RPM clearing price, those companies essentially were made whole.
And those transactions took place when?
Oh, I don't have the date, but I'm sure we could get it for you.
Yeah, just like directionally, before this year, before that year, before that delivery.
It would have
year.
been prior to, well prior to June 1st of 2022, because you have to have a compliant plan and you have to have, all of the auction mechanisms have to occur, right? And so if you're not selling those megawatts in the BRA, your excess megawatts you're selling to Kentucky Power, that has to be known.
Yeah, I guess do you know whether that decision was made prior to the BRA for that delivery year, or prior to the BRA for that delivery year, or subsequent to the BRA for that delivery year?
I don't remember when that auction actually occurred due to the weird schedules. It could have been either. I don't know.
I mean, would you agree, arguably, Kentucky Power could have also purchased that subsequent to the BRA in the incremental auctions? Capacity was available.
Kentucky Power couldn't have purchased out of it. We could have purchased our sale of RPM length out of the FRR plan that was sold in the BRA. We could have purchased it back in an incremental auction and instead used that capacity for Kentucky Power. Absolutely, that could have happened.
What are the prices in the IA relative to most BRAs?
They're generally lower. Like I said, I don't know that's what happened.
That's fine. Well, we're going to ask as a post hearing data request that sort of timing there real fast. But capacity in the capacity performance product in PJM does not have energy along with it, right? They're separate products.
Yeah, they're separate commodities.
Okay.
So
if you have a power plant that satisfies and is a capacity performance product that can produce energy, you can use that to participate and satisfy your needs in PJM, but it can also separately produce energy for you, correct?
can you state that again? Are you asking that
If you own a power plant, you can run it to produce energy.
If you have entitlement to both commodities, capacity and energy, you can certainly have the option to produce energy if it's economic.
Yeah, and I was even going simpler. Forget entitlement or property rights. I just mean if you own a power plant, just basic, you own a power plant, it can produce energy. Yes, you're entitled to it. It can satisfy your capacity obligation and produce energy for you, right?
That's correct.
Okay. And the type of capacity that PJM or that Kentucky Power purchased from that affiliate or affiliates within the AEP East group was just CP capacity that had no associated energy production with it, correct?
Correct. They purchased UCAP megawatts from the other affiliates, and again, it goes back to what the company had planned in its 2019 IRP. We carried that through. So the energy purchased UCAP megawatts to replace the UPA in the back half of 22-23, and we relied on spot market energy. And looking at, I've done some comparison of that since, and even including December of 2022, I believe Kentucky Power saved its customers about $60 million by sourcing its capacity and energy that way compared to through the UPA. So even when looking back and even including Elliott, it's been the more economic decision for customers.
Did Kentucky Power have to buy capacity starting, let's call it December 9th? Starting December 9th, was that capacity technically for December 9th through the end of the delivery year, or was it effectively the entire year net need absent the Rockport UPA since it's a single year product?
I think the way we settled it was just the back half. It was literally just from its requirement when it lost entitlement. So it was essentially long in the first half of the delivery year and short in the back half. They didn't have to buy the whole delivery year.
Okay. How would that compare to, and this is what I'm really trying to get to with the PPA, what you all have put out and hopefully get responses for. how, you said you compared it sort of back of the napkin after the fact to whether you would have kept the UPA and continued it. What about had you all just gotten capacity that had associated energy with it or energy production with it to replace the Rockport UPA?
Based on the power prices we've observed this year, even including December of 2022, when I was looking at the cost of the capacity that Kentucky Power used to replace Rockport and those energy values, in my experience in all of our jurisdictions in the East in PJM, I have not seen a asset bid to us in either a power purchase agreement or a sale that would be more economic than what Kentucky Power's done.
Yeah, but when would that contract have started? When you're talking about it, sort of backwards looking.
It could have been last year. It could have been in 2027. We received a great deal of bids and a great deal of RFPs across all of our companies.
No, I guess when would you have sought those?
Sought what?
Okay, so you have prices, like let's just take your AEV4 for a second, right? You have prices by month out or across 3 months as indicated by the bids in July, August, September, October, right?
Mm-hmm.
So that would have been looking in July, August, September, October, that's what those prices were. I'm asking what would have been as a result of the 2019 IRP, what would have been the opportunity to enter into a firm PPA to replace the Rockport UPA?
But you're saying had we not chosen the strategy we did out of the 2019 IRP, and rather after the conclusion of that, sometime in 2020 or 2021, issued an RFP for energy and capacity from a PPA from any source, would I have expected that to be lower or higher than what we actually did?
Yeah, like a 287 megawatt PPA that had capacity and energy production with it.
I have seen nothing that would be cheaper than what we've realized for Kentucky Power since then. In my experience in bids in all of our affiliates over that exact time frame, we haven't received anything.
So even in your previous job, you would have seen the bids come in from 2020, 2021.
So I've been doing, I kind of moved, my last position was kind of a mix. I was still doing retail pricing, cost of service work for some rate cases, and doing the new generation rate cases, including being involved in those RFP processes and evaluations. And then it all blends together. Sometime in 2022, I moved to this position where I no longer had the retail pricing teams under my purview. Now it's just focused on energy supply and new generation resource acquisition, but there's some overlap there. So I've been involved in, from a regulatory standpoint, all of our RFPs in the PJM companies, 2021 forward.
Do you have any personal knowledge of whether or not Kentucky Power is consciously disinterested in owning generation?
Can you say that again?
Yeah, do you have any personal knowledge of whether or not Kentucky Power is consciously disinterested in owning generation?
No, they're not disinterested in owning generation. I mean, in the conversations I've been in with Ms. Wiseman and Mr. West, it's exactly what they said here earlier this week. It's a matter of capital prioritization and doing what capital prioritization, and as they mentioned, you can't get a PPA to do distribution work, right? So they have to make investment with Mr. Blankenship and Mr. Phillips. They can't get a PPA for transmission. This is one area where they're prioritizing their capital, where they have an opportunity to receive a contract, a PPA, not have to invest capital in that. So I don't think it's a disinterest on their part. It's a matter of being mindful of what customers can afford and mindful of how they prioritize their capital.
Do you know whether it's Kentucky Power's intention as a result of the RFP process to have merely contracted for just capacity, or capacity that has available energy production.
I don't remember offhand if this RFP included the option to just bid capacity. You were able to bid storage, which is generally a non-energy, it's not an energy production asset, right? Storage is capacity. But I think generally speaking, it's energy and capacity products that are being evaluated.
If Kentucky Power had access to enough energy producing generation to cover the entirety of its expected demand, does that reduce the benefit or value? We're coming full circle here, Mr. Vaughn. Reduce the energy or the benefit or value of the company's proposed hedging program?
Well, I would say that they do have access to enough generation to cover all of their load at all times, as has been evident. What it would do, I don't know if it reduces the value of the hedging program, but it's going to reduce the amount of financial hedges that one would take on. You could still have, right, you have maintenance cycles, planned outages, you could still end up with financial hedge transactions to cover outages or short periods. I would just expect it to be lower volume of hedges.
Does the company have contract for capacity that entitles the company to the energy produced by all of that capacity?
Can you repeat your question?
Does the company have contracts for capacity that entitles it to the energy provided by that capacity?
For what? I mean, you're just
All of it.
relative to what figure, I guess.
Okay, so Kentucky Power has to make up a portion of the FRR load obligation, correct?
You're just speaking capacity here.
Just
Yes.
Okay. That's a 5 CP summer product.
Yes, sir.
That's one thing. The second is Kentucky Power separately has a native peak demand. Agreed?
Yeah, it has an hourly load obligation. Absolutely.
And so Kentucky Power has a peak, and that might be a coincident peak with PJM, but it might also be a non-coincident peak. Agreed?
It's a peak.
It's a binary, yeah. But it could or could not correlate, I guess is what I'm asking, with that 5 CP obligation under the FRR plan.
Yeah, absolutely.
Okay. Separately, Kentucky Power, through the FRR plan, has enough capacity allocated to it to meet its load obligation, right?
I don't know if it's allocated to it, but the company has secured adequate capacity to meet all of its FRR obligations. Yes.
Okay. Is Kentucky Power entitled to all of the energy produced by that generation which makes up that portion of Kentucky Power's load obligation?
No, Kentucky Power has energy entitlements to the capacity related to Mitchell and Big Sandy. Like we said earlier, the UCAP purchases that it made to fulfill its FR obligation is just the UCAP commodity. We are sourcing our energy needs for the balance of our energy needs not supplied by Mitchell or Big Sandy from the PJM spot market.
Okay. Is historically Kentucky Power's peak coincident with any of the 5 CPs, Kentucky Power's 5 CPs for PJM?
You're saying Kentucky Power's like 1 CP, its system peak? Does it correlate with the 5 CPs?
The five summer CPs.
I don't know. Kentucky Power's been around for a long time if they've ever had a summer peak, but generally speaking, they are a winter peaking company. And so that generally is going to occur on a cold winter morning with a lot of electric heat going on.
So I guess what I'm asking here is Kentucky Power's system peak plus let's just call it a 10% buffer or 9.5% buffer, right? So system peak plus
A reserve margin?
9.5%. We'll call it a reserve margin, but
Okay.
I'm just making up a number. It has nothing to do with reliability. We'll just call it 10%. Okay, 10%. So system peak plus 10%. Is that more or less generally than the CP obligation it has under the FRR plan?
It's more, but it doesn't mean that we don't have access to energy to cover it.
Okay. Is there a distinction between access to energy and entitlement to energy?
You could split hairs and say there is, but you could also say we're, as a member of PJM, we are entitled to access to those energy markets that we source our energy from, that cover our peak needs.
You own a generator. Do you have the option to self-supply as opposed to offer in energy production?
Can you distinguish between self-supply and offer, because you must offer?
Yeah, self-schedule, technically self-scheduling the unit as opposed to offering in the entirety of energy in the day-ahead market.
Yeah, absolutely you can.
Okay.
But you're also doing that in an economic, you're not doing that in a vacuum, you're doing that in a matter of economics, or you're doing it because if you're self-scheduling, you may have some need to run that unit that day for testing or something else, but generally speaking, you're doing what's most economic for your customers.
Do you know who would be the person that could tell me when Kentucky Power formally made the decision not to renew the Rockport UPA? Or that they knew they weren't going to renew the Rockport UPA?
I don't know, honestly, who would be that person. I mean, we could probably get you that, but I mean, it would have been under the previous president of Kentucky Power.
Okay. It would have been at some point during President Madison.
It would have been sometime during that time frame, I believe, yes.
Okay. Because, I mean, as far back as the 2017 rate case, when the deferral of the Rockport costs were in there, that order and agreement specifically talks about if the Rockport UPA is not renewed, blah, blah, blah. It was a possibility even back envisioned in that case, right?
It was a possibility, but, having lived through that one myself, it was definitely the assumption was that the Rockport UPA was going to end. And, the testimony in that case was we are bringing forward the savings that customers would see at the end of the Rockport UPA because there were, market options were cheaper, which is why we did the deferral to pull forward some of those cost savings benefits. And that's exactly what we've observed when I said, we're $60 million in reduced cost from an energy supply standpoint to our customers post Rockport UPA.
Yeah, I'm just curious about that analysis you said you did. Did that assume that the Rockport UPA was renewed in its entirety? Just signed it up for it again?
Yes.
Not for the amount that Kentucky Power would have actually needed from the Rockport UPA?
You mean like the amount of megawatts that we've been producing?
The Rockport UPA made Kentucky Power significantly long, yes?
It was, long to a summer peak, correct?
Long to the
5 CP
all the
obligation.
planning that you guys are doing to the 5 CP PJM requirements, right?
Yes.
So that analysis you're doing when you're saying that it would have been $60 million negative, does that assume that the Rockport UPA was renewed at its entire megawatts or at the amount that Kentucky Power would have actually needed to satisfy the FR load obligation?
It would be more expensive either way, but what I did is just said, well, I don't have the 2022 UPA costs on the books now. You take those off and replace it with what we have replaced it with, and it's been, from a dollar standpoint, it's been $60 million cheaper, but if you unitize it, it will be cheaper still.
But you're also comparing two different megawatt amounts.
And I'm telling you, if you compared the same megawatt amounts, you'd have a smaller benefit, but still a benefit.
I just want to make sure,
Yes.
it's your testimony that you've done the analysis. I just want to make sure that I get that you're comparing two different megawatt amounts.
2022 UPA costs, so yes, a different amount of megawatts.
Okay. And is that the actual cost paid, or did that also include the equity kicker is what I call it.
The capacity charge?
Yeah.
No, it did not include the capacity charge, just UPA costs.
All right. Thank you, Mr. Vaughn. Mr. Gish, do you have any redirect on the confidential record related to my questions on the RFP responses?
No, sir.
Okay. All right. So we will take a short recess. We'll go ahead and take our morning recess. We'll go ahead and take 10, 15 minutes. We'll call it 15 minutes. We'll come back
Sure.
at 10:50. I'll let you conduct your redirect of the minutes.
Yeah, sounds great.
All right. Being recess. Okay, we're back on the record. Mr. Vaughn, just one last question. I want to ask you about this Kentucky Power here, Exhibit 1, that you created Tuesday night. This is you just took the all-in cost on the annual report statistics for these utilities, including you all for the last, let's call it 10 years, divided by the kilowatt hour sales.
Yeah, it shows on those reports, residential, commercial, industrial, other, and total. And so if you take the total of all of those rate classes and divide it out, that's your total cost structure, as you guys were discussing on Tuesday, your average all-in rate.
Okay. And then, so the Kentucky Power all-in rate has gone from 6.39 cents per kilowatt hour to 12.63. Is that what that reflects?
From 2013 to 22, that is correct.
Okay.
I will point out that all of the, there is a progression in all of the,
They're all going up.
they're all going up.
Yeah,
correct.
no
It's
need-
not
that's
Kentucky Power in a vacuum there.
perfectly accurate. Big Sandy's is going from 10 cents and change to 13 cents and change. Is that right?
Yes, correct.
Yeah. I think they've,
So yeah, we were 44% lower than them back then
yeah.
versus 7% now.
So the rates are coming to parity, is that accurate?
They're changing over time. I mean, a big part of Kentucky Power's costs, I don't know what, I think these co-ops are supplied by EKPC from a G&T standpoint, so I don't have as good of a handle on their generation costs. But when you look at, Kentucky Power starting at that 2013, you didn't have the impacts of the AEP pool ending and MATS regulations, where you had to scrub all of your coal generation at that point. So there's a large amount of environmental investments. You still had.
Well, Kentucky Power didn't make those environmental investments, right? They retired the plant and bought Mitchell instead.
That had the cost of environmental investments in it. Yes.
Yeah, it was fully compliant when they bought it, but that's the.
Yes.
And that's different than the questions I was asking. These are different numbers. These are total cost numbers, all in kilowatt hour. It's different than the amounts that I was asking Mr. West and Ms. Wiseman, which were the residential, where the average residential bill for Big Sandy is $160.10 in 2022, and that Kentucky Power's is $198.54. That's different.
It is different, but the point we wanted to make is that that's a function of rate making and cost allocation. And
Yep.
the company's rates in total are lower. It's that these providers have made the decision to prioritize lower residential rates over their commercial industrial customers. Now, you could reconfigure the company's rates so that their residential rates are lower by definition, but you will be harming the rates of the other. You'll be raising the rates of the commercial industrial customers to do that.
Do you know that Big Sandy, Grayson, and Licking are also regulated by the PSC?
Yes.
Okay, so those rates are set by this commission.
Yes, that's my
Okay.
point.
Okay.
Yes.
Yeah. So we could raise their residential rates, lower their residential rates relative to the other classes. Same with Kentucky Power.
You certainly could, and I'm sure there's parties that have an interest in that happening or not happening.
And just to make sure I'm clear, this doesn't include any riders, this is just rates.
No, that's all revenues. It includes all riders, all revenues, all usage. So it's total cost.
Mr. Gish?
Yes. I don't have any redirect questions for Mr. Vaughn. I do want to point, there were some questions about when the commission was informed that the Rockport UPA would not be extended. And that was made in the application by the company in case 2021-00004, the Mitchell ELG and CCR case. And so that's when the decision was made. So
So, yeah, I
just want to clarify that.
Yeah, I think I know when the commission was told,
Yeah.
but that wasn't the question that I asked Mr. Vaughn. I asked if there was a witness that could indicate when the decision was made by Kentucky Power. I think that's distinct from when
Understood.
we were informed about when the Kentucky Power made the decision. So
Understood,
that's the question, and I was asking, not specifically when the decision was made, but the subsequent one that Mr. Vaughn couldn't indicate was another witness that might actually know when the decision was made. I think that's when he indicated that Mr. Madison would have been the president, COO of Kentucky Power at the time.
That's correct.
All right, so we'll ask as a post-hearing data request, if Kentucky Power has anybody that has firsthand knowledge that they can speak to the fact when the decision was made at Kentucky Power.
Absolutely.
All right. Thank you, Mr. Vaughn.
Request that Mr. Vaughn be excused.
Mr. Vaughn may be excused from the remainder of the hearing.
Thank you, Your Honor.
Mr. Garcia?
Thank you, Honor. Make sure that you can hear me. The company calls Adrian McKenzie.
Please raise your right hand. Do you swear or affirm that the testimony you're about to give is true and correct under penalty of perjury?
Yes, I do.
Please have a seat. Please state your name and business address for the record.
My name is Adrian McKenzie. My business address is 3907 Red River Street, Austin, Texas, 78751.
Okay. Mr. Garcia?
Thank you, Honor. Mr. McKenzie, by whom are you employed and in what capacity?
I'm employed by the firm of Financial Concepts and Applications, Inc., and I'm the president of that firm.
Did you cause in this proceeding direct testimony, rebuttal testimony, and discover responses to be entered into the record?
Yes, I did.
And were those prepared by you or under your supervision?
Yes, they were.
Let me ask you about your rebuttal testimony specifically. Do you have any corrections or amendments to the testimony?
Yes, I have a correction to one sentence in that testimony. And that's
Any-
on
In what page that?
Page 9, and the corrections are on line 2.
What's the
So-
correction?
After BBB, I would insert by S&P, strike the word and insert or declined to, and then keep BAA3, and after BAA3, insert by Moody's. So the sentence would read, meanwhile, Kentucky Power's credit ratings have remained stable at BBBB by S&P or declined to BAA3 by Moody's.
Thank you. And with that correction, if I were to ask you the same questions in your direct rebuttal or discovery responses, would your answers be substantially the same?
Yes, they would be.
Do you adopt these as your evidence in this case?
Yes, I do.
Your Honor, the witness is standard for cross-examination.
Counsel?
Good morning, Ms. McKenzie. Just a quick question on your testimony on page 4. You state that Kentucky Power's requested ROE represents a reasonable compromise between balancing the impact on customers and the need to provide the company with a return that is adequate to compensate investors. Can you tell me how you feel the 10.6% increase is reasonable to the customers?
Yes, well, the 10.6% is supported by my evidence, which is based on my analysis of capital market conditions. So I think fairness is not an abstract concept. I think as it relates to the standards underlying a fair outcome in a rate case, the ROE should reflect the cost, and the cost is determined in the capital markets. So to the extent that the commission approves an ROE that reflects those costs, that should be fair to both the customer and the company.
Who, I guess, is having a greater impact on it with the 10.6? The investors or the end users, the customers?
Well, the customers have no impact on the 10.6. I mean, the cost of capital is
But
determined.
increasing their rates has an impact on the customer.
Sure, just like passing through higher costs of fuel would have an impact, or passing through a lower cost of fuel. But the price of that capital is not determined by investors, it's determined in the capital markets. And that's what drives the need to reflect that cost in the rates.
Would you agree that investors have a more positive impact with the 10.6 ROE
No, I wouldn't agree, well, more positive than what, I guess?
than the end users who are getting the rate increase?
No, I don't agree with that. I think,
Why?
because, again, as far as my analysis indicates, that is the cost of the capital. So investors are paying what's demanded in the capital markets based on opportunity costs that investors can receive in other investments. So just like, again, the cost of fuel, it's a price that's set outside the control of the company in a competitive capital market. And so allowing the company to recover that cost doesn't harm customers any more than it benefits investors. It's a balancing.
Okay, thank you.
Mr. McKenzie, I think I've asked you questions on cross-examination before. Do you remember, generally not the questions I asked, but the fact that I have asked questions?
Yes,
Okay.
not in person for
Yeah, I
quite some
think
time.
It's been a while. I'm going to ask you probably the same question I've asked you in the majority of the cases. You would agree, wouldn't you, that your proposal or that your studies are consistent with the standards set forth in Hope and Bluefield?
Well, the Hope and Bluefield cases don't establish any standards for the studies. So what they do establish is a standard for the end result. And I would consider the end result of my analysis to be reasonable.
Oh, okay. So you're saying that Hope and Bluefield do not set forth the parameters by which the proposal has to be compared to?
They don't set forth any guidelines with respect to the method upon which you get to the end result, which is then reasonable or unreasonable based on all the pertinent facts. But
Have you read Bluefield?
yes,
Okay. You would agree Bluefield, we colloquially refer to it as Bluefield, but in your testimony you talk about how Bluefield is the Bluefield Waterworks and Improvement Company versus Public Service Commission of West Virginia?
yes,
Okay. It's a 1920s case, is that right?
yes.
Okay. There's a portion of the Bluefield order that states, this is on page 692 of the reporter, the public utility is entitled to such rates as will permit it to earn a return on the value of the property which it employs for the convenience of the public, equal to that generally being made at the same time and in the same general part of the country on investments and other business undertakings which are attended by corresponding risks and uncertainties. Does that sound familiar to you?
Yes.
How does your proposal in this case, or even the 9.75 or 9.65, compare to investments that are taking place in the same general part of the country as Kentucky Power resides?
Well, I mean, I think we could look to the Duke example for one guidepost. I mean, I think as I explain in my rebuttal testimony, the ROE allowed for Kentucky Power should be higher than the 975 given to Duke based on its relative risks, the differences in capital structure, bond ratings, those considerations, and the fact that capital costs have increased both since the time the most recent analysis was filed in the Duke case and since the hearings in that case took place. So all of those factors point to a higher ROE in this case than for Duke. So that's certainly a benchmark that's based specifically on geography. I think in general, as time has moved on, I mean, as you mentioned, that's a case from the 20s. We recognize that capital markets are not regional, they're international. And so the cost of money and the opportunities that investors have extend far beyond the geographic boundaries of one state or even the United States. I mean, capital markets are affected by what goes on around the world. So that notion of restricting the opportunity cost concept to something to a local geography has basically fallen by the wayside.
I want to make sure I have an appreciation for that. Because 100 years have passed, you read out that portion of the standard set forth in Bluefield?
No, I'm not saying that. I think in general how that statute is applied, and again, I'm not a lawyer, so I'm not speaking as a legal scholar on constitutional law, but how that standard has been applied generally before regulatory commissions, we recognize that the cost of equity is based on a broader set of factors than just what's happening in a single state.
Did you compare the result of your studies to those returns earned by any firms within the Kentucky Power Territory?
No.
Directionally, would you agree that of the last, let's call it 15 years, but 10 years probably, that out of the last 100 years, that returns on equity for utility companies have been at all-time lows? Authorized return on equity, sorry, I want to be clear.
If we're talking about the last decade, yes. I mean, basically, if we look at allowed returns, they've trended down gradually since after the financial crisis in 2008, 2009, as have bond yields, for example. So it took 10 years for the Treasury bond to decline from about 4.6% to about 2.1% in February of.
Based on your expert opinion over the next 20 years, would you say it's more likely or less likely that ROEs are authorized by state commissions in excess of 10%?
Well, I couldn't possibly make a prediction for the next 2 decades. I think it was 2 decades.
Pick a time period. Do you think that ROEs are going up or down from here?
Up.
Okay, thank you. Would it be reasonable, start that. Thank you, Mr. McKenzie. Mr. Garcia, can you redirect?
Just a second, Your Honor. Thank you, Your Honor. Mr. McKenzie, let me start here. Based on your analysis and in your opinion, is there any reason why Kentucky Power's ROE, authorized ROE, so not the one that it actually earns, but the one that is authorized in its rates, should be set at a lower level than Duke, Kentucky?
No, I think as I indicated earlier, Kentucky Power's risks are higher. Its bond ratings are lower. Its capital structure has a greater degree of debt leverage, which again means greater risk. And interest rates have increased since the time that the 9.75 was found to be reasonable for Duke. So in my view, the numbers for Kentucky Power should be higher than for Duke.
And in the application, as you may recall, Kentucky Power requested a 9.9 authorized ROE. Is that your recollection?
Yes.
It's your understanding that that 9.9 represents a reasonable compromise between balancing the impact on customers and the needs to provide the company with a return that is adequate to attract investment?
Yes, that was my testimony in my direct. I mean, the 9.9 falls within the range of the results produced by my methods, but it's certainly at the very low end of what I would consider to be a reasonable return.
Is that true also for the ROE that it's proposed in the settlement of 975?
Yes, it is true. And again, I mean, I think, you know, we've talked about bond yields declining gradually and allowed ROEs declining gradually, but that's not the circumstance we're seeing here. We've seen a dramatic increase in bond yields. So bond yields have, if you look at the 30-year Treasury yield, it's doubled in less than 2 years. It took 10 years for the Treasury yield to decline by 50%. The last time the BBB bond yield utility yield was at present levels, the average allowed ROE was about 10.8%.
And at the risk of stating the obvious, but those bond yields and capital markets extend far beyond the service territory of Kentucky Power. Is that correct?
Yes, they certainly do. I mean, AEP does not raise money in a geographically limited capital market.
And Kentucky Power, it's required to raise capital within that national capital market?
That's correct. And regardless of where the capital is raised, within the concepts of the Hope and Bluefield standards, the underlying requirement is opportunity cost. So investors can go well beyond Kentucky in order to invest, and that's what drives their opportunity cost, which is the basis of the fair ROE.
Thank you. I don't know. Further questions?
Yeah, I just have one follow-up.
Sure.
Again, the standard, you talk about opportunity cost. Would you agree that Bluefield specifically bounded opportunity cost by time and geography?
Your Honor, if I may, the witness has indicated that he's not a lawyer.
I'm not asking for a legal opinion. The basis for his testimony and the sufficiency of his presentation is based off of, per his own testimony, the standard set forth in Hope and Bluefield. We cannot use his non-attorney status as a shield from asking questions about that assertion.
Just clarifying that it's not a legal interpretation. Thank you.
Would you agree that the opportunity cost you were just referencing, Mr. McKenzie, is bounded by both time and geography in the Bluefield case?
Well, I think time certainly is a factor in the sense that Bluefield definitely recognizes that capital markets aren't static and that when changes happen in the money markets, that should be reflected in the cost of equity. It recognizes that when cost of capital in the markets increase, the ROE should increase. In terms of your reference to geography, again, with respect to a legal opinion, I don't have one. But what I can tell you is, from an economic standpoint, it makes no sense to limit the notion of opportunity cost to a narrow geographic boundary based on a state or a particular set of states when establishing a fair ROE.
Let me ask you this. When you say that Bluefield sets an opportunity standard, an opportunity cost standard, that's what you said earlier, right?
Right.
Okay. Would you agree that the language I'm about to read to you is what you're referring to? The portion about that the return on investments and other business undertakings which are attended by corresponding risks and uncertainties.
That's what it says, but
Okay.
I think the other thing that you should recognize too is if you go to Hope, which was a more recent case, the court said the return to the equity owner should be commensurate with returns on investments in other enterprises having corresponding risks. There's no mention of geography.
I just want to make sure that when I'm talking about Bluefield here, that you're aware that the previous part of the sentence that leads into the opportunity part you were just referring to is specifically bound by time and geography. Wouldn't you agree?
Let's talk about the time. Can you repeat the passage? I just want to make sure.
Sure. Okay. A public utility is entitled to such rates as will permit it to earn a return on the value of the property which it employs for the convenience of the public equal to that generally being made at the same time and in the same general part of the country on investments and other business undertakings which are attended by corresponding risks and uncertainties.
Yeah, I agree with you.
Okay, thank you. Mr. Garcia?
Just one, Your Honor,
As
if I
many as
may.
you would like.
Thank you. In that reference to general part of the country, how do you understand that within the concept of capital markets? From the language that was just read?
Well, at the time the Bluefield case came out, there were no market-based methods used to estimate the cost of equity. They were driven by comparable earnings, which were focused on earned returns, principally historic earned returns of companies. And so at that point, there was no real basis upon which to look to a national capital market like the New York Stock Exchange. There was no DCF model, there was no CAPM model, there was no underlying framework to estimate the cost of equity the way we do it now. So maybe back in the 20s, reference to earned returns for utility companies in the same general part of the country had more relevance.
Yeah, and just one last question, Mr. McKenzie. Are you aware, with the evidence in this case, if there is any indication other than what you have indicated in your testimony of what are the required returns in the general part of the country that would be applicable to Kentucky Power?
Well, I haven't done a study of allowed returns for utilities in this particular geographic area. I mean, again, I think the basis upon which we would set the ROE wouldn't be different for Kentucky Power than it would be for any other regional utility, and it is bound by time in the sense that we're considering contemporaneous data now. And if you look at allowed ROEs generally, they've been trending up, and they're about equal to the settlement position in this case.
Yeah, and the evidence that you indicated about the Duke recent case, it's certainly in Kentucky. It's
Yeah, I mean, that's the most direct evidence I could imagine that's based on a geographical restriction.
Thank you, Your Honor. Further?
Nothing else, Mr. Garcia?
Nothing else.
All
Your
right,
Honor.
I'm always going to give you an opportunity.
Thank
Anything,
you.
counsel? Is there any reason that Mr. McKenzie can't be excused?
No, sir.
All right, thank you, Mr. McKenzie.
Thank you.
Thank you, Your Honor.
Mr. Gish?
Yes, sir. A company would recall Mr. Tim Kearns to the stand.
Mr. Kearns, please have a seat. You're still under oath. You're generally aware of the written consent action of the Mitchell Operating Agreement because you informed me about it yesterday, right?
Yes, that's correct.
And as I understood from your testimony yesterday, and it was a general testimony, you weren't necessarily referencing portions of the agreement, but that the idea is that all capital put into Mitchell that is expected to last after 2028 is allocated in cost to Kentucky Power based off of what proportion of that loss of service is reflected between the time it goes into service and December 31st, 2028, correct? For capital.
Yeah, the only caveat I'd say it's when that capital expenditure is incurred, not necessarily when that project goes into service. So, but
What's
So-
that, what is that distinction? Maybe it's an accounting distinction, but what are you trying to distinguish between there?
that the costs that flow through to Kentucky Power are on a monthly basis. And so you may have a project that spans several months, so the January expenses or the capital expenditures will be a little bit more than the expenses for that same project that flowed through in February and March.
Okay.
It's based on the expenditure itself, not the project designation.
Okay.
But aside from that, I agree with your assessment.
Prior to the written consent action of the Mitchell operating agreement entered into September 1, 2022, was it your opinion that Kentucky Power was going to cease any interaction with Mitchell after December 31st, 2028?
Yes,
Why is that?
because of this commission's order to not invest in the equipment that would comply with the ELG rules, which non-compliance, or if you chose not to bring your unit into compliance, then it could not operate past December 31st, 2028.
Can Mitchell operate after December 31st, 2028?
Is your question, can Mitchell operate? Are you talking physically or?
Okay, let me be more artful. Pursuant to the EPA's ELG rules, is Mitchell allowed to operate after December 31st, 2028?
Yes.
Are you generally aware of the Commission's order in 2021-00004 denying a certificate of public convenience and necessity for the capital projects necessary to come into compliance with the ELG rule for the Mitchell plan?
Yes, I'm generally aware.
And would you agree, as a general matter, that the Commission denied the request, or was it your understanding that the Commission had denied the request on the basis that Kentucky Power failed to meet its burden of proof as to the standard for a CPCN as it relates to the ELG rule?
I'm sorry, I don't understand that. I just know that this,
It's a fair question. The order says what it says. I'm just curious on if you had a memory as to the exact reason stated in the order.
no.
You don't?
I don't.
West Virginia, the commission there, after the commission here said that, let's just say at face value, that the commission's order said that Kentucky Power did not meet its burden of proof as to the need or the absence of wasteful duplication with regard to that CPCN. Subsequent to that decision, whatever commission's order here said, the West Virginia Commission, however, did give a certificate to to Wheeling Power to comply with ELG, correct?
Yes, that's correct.
And then subsequent to that date, based off of the request of Wheeling Power, the West Virginia Commission said that, and I'm paraphrasing here, but basically you can go ahead and do it even if the Kentucky Commission did not give Kentucky Power a CPCN. Is that generally your understanding?
Yes, that's my understanding.
Okay. You all, Kentucky Power owns an undivided half interest in Mitchell. Is that your understanding?
Yes,
That was purchased, let's call it about 10 years ago. Is that right?
okay, yes.
assuming no additional environmental compliance obligations, that the EPA just, I don't know, takes a vacation for the next couple of years. Okay. In December the 31st, 2028, what is your understanding of Kentucky Power's position as it relates to the Mitchell Power Plant?
My understanding is that Kentucky Power will have no interest and not be entitled to any of the capacity or the generation from the Mitchell Power Plant.
And what forms that basis?
My general understanding of the Wheeling, of the West Virginia Commission's order that they would approve the upgrades or the equipment installation necessary to be compliant that would allow the unit to operate beyond December 31st of 2028. And this commission's decision or order that you wouldn't.
Okay, so let's be clear about that, though. The commission denied a CPCN to make environmental upgrades, right? This commission.
That's my understanding.
And so I just want to make sure I have an appreciation. It's your position, your understanding, and I know you're not an attorney, I'm not asking you to be an attorney, but it's your understanding that denial of that single CPCN, the environmental upgrades being made anyways by West Virginia, and the West Virginia orders according to that, it forms your basis that Kentucky Power has no longer will have interest in a power plant that they own an undivided half interest in starting January 1st, 2029. Is that accurate?
That's my understanding based on my position as someone responsible for operating and maintaining the plant,
Yeah.
not providing legal guidance or accounting guidance or regulatory guidance. Just this plant, from my perspective, will be able to continue to operate, and that Wheeling Power will have 100% interest in the plant after January, or on January 1st, 2029.
And just to be clear, that just so that we fully flesh all this out, because they made a single environmental upgrade.
They made the upgrades necessary to comply with the environmental limitations guidelines rule from the US EPA, yes.
Yeah. So now they get the whole power plant. Is that right?
I'm sorry?
They get the whole power plant January 1, 2029.
That's my understanding.
I'm gonna let you finish your answer. I'm not trying to be critical in these questions. I'm genuinely trying to get to the bottom of what has been stacked up to form your opinion, so I can have an appreciation for what the record says and what your opinion is.
Sure.
So
And
is
yes,
that
that's
the
my-
basis for your understanding?
Yes.
Let me ask this question. Was that your understanding prior to this written consent action regarding all other investments made in Mitchell and how they interact with that December 31, 2028 date?
I'm not sure I understand the
Okay,
question.
so the written consent action resolved a number of items as it relates to all other investments made between now and December 31st, 2028, and how those are allocated amongst the two owners, correct?
Correct.
Okay. Prior to this written consent action, would you agree that there was, did you have a full understanding of what the resolution to these outstanding issues were going to be come January 1, 2029?
No.
Were those resolutions, in your understanding, were they previously, was there, stretch that. Is it your understanding that those unresolved issues that we were just referring to had been previously attempted to be resolved through amendments to the Mitchell operating agreement?
What I recall is that we approached this commission and the West Virginia Commission with new versions of agreements for the Mitchell plant. There was an operating, or an ownership agreement, I'm sorry, and an operations and maintenance agreement. And the outcome of those hearings was materially different. The commission suggested two things that were materially different, that we couldn't resolve those issues in those documents. And so the operating committee, Mr. Madison and Mr. Beam at the time, said, we'll continue to operate under this, and let's work through these issues within the power of the operating agreement and us as the committee members. And that's how the resolutions came about.
Yeah, I guess that's what I'm really asking, just to rephrase it. This resolved the issues that you all attempted to resolve by bringing amended agreements to this commission, the West Virginia
That's
Commission.
correct. That's correct.
Are you ultimately in charge of running the Mitchell facility as either today or also on January 1st, again, all else, assuming today is constant, but on January 1st, 2029?
I'm not sure I understand the question. Am I only responsible?
Are you in charge of the Mitchell power plant?
Yes.
Okay. Was this agreement, were you present when this agreement was negotiated?
I'm sorry, Your Honor, which agreement are you referring to?
Well, the thing that's an agreement but called something different.
I'm sorry, the consent
The
action?
written consent
under
action, the
Under
resolution.
the operating agreement?
The written consent action of the Mitchell operating agreement,
Thank you.
the operating committee. Were you present when that agreement was signed or when negotiated?
I'm sorry, Your Honor, just for clarity of the record, it's not an agreement. It's a consent action under
Yeah,
the.
we can
Mitchell
call it whatever
operating
we want.
agreement.
This document,
Yes, I was present for the meetings, the operating committee meetings that led up to it, where it was discussed and potential resolutions back and forth, and then the meeting where both of the presidents and COOs were there and they agreed to it,
Okay.
and then it was circulated electronically when they signed it.
we had a conversation yesterday, and you indicated to me who the members of the operating committee were. Do you remember that?
I did.
During any of those discussions, were there any representatives from Liberty?
No.
Did you have any conversations regarding this document with anyone from Liberty?
No.
And did you hear anyone during those conversations discuss the pending sale or the interaction of this document as it relates to the pending sale of Kentucky Power to Liberty?
No.
And when we talk about the primaries and the proxies or alternatives for the Mitchell Operating Committee, at the time that this was signed, that was Mr. Madison for Kentucky Power. Is that correct?
That's correct.
Do you know who the proxy was in September of 2022?
Witness West.
All right, and the last question, is just to round out some of your earlier answers, is it your understanding as a general matter, is it your understanding that the cost incurred by Kentucky Power related to the Mitchell Power Plant are being allocated or assigned to Kentucky Power pursuant to the Mitchell Operating Agreement and this document?
Yes.
for the record, when you say this document, you're talking about the consent
The
action.
thing we're, sure,
The consent action.
the written consent action of the Mitchell Operating Committee. Yes?
Yes.
Are there minutes kept at meetings of the Mitchell Operating Committee?
Yes.
Okay. And are those in the possession of you, Wheeling Power, or Kentucky Power?
Yes, all of the above.
Okay. So I'd like to get meeting minutes from the Mitchell Operating Committee going back until, let's call it January, no. August 1, 2020. Thank you very much, Mr. Kern. Thanks, and I apologize for having you stay another day, but I appreciate it. Mr. Gish, do you have any redirect, Mr. Kern?
I do, just one quick one to help clarify some things. You remember earlier, the chairman was asking questions about the Kentucky Power's understanding that its interest in Mitchell must terminate on December 31, 2028, is that correct?
Yes.
Okay, and you also referenced the case where the revised Mitchell ownership agreement was evaluated by the company, is that correct?
Mitchell
Yeah,
Yes.
Kern's case.
Yeah, in that order, I know you don't have this memorized, so, so there was a paragraph regarding a buyout provision in that revised ownership agreement. It says, based on a review of the case record and being otherwise sufficiently advised, the commission finds that the buyout provision contained in Article 9.6 of the revised ownership agreement and related provisions, including the unit swap dispute resolution provision in Article 12, and the buyout provision related definitions are not reasonable for the reasons discussed above, that establishing the structure of a future sale of Kentucky Power's interest is premature in light of the pending acquisition of Kentucky Power by Liberty, because the buyout terms were not negotiated as an arm's length transaction, as they would be if they were negotiated between non-affiliates, because the term for the future sale of the Kentucky Power's interest was not required by the commission in order to continue operating Mitchell, and because the buyout provision is based on assumptions regarding future circumstances that are likely to change closer to the December 31, 2028 date, when Kentucky Power's interest in Mitchell must terminate in accordance with the July 15, 2021 order in case number 2021-00004. Does that also inform Kentucky Power's decision that, or belief that it must terminate its interest in Mitchell by December 31, 2028?
So I can't speak for what informs the Kentucky Power decision, but that's what informs my understanding.
Understand.
And so, yes.
Okay, no further questions, Mr. Chairman.
Thank you, Mr. Kern. You may be excused.
Thank you.
Mr. Chairman, the company's next witness is Catherine Walsh. Company calls Catherine Walsh.
Raise your right hand. Do you swear or affirm that the testimony you're about to give is true and correct under penalty of perjury?
Yes, I do.
Please have a seat. State your name and address for the record.
My name is Catherine Walsh. My business address is 1 Riverside Plaza, Columbus, Ohio, 43215.
Mr. Gish?
Thank you, Mr. Chairman. Ms. Walsh, did you have direct testimony, responses to data requests, and settlement testimony filed in this case?
Yes, I did.
And do you have any corrections to that testimony?
No, I do not.
Okay. And if I were to ask you those same questions today, would you give the same responses?
Yes, I would.
Thank you. Mr. Chairman, Ms. Walsh is available for cross-examination.
Counsel.
Thank you. Ms. Walsh, if
I'm gonna ask some questions about the cost of service study, and if you are not the person to ask, I can pass them along, because I know there are other people who provided testimony on it, but I'd like to start with you.
Sure.
On them. As a post-hearing data request, we will be asking for the cost to be provided with all the Excel cells open. We found a few that are copy and paste in the allocator columns. I think column C, so if you all could resolve that, we will be asking for that.
Sure, and they, the information underlying those numbers may also be present in some of the work papers, but we could certainly help direct you to the correct work papers.
Okay, thank you. All right, for the first part of this, I will be referring to the response to staff's first request, item 16. It was attachment 2, an Excel sheet. And then if you go to that, well, I'll give you a minute. Let me know when you get there.
I'm not sure that I have,
I think I can share it. I think I have what I at least have some of it that I could share if you don't have it.
And we're working on getting that pulled up, and yeah, and that's staff. And just so we can avoid confusion, can you clarify what the request was again?
It was the response to PSC staff's first request, item 16, attachment 2.
Okay, great, thank you.
And I will go ahead and try to share my screen so that I can. Problem will be I can't see my questions, but I think I can remember them generally. So on,
Do you have them now, Ms. Walsh?
I'm sorry?
Do you have that document now?
I believe so.
Okay.
okay, that's good. Okay. So if you go to the allocators tab, and it's cell number T443. I think on the cost sheet, it's the construction work in progress allocating $1.8 million to outdoor lighting. And I'll give you a minute.
And to be clear, this looks like it's an Excel version of the class cost of service,
I think so.
right? Well, I could certainly help try to answer questions. Witness Jacqueline Cost.
I
Is the-
thought that might be the
Yeah.
case, but I thought I would start with you, and if you don't, we can ask her. We were curious, obviously, that is a large amount for outdoor lighting. Do you have any idea what that amount consists of?
Let's see here. You know, I'm not sure of the underlying information within this calculation.
Okay.
I guess the more pertinent question would be if this allocator is used in the class cost of service.
Okay.
Because, right, this is just an allocators tab, and while I would like to think all the allocators calculated or input into this tab are used in the class cost of service, excuse me, sometimes as costs change over time and go in and out of the class cost of service, there could be allocators that may no longer be used. So we may require some, some research into this to give you the exact information you need, which we could certainly provide.
Okay. Well, we will be asking for that, but that
Sure.
raises another question then. Is there some where in this document that indicates what cost allocators might not have been used?
No, I don't think that would be, information readily available without kind of digging through the class cost of service and looking at, so the tab that is labeled COSS and the column F that designates the allocation factor, there would have to be a review of all the different naming conventions for those factors and then where they reference on the allocation factors tab.
Okay. And so that's not provided anywhere in the information that you're aware of?
Not that I'm aware of. That could certainly be provided, post-hearing data request, an analysis of what allocators maybe were or were not used based on the underlying costs of this case.
So that same response and the same tab, if you look at account number 365, cell D579. It's the allocation, it's the distribution allocation for overhead lighting.
I'm sorry, what row
Lights.
was that again?
Lines, I'm sorry, not lighting, overhead lines. It was cell D579
Oh,
in account 365.
and you're on the allocators tab?
Yes.
D575, correct?
579, I'm
Oh,
sorry.
579, okay.
But, so if you follow that, and there's 82.56% of that cost is allocated to the customers.
That's right.
How did you all come up with that particular percentage?
So, again, witness cost would be the right person to speak to some of the underlying calculations and support for
Okay.
this. There are work papers that would support, and I'm sure we provided, related to, excuse me, the derivation of some of these allocation factors.
Okay, I will save the rest of my questions for Ms. Cost then.
All right, let's go into confidential session. Ms. Tessie, will you bring up that, it was the non-confidential portion of the document. I think the aggregate stuff is not
Correct.
confidential. Okay.
Be too careful.
Mr. Gish, yes. Do you have any redirect of witness Walsh?
No, I do not.
Okay. Is there any reason that we can't excuse Ms. Walsh? All right, thank you very much. All right. So, just want to make sure, real quick, we'll do some housekeeping stuff here, council. I have here that of the, well, okay, let's just go down the list before we go for lunch. We've heard from witnesses Wiseman West, Phillips Blankenship, Fetter, Schlatt, and Wolfram, Clark, Coburn, Kahn, Bishop, Kearns, Vaughn, Walsh, Cost, and McKenzie.
We've not heard from witness Cost yet.
We're about, sorry, yeah, I want to, sorry, yes. Everybody other than witness Cost, right? That's all right. I have excused all of those witnesses with the exception of witnesses Wiseman, West, Phillips, Kahn, and Bishop. Is that your all's understanding?
Yes, Your Honor.
All right, after lunch, we will come back with witness cost. I would do it now, but it's already 12:06, and I know that commission staff has questions for witness cost.
Honestly, instead of tediously going through and asking, we can ask her specific questions as a post-hearing data request, since we already are gonna have to ask about the allocations.
Okay.
So if that's okay with.
You have no other questions for witness cost?
No.
Do you have anything?
I don't.
As much as I'd love to get to a embedded class cost of service study, I'm fine letting witness cost be excused for the remainder of the hearing.
Thank you, Your Honor.
There's no objection. Mr. Kurtz, Mr. Cook, well, you all can't talk. You're not allowed to talk anyways. Sorry. So we will come back, Ms. Blend, with your witness, Spaeth.
Correct.
Am I saying that correctly?
You are, Your Honor.
Okay. All right, we will come back after lunch with witness Spaeth. We will come back at 5 after 1. We'll make sure. All right, we'll be in recess until 1:05. We're back on the record in case number 2023-00159. Mr. Kurtz?
Chairman, two procedural things. You said you may have cross for Baudino, depending on what McKenzie said, so quite wondering if you have made a decision on that.
Yeah, I did not mean to say, Mr. McKenzie. I meant, well,
It doesn't make any difference.
no, yeah, that's a good point. I don't think it was McKenzie, though. I was under the impression it was Burkholder. I may have misspoke. But we get to let's see what happens when we get to Mr. Burkholder.
Okay. Second point, the company has agreed, if it's okay with you, for Barron, OEG Whitney, KIUC.
Oh, yeah, I'm sorry.
Barron go after Whitney?
Yeah, I'm sorry. Let me interrupt you just for a second. I'm going to take a point to it. It's after lunch. You'll forgive me. My cross for Mr. Barron depends on my Mr. Burkholder.
Okay.
I have no. That was my fault. I wasn't even thinking, Mr. Baudino. I have no questions for Mr. Baudino. Does counsel have questions for Mr. Baudino?
No.
And you all have waived cross-examination, Mr. Baudino. Is that right, Ms. Blend, Ms. Glass, either one?
That's correct.
Okay, that'll be fine. We'll excuse Mr. Baudino from the remainder of the hearing.
Thank you, Chairman.
Okay. Now, with relation to Mr. Barron, you had a question about Mr. Barron, is that right?
Well, the company said he could go on after Whitney if it's okay, but I don't know if that's still.
Yeah, so I may not have questions for Mr. Barron based on my cross-examination of Mr. Burkholder, which is immediately following Mr. Whitney. So if we could hold Mr. Barron until after Mr. Burkholder, then I think I can make a decision as to whether or not I'll have questions for Mr. Barron, and he can be excused.
Thank you.
Okay, and Your Honor, I'll just note for the record that the company reserves the right to recall Mr. Burkholder based on the questioning of Mr. Barron if necessary.
That's your right. Your right to request. All right, Ms. Blend, your next witness? Oh, I'm sorry. Yes, we excused witness cost, right?
Correct.
So, Ms. Blend?
Thank you. The company calls Michael M. Spaeth.
Please raise your right hand. Do you swear or affirm the testimony you're about to give is true and correct under penalty of perjury?
I do.
All right, please have a seat. State your name and business address for the record.
My name is Michael M. Spaeth. My business address is 1 Riverside Plaza, Columbus, Ohio, 43215.
Ms. Blend?
Thank you. Good afternoon, Mr. Spaeth. By whom are you unemployed and in what capacity?
I'm a regulatory pricing and analysis manager, and I'm employed by AEP Service Corps.
Did you cause direct testimony and responses to data requests to be filed on the record of this case?
I did.
Do you have any changes or corrections to any of those documents at this time?
I do not.
If I were to ask you the questions contained in those documents today, would your answers be the same?
They would.
Thank you. The witness is available for questioning.
Counsel?
No questions.
Thank you very much, Mr. Spaeth.
Thank you.
You may be excused. Mr. Garcia?
Thank you, Your Honor. The company calls Linda Schlesman.
Please raise your right hand. Do you swear or affirm that the testimony you're about to give is true and correct under penalty of perjury?
Yes, I do.
Please have a seat and state your name and business address for the record.
My name is Linda Schlesman. I work at One Riverside Plaza, Columbus, Ohio, 43215.
All right, just ask lean forward towards the microphone, and however loud you think you need to talk, it's definitely louder than you would imagine. So just, I promise you're going to feel like you're yelling, and you're not.
Okay.
Mr. Garcia?
Thank you, Your Honor. Ms. Schlesman, would you indicate by whom you are employed and in what capacity?
I'm employed by American Electric Power Service Corps. I'm a tax accounting and regulatory support manager.
And in that capacity, do you provide services to Kentucky Power?
Yes.
Did you cause in this proceedings to be filed direct testimony, rebuttal testimony, and responses to discovery responses?
Yes.
Were those prepared by you or under your supervision?
Yes.
Do you have any corrections to your testimony?
No.
If I were to ask you the same questions today in data request, rebuttal, or direct testimony, would your answers be substantially the same?
Yes.
Your Honor, the witness is standing for cross-examination.
Counsel?
No questions.
Commissioner?
No questions.
Thank you very much, Ms. Schlesman. And Mr. Garcia, this witness can be excused.
Thank you, Your Honor.
Ms. Glass?
The company calls Andrew Carlin. And Mr. Carlin is on his way to the hearing room from the company's conference room.
That'll be fine.
Just a moment.
I don't think we'll be as fast with witness Carlin, so you can go ahead and let witness Adams and Whitney know that they don't have to sprint here.
Okay, thank you, Your Honor. Yes, I will be honest, I just texted Ms. Whitney and said that we were moving faster than we thought.
Yeah, but I think we may have a few questions for witness Carlin. You all have questions for witness Carlin?
We don't.
Oh, okay, so it's just my questions for witness Carlin. Yeah, no, I saw the email. Please raise your right hand. Do you swear or affirm that the testimony you're about to give is true and correct under penalty of perjury?
Yes, I do.
Please have a seat. State your name and address for the record.
Andrew R. Carlin. My business address is One Riverside Plaza, Columbus, Ohio, 43215.
Ms. Glass?
Mr. Carlin, can you please state your position and by whom you are employed?
I'm employed by American Electric Power Service Company as the Director of Compensation and Executive Benefits.
And did you cause to be filed into the record of this case direct testimony and rebuttal testimony and responses to data requests?
Yes, I did.
Do you have any corrections to any of that information?
I do have one correction to a data request.
Okay. And, Your Honor, I believe that correction is to a confidential attachment, but it's my understanding that the correction is not to the actual confidential information.
That is correct.
Okay.
So the data request is Kentucky Power Company, our response to the Kentucky Public Service Commission 133, confidential attachment 1, and cell K48 was miscalculated. And the number should be $2,513,897.
Thank you. Would you mind to explain how,
I'm sorry, Ms. Scott, I don't want to, you do whatever direct you'd like, but I'm gonna bring up PSE 1-33, so would it be better to just, I have questions, I think it's the sale that I actually asked for the other
Yes,
day.
it is.
So if you wanna, if you have things you'd like to clean up on redirect, my preference is to limit the direct and clean up or clarify any questions on redirect.
that's certainly fine. We'll
As
just
long
note
as
the
he-
correction for now.
With this correction, that'll satisfy. Sorry, go ahead, Ms. Glass.
Thank you. Okay, thanks for noting that correction. Do you have any other corrections?
I do not.
Okay, subject to that correction, if I were to ask you the same questions contained in your testimonies and in your responses to data requests, would your answers be the same?
Yes, they would.
Okay. The witness is available for cross-examination.
Counsel, any questions, Mr. Carlin?
No, sir.
Vice Chair? Nope. Candace, do you mind like to go to confidential session at this time? Thank you, Ms. McCann. You'll record, public record. Is are there any officers or employees at Kentucky Power, at AEPSC, at Kentucky Power or AEPSC whose incentive compensation or compensation at all depends on whether or not mutual assistance is invoked?
Certainly not directly, no.
How would
There
it be?
might a minor impact on earnings or something to that effect, but it would be an indirect impact at best, and a small one.
Okay. And when I say mutual assistance, what do you understand? And I'm not trying, this is not a gotcha situation. What, I just want to make sure we're on the same page. What do you understand that I mean by mutual assistance?
Well, either employees, usually distribution or transmission employees, come into Kentucky Power to help restore the lines after a storm, or go from Kentucky Power to somewhere else, to some other jurisdiction, either in AEP's footprint or not.
Okay. All right. And that do you also understand mutual assistance could be calling in crews from like other utilities if there's like an EEI agreement or something like that? That's what you understand
Yes,
the
that's
question to
part
mean?
of it as well.
Okay. So there are no allocations that you're aware of, or no accrual, it's a good word, accrual of incentive compensation or compensation related to whether or not, directly related to whether or not mutual assistance is invoked?
Correct, none.
Okay. All right. Thank you, Mr. Carlin. Ms. Glass?
No, we don't. Thank you.
Would you all like to?
Can Mr. Carlin be excused?
May. Thank you, Mr. Carlin. I didn't want to just excuse him if you all wanted to keep him. That's it. Okay. Mr. Gish?
Yes, Mr. Chairman, our next witness will be Mike Adams, and he's going to be connecting now. He's been watching the video. He'll connect virtually.
Questions for us? Counsel, do you have any questions for Mr. Adams?
No, sir.
Vice Chair?
No.
Do you all have any corrections or anything that you need to take up with Mr. Adams?
No, Mr. Chairman.
Okay.
We
There's-
requested he be excused.
Yeah, if there's no reason that you all need to call him to clarify anything on direct, Mr. Adams can be excused from the remainder of the hearing.
Thank you.
Thank you.
Ms. Boleyn?
Thank you, Your Honor. The company calls Heather M. Whitney.
So, well, you can go ahead and have a seat, Ms. Whitney. I'll swear you in just a minute. Sorry. Ms. Blind, I want to follow up, and we don't have to get into details with names or anything like that, but I just want to follow up. My understanding is that we have witnesses Whitney Burkholder, Ollie Mesner, Niehaus. Okay. That as a general matter, witnesses Mesner and Niehaus, my understanding is those fall into the bucket of securitization. I do think we have questions for one, if not both of those witnesses. Is that right, counsel?
Yes, because I don't know which one will
Yeah.
be able to answer. Yes.
I have questions for him. I have questions for Mr. Ali and witnesses Ollie and Burkholder. Of course, Ms. Whitney's name continued to get evoked where I don't know how this would have worked, apparently, without Ms. Whitney.
She's very important.
But yesterday, prior to the start of I believe the beginning of the hearing yesterday, you all mentioned that there may be witness unavailability or contingencies on that front, and I just was curious whether from your expected list that you provided us the other day, whether there might be any changes to that.
Yep, thank you for raising, Your Honor. That issue has resolved itself, and we plan to present the witnesses indicated in our witness order notice in the order noticed.
Okay. All right. So based on I'll just say it this way. You all would like Mr. Bishop, all else equal, to be excused for the remainder of the hearing. Is that right?
Yes.
Yes.
That'll be fine. We'll go ahead and excuse Mr. Bishop for the remainder of the hearing and take his testimony under. And that would leave us with witnesses Wiseman, West, Phillips, and Kahn that we'd ask to stick around through the remainder.
Thank you.
All right. Ms. Whitney, please raise your right hand. Do you swear or affirm that the testimony you're about to give is true and correct under penalty of perjury?
Yes, I do.
All right. Please state your name and business address for the record.
My name is Heather Whitney. My business address is 1 Riverside Plaza, Columbus, Ohio, 43215.
Ms. Blinn?
Thank you. Ms. Whitney, by whom are you employed and in what position?
I am employed by AP Service Company. I am Director of Regulatory Accounting Services.
Thank you. Did you cause direct testimony, rebuttal testimony, and responses to data requests to be filed into the record of this case?
Yes, I did.
Do you have any changes or corrections to any of those documents at this time?
No, I do not.
If I were to ask you the questions contained in those documents today, would your answers be the same?
Yes, they would.
Okay, thank you. Your Honor, Ms. Whitney is available for questioning. There were a couple of items identified for Ms. Whitney by Mr. West with respect to the company's storm damage cost normalization adjustment. I'm prepared to ask Ms. Whitney additional direct on that to try to clarify the record on that issue now.
Yeah,
or if you'd prefer to ask those questions, I can redirect. I just wanted to check with you.
Yeah, my preference is, I don't want to get into a habit of conducting additional direct examination given
Understood.
the direct and rebuttal testimony opportunities already. So if there's anything that you would like to clarify, either on Mr. West's cross-examination or what the questions we have for Ms. Whitney, just ask that you hold that till the redirect so we can do it at one.
Absolutely. Thank you.
Counsel?
Thank you. Ms. Whitney, could you refer to your response to staff's 6-9, the Excel spreadsheet attachment 1? And we can share it if you need us to, or if you have it.
I do not have the Excel
Okay.
spreadsheet.
Oh, can we close that, please?
So in column H, where it says excluded, did you all, or did you remove?
I'm sorry, Your Honor. We just need a moment to locate the document for Ms. Whitney.
record for All right, we're back on the record in 2023-159. Ms. Temple?
Yeah, thank you. So those three, in column H that say excluded, what is the number of the adjustment that removed those expenses?
An adjustment isn't necessary because those accounts are just not included in the
Okay.
per book starting point for developing the total company cost of service.
Okay, and then the ones that are included, is there a way to break that down of who was using it, who was using the plane, what purpose they were using the plane for, or is it just kind of excluded or included?
My limited understanding is that there are records that are maintained within the company regarding use of the corporate aircraft.
Okay.
I haven't reviewed them, not exactly sure what all information is available, but I believe that there is some more detailed flight-by-flight information.
Okay.
It would not be in the company's financial, general ledger system or financial records.
Okay.
And I would like a post-hearing data request for more information.
Yes, we will. I'm sorry. And then, do you know if the current Kentucky, Ms. Wiseman, she's here, Ms. Wiseman has one of the time-sharing agreements for the corporate aircraft?
I'm not privy to those types of agreements, but I do know that the only corporate aviation costs in the test year were billed by the service company.
Okay. Okay. And then we did have one follow-up question, and I can't remember who said you were the person to ask, but in the ledger about the late fees, could you kind of explain what is recorded in that ledger regarding the late fees?
The general ledger receives daily batch entries from the customer billing system and books those amounts in groups. So the general ledger does not maintain customer level information.
Okay. Great, and that's all that staff had. Thank you.
Good afternoon, Ms. Whitney.
Good afternoon.
Let's start with incentive compensation.
Yes.
Do you know where you made, could you just generally direct us to where you made the test year adjustments related to incentive compensation?
I believe you can look in Section 5, Exhibit 2, work paper W27. That would be the adjustment that was made for Kentucky Power employees to adjust their incentive compensation expense from test year actual amounts to a target of 1.
Were they paid more, or I'm moving my way to section 5, but were Kentucky Power employees paid above or below the target actually in the test year?
My adjustment reduced expense in the test year, so that indicates that that test year actuals were above a target of 1.
And then, were you present in the questions that I had for, Section B, Exhibit 2?
Yes.
Were you present in the room when I was asking Mr. Carlin questions?
Part of the time. I was out for a minute or two, but I did hear.
I think you actually may have been out while I was asking these very specific questions. So, all right. So, which exhibit is that? Exhibit 2, page or which work paper?
W27.
I was on 26. Here's 27. Oh my gosh. Okay. These are the lines with FERC accounts on them.
Yes.
Okay. And so, like, column F is effectively normalizing to earning at 100% of the target.
I don't have the columns memorized.
Oh,
I'm sorry.
it's called expected cost at a level 1.0 target.
It sounds like it.
Okay, that's okay. Let me just ask you this. Did the application cost of service study include amounts that, expenses related to incentive compensation that Kentucky Power incurred for employees that do not work for Kentucky Power?
The actual per book level of expense in the test year included the service company bill, which includes billings to Kentucky Power related to Service Corps employees, which includes incentives. So yes.
Okay. Those were not normalized or adjusted to reflect 100% target for those measures. Is that correct?
That's correct.
Okay. Why did you adjust the Kentucky Power employees down to 1 and not the allocated AEPSC employees incentive compensation down?
It's my understanding that it's been the rate-making policy at Kentucky Power for the Service Corps bill itself to be viewed as a bill for outside services. And as such, the test year actuals are the best indicator of the level of expense that Kentucky Power is experiencing. So for that reason, an adjustment wasn't made in this case and hadn't been historically been made in prior cases.
So as part of that post-hearing data request related to incentive compensation related to financial, the incentive compensation actuals, what the target would have been as opposed to the actuals, I'd like to have an appreciation for what portion of the actuals are related to financial performance as used and defined, or as the company understands it, as it relates to the adjustment in the settlement. Basically, how much of the test year amount was already removed per the settlement? Does that make sense, Ms. Blaine?
Can you repeat that for me, please, Your Honor?
Yeah, you all, Kentucky Power, and we'll get it in writing so that it's formal.
Sure.
But Kentucky Power incurred an actual test year amount of incentive compensation related to AEPSC employees. Kentucky Power, through the settlement agreement of the parties, has agreed to amend their application effectively. I'm not trying to be incredibly specific here, but effectively to amend their request to add an adjustment that removes incentive compensation for both Kentucky Power and AEPSC employees related to incentive compensation, for incentive compensation related to financial metrics.
Mm-hmm.
So you have the big circle of incentive compensation and the smaller circle within that of incentive compensation tied to financial metrics. And I'd like to know how those two compare and what remaining amount is unrelated to financial performance, but was still allocated to Kentucky Power, right? That's the actual. And then what those look like compared to what that big circle would have been at 100% of target.
Okay, and you, just to clarify and make sure that I'm understanding, I appreciate that it will be in writing and it will help, but just because I think we'll start working on this sooner than perhaps we'll receive the post-hearing data request in writing. You're asking for the second comparison to be the total amount, not adjusted to a 1.0, adjusted to target and removing the amount related to financial performance to reflect the settlement.
So it's my understanding that either we already know or we will know through the post-hearing data requests what the AEPSC amount is for the test year for incentive compensation related to financial performance. I'd separately like to know what the amount is for the test year for AEPSC employees for incentive compensation had they only hit 100% of target, and to see how those two compare.
Okay. Understood. Thank you, Your Honor.
Do you have, counsel, yes, it's you, Ms. Blaine, do you have a copy of the EEI presentation, the 60
We do, Your Honor.
6-page presentation.
The handout.
Yeah, and actually, I think it's,
We don't have the fact book.
yeah, okay. Can we bring up the fact book, the 86-page document? Were you watching the hearing yesterday when I was asking questions of Mr. West regarding deferral accounting for major O&M expense related to storms?
Yes, I was.
And the company's use of deferral accounting, or different companies' use of deferral accounting for those O&M expenses?
Yes.
Are you generally aware of the states on the left-hand column of this document? This is, again, the document that was on the AEP Investor Relations website related to the company fact book for the EEI conference. Are you generally aware of the states in which AEP has operating subsidiaries that are shown on the left-hand column?
Yes, I am.
Do you work in any other states there other than Kentucky?
Yes, I do. I support various operating companies.
Okay. And are you generally aware of their use of deferral accounting for major storm expenses?
Yes.
Okay. You see that all of the states say that they have the, quote, ability to defer. That's what that slide says.
I see all but one. There's one no.
Oh. Yeah, oh yeah, sorry, yeah. I just mean that it shows whether or not they have an ability to defer.
Correct, yes.
Okay. And there's one state, Michigan, that indicates it does not have the ability to defer.
Correct.
And then they provide, and again, pursuant to testimony of Mr. West, maybe we don't really know where these numbers come from. He and I didn't. Do you know where let me ask this one. Did you provide those numbers to anybody at AEP as to the amount in base rates?
I had an opportunity to review. I didn't create the slide, but I had an opportunity to review the slide.
Do you know where AEP got the information in that column of current ongoing level of storms approved at base rates?
In my review of this slide, it's clear that the level in Kentucky Power's base rates is the approximately 1.1 million that has been cited in case number 2020, 74.
174, is that right?
174, sorry. And that, the company has cited in its various requests for deferral accounting authority since that case. I think that there perhaps was an administrative oversight that is causing the reporting of 1.5 million on this slide for Kentucky Power Company rather than the 1.1. That is clearly what is embedded in the rates authorized in Kentucky Power's prior base case.
So that's the other thing that Mr. West and I have some confusion after asking Mr. West questions. Is it 1.1 or $2.1 million that's in base rates?
There is, 1.1 is a rounded number, but it is 1.1 of major storm project costs that are in base rates. The 1.0 million that you add to get to the 2.1 million that you were asking about relates to non-major storm projects.
Okay. On the notes here, did you provide input into the notes or have an opportunity to review the notes related to deferral accounting?
I would have had an opportunity to review the notes.
Okay. So I'm not trying to split hairs, but I'm really trying to have an appreciation for what Kentucky Power is proposing here versus what they've had versus what other states do. The same states that as we talked about, compete for capital with Kentucky Power. For Kentucky, it says something like may request approval for deferral of major storm costs. Do you read that as like just the opportunity to seek deferral accounting?
Yes.
Okay. Is that necessarily different from your understanding, because you're the accounting expert, like the second sentence for Ohio and Oklahoma, for instance?
I'm going to preface my response by saying each each state, each of our companies or jurisdictions have unique regulatory mechanisms regarding storm cost recovery. We
Yeah.
try to, for purposes of the audience for this deck, we try to boil them down and make them very simple and try to help with people's understanding and ability to compare. So when I read them, yes, they appear very similar.
And I'm not, it's not a gotcha. I just want to make sure there's a little more added to the other two where it talks about technically larger. And the reason I ask that, and just, I point that out to say, both of them in the sentence before that, it says for both Ohio and Oklahoma, over under recovery accounting performed. So am I supposed to read that for Ohio and Oklahoma, for instance, they've got true-up accounting effectively each and every year compared to what they incur, or comparing what they incur versus what's the amount in base rates. And then they also have deferral accounting available to them for those items that are larger, not just larger or smaller because they have the deferral accounting.
So I can speak more with firsthand knowledge to the Oklahoma
Okay.
line item. But as an example, they have a recovery mechanism approved in which they're allowed to defer the level of actual storm expense above or below the level embedded in base rates on an ongoing basis. And then in a base rate case, they can seek authority to amortize whatever the regulatory asset or liability that has built up over time is. Or if they're not in a base case, they may make a filing seeking authority to recover those amounts.
Okay.
As a for instance, versus in this jurisdiction, if Kentucky Power were to have actual major storm expenses in excess of the level in base rates, they would need to file a request for deferral accounting authority to be considered by this commission before a deferral or a regulatory asset would be established on the book.
PSO effectively has a tracker for major storm O&M.
I wouldn't characterize it as a tracker because there's no concurrent cost recovery mechanism. There's no separate rider.
Okay, let me rephrase that. Let's use like tariff PPA. Over and under recoveries are just by virtue of having been approved for the tracker, over and under recoveries use deferral accounting to move dollars and cents month to month and year to year, right?
That's correct, because of items that are recoverable through that specific rider.
It's that deferral from month to month, year to year, up and down, over and under that you're referring to that Oklahoma has. Not the cost recovery portion, but the deferral portion.
That's right. They have the authority to establish a regulatory asset or liability for the amounts above and below the level in base rates.
Okay. You have a general idea in some of these jurisdictions as to the amount of ongoing level of storm costs that the utilities are actually incurring in terms of how much is being deferred each year?
I don't have command of those numbers. I mean, the companies have financial statements where these regulatory assets or liabilities would be visible to the extent they're established on their books.
I mean, just the reason I ask is we have like an $80 million, almost $80 million regulatory asset in this case related to major storm expense, right?
Correct.
Okay. Our experience, Kentucky's experience as it relates to Kentucky Power, is that major storm O&M expense is materially higher on an annual, but also on an average basis since the last rate case. Would you agree?
I would agree based on my review of the storm damage expense normalization adjustment in the last case. There were no major storms where Kentucky Power sought deferral accounting authority in the 3 years before its last base case.
Do you know whether these utilities here are seeing the same kind of thing? Just personal knowledge that they're booking regulatory assets and not regulatory liabilities in any particular last couple of years related to major storm O&M expense?
There have been storms where we are recording, we have deferrals for major storm costs, and those are transparent in our financial statements.
Yeah, I guess what I'm trying to get to is, we've got $80 million averaging, it's 11 storms since the last rate case at about $7 million a storm, right? That's, I mean, it's math.
That seems reasonable.
On an annual basis, if you just annualized it, that's $20+ million, $27 million a year, approximately, right, 20 to 30. That's way higher than the 1.1 million that's in base rates here, correct?
Correct.
The amount proposed in the settlement to include in base rates here, correct?
Correct.
And the amounts presented here that the other states are putting in their base rates, correct?
Correct.
Do you know anything about Michigan's inability, I&M in Michigan, and their inability to defer major storm O&M?
I do not. I'm sorry, I'm not familiar.
Did you did you assist Kentucky Power in the 2020-174 base rate case?
In the 2020?
Yeah, sorry, the 2020-174 case?
Yes, I did. I was the accounting witness in that case.
How about the 2017-179 case, the 2017 base rate case?
No, I did not.
Okay. Do you know historically whether, and I asked Mr. West this question, and he said, he gave his answer, but said you may be better for this. Do you know historically how Kentucky Power has recovered regulatory assets related to storm damage?
It's my understanding that they've been recovered through an level of amortization included in base rates.
Okay, so they were not included as a, it's your understanding they were not included as a component of rate base or capitalization in previous cases?
I haven't verified that fact, but generally speaking, it's my understanding that deferred storm costs have, I think I need to stick with, I haven't verified it, because I would have needed to look at the details of the
So
proposals.
can we ask that as a post, that's perfectly fine, as a post-hearing data requests? I know you already gave an answer about the 2020 rate case, about storms, but I do believe that the 2017 rate case had storm damage expense. Yeah. And so we'll just ask in the 20, if you could go back and look at the 2014, the 2017, the 2020 rate cases, and confirm the treatment of the recovery of regulatory assets related to storm damage expense, O&M.
In regards to rate base, were they included in rate base?
Yeah, how they were recovered, whether they were amortized, whether they were included in rate base or included in capitalization, that kind of thing. Or whether they just said, you're not recovering it, hold on to that reg asset to the next case, whatever the answer may be, but I'd love for you to be able to go back and look at how those were recovered. Have you dealt with reg assets for major storm O&M expense in other jurisdictions, the recovery of them, the amortization of them?
Yes, I have.
In those other jurisdictions, did the utility seek or receive a return on those expenses as part of their amortization?
The example that I'm thinking of, again, the storm cost deferral is included in rate base, so therefore, a return is earned through the base rate revenue requirement.
So you know of another jurisdiction that didn't necessarily amortize it, but instead included it as a component for rate base?
It's actually both.
Okay.
Both. So while the deferred costs are costs that the company is financing for longer than a year, so that deferral is eligible to be included in rate base and earn a return at the company's weighted average cost of capital. And then at the same time, that deferral is considered for amortization and is there's a level of amortization that's being recovered from customers through base rates.
And inclusion in base rates all else equal just equates to earning a weighted average cost of capital return. Is that right?
That and recovering amortization. So it's a return on and of, much like depreciation
Perfect.
equates to plant. We have a level of amortization, and then the reg asset itself is in rate base earning a return.
Okay. And the amortization period would have been set by the commission in that rate case?
That's correct.
Okay. And for the utilities that may request recovery outside of base rates that you've dealt with, is that a return on and of, or just a return of?
I think, my answer would be that treatment can vary. I don't have an absolute answer of, a prescribed method.
I'm sorry, I should have been more clear. I was asking about the example, you said you had firsthand knowledge in Oklahoma that they have the ability to go to the next rate case, or they can seek to effectively recover it if they don't have an intention on seeking a rate case. And I was just curious, in Oklahoma, if your experience was whether they earned a return on and of that deferral that they sought outside of base rates.
I can't recall those details right now. I'm remembering something that related to an event that happened in 2007. So I know that they recovered the storm cost itself, but I can't recall whether it was earning a return by it being included in rate base or not. So I can't answer that with certainty.
Do you have any memory or knowledge of any of these utilities seeking carrying charges while they are deferring the amounts before they seek recovery or start recovery?
I have with respect to the long list that's on this chart, my experience is very narrow. So it would seem reasonable to me that a utility would, if they are planning on financing a deferral for longer than a year, it would seem appropriate to seek that authority. But I don't have any direct knowledge of a particular set of facts and circumstances.
The regulatory assets that you all have in this case, at approximately or just under $80 million, were those deferred at book cost, or was there a carrying charge added to those?
They're simply deferred the costs. There has been no carrying charge computed or applied.
Okay. And did you all provide an alternative recommendation if the commission denied or didn't approve in the form proposed securitization for that regulatory asset of what to do with that deferral of major storm, or deferrals of major storm O&M expense?
I know I didn't have any discussion of that. An alternative like that in my testimony, I would defer to company witnesses Wiseman and West.
Okay. Thank you very much, Ms. Whitney. Ms. Bloom, do you have any redirect?
Thank you, Your Honor. Just on one topic, and Ms. Whitney, do you have a copy of Company Witness West's direct testimony with you on the stand?
I do not.
Your Honor, may I approach and provide Ms. Whitney with my copy? I'd like to refer her to a figure BKW-4, which is the schedule of regulatory assets that are included in securitization. Okay. Ms. Whitney, are you familiar with figure BKW-4 to Mr. West's direct testimony?
Yes, I am.
Can you please describe what it presents?
Figure BKW4 presents the list of regulatory assets requested for recovery through securitization. It would help a reader of this table relate the regulatory assets requested back to the company's books and records and the particular sub-accounts that they're recorded to, as well as the related dockets that, in which the company would have sought deferral accounting authority and/or granted deferral accounting authority.
Thank you. And if we added up the dollar amounts, they're shown on lines 13, 18, 23, and 29. That total would equal the approximately 79.2, or what the chair characterizes almost $80 million of storm damage cost related regulatory assets in this case, incurred since the last rate case. Is that correct?
Yes, that's correct.
If you'll look with me, please, at.
May I make one caveat is
Yes.
that the 2023 storm expense deferral regulatory asset as presented is an estimate and consistent with the docket that's cited here. The company will be or has the actual amounts will be filed once the final storm accounting has been completed.
Okay, thank you for that clarification. I want to look at a couple of specific storms costs that are included in that total. Line 14 is the line item for February 2021 ice and snowstorms, correct?
Yes, that's correct.
And the cost of that event, or that set of events in February 2021, was nearly $46.2 million of the nearly $80 million total of regulatory assets that we just discussed.
That's correct.
And if we look now, referring you to line 20, the July 2022 historic flood in Kentucky Power Service territory, which we've heard testimony about so far this week, that event alone represents nearly $11.5 million of the nearly $80 million regulatory asset total, correct?
Yes, that's correct.
And so if you'll accept my lawyer math, I believe when we remove or back out, for purposes of thinking about the overall level of storm costs that have been incurred in the last 3 years above the level in base rates, when we remove those two very significant events, I believe the remaining level of costs that are included in the regulatory assets is $21.5 million. Because I know you're better at mental math than I am, does that sound about right to you?
Yes, it does. I was doing the math the opposite way as to what was not included, and I see about 20 million.
Okay.
Yeah.
Thank you very much. Those are all my questions.
Is there anything else for Ms. Whitney? Thank you very much. So it is 2:22. My understanding is we have witnesses Burkholder, Ali, Mesner, and Niehaus.
Yes, Your Honor.
All right. Let's take a recess before Mr. Burkholder because we're going to be here for a little bit. I also want to make sure that we have our ducks in a row. I do have a question before we take a break.
Sure, Your Honor.
I guess it's for Mr. Garcia. Since it's my understanding, Mr. Garcia, you'll be tendering Mr. Burkholder?
That's correct.
Okay. I have some documents that I have questions for Mr. Burkholder on. They are about 12 years old, and it's regarding a case here at the commission. It's all things filed with our URL. They're tendered by they're tendered by attorneys at Stites and Harbison. I just want to make sure that we cross all the bridges the way we need to here. In large part, they are related to the 2011 application by AEP Kentucky Transmission Company for a request for a designation as a utility, I guess technically for designation as a utility under 278.020. As part of that case, there were depositions taken, no, there were not. There was a hearing completed, in which I think Kentucky Power sought to have a court reporter as well as the official record, with 3 different witnesses. Ms. Lisa Barton, who is previously of AEP, a Mr. Greg Pauley, former president, COO of Kentucky Power, and a Mr. Gerald R. Bottler Jr. with American Electric Power. There's also, oh, I'm sorry, there were 4 people. Mr. Wanhouse, he'd be very upset if I left him off, but he was 2 pages of questions. It is a table of contents, just transcript of the record that was filed in that case. There are lots of references in that. There are reference to that also to a white paper that was written by a Julie Cannell. Ms. Cannell also appeared in that case, provided written testimony in that case, in which she discusses that she wrote the white paper at issue, which drives all of the cross-examination for Mr. Bottler, and that she was hired at American Electric. I'm not testifying here. I'm really trying to figure out how many copies of this you want. That she was hired based on initially a phone call by Mr. Burkholder that occurred in 2010 or 2011. And so Mr. Burkholder effectively is the only person still around whose name is evoked in that entire proceeding or that entire issue that has any idea of how all of that started and moving forward. So he initiated it. His testimony in Indiana regarding their transmission company, AEP, Indiana and Michigan Transmission Company, is a part of that record. And my question to you all is, how would you like to deal with getting you all copies of those as I ask questions about them? Would you all like printed copies? Would you like counsel to give you a copy of the entire record now? Would you like me to have it stamped by all of the copies I give you stamped by our secretary? I'm just, from an evidentiary perspective, I'm just wanting to make sure how you all feel comfortable about the questions that I asked Mr. Burkholder about that proceeding, with, of course, the caveat that you're not trying to get ahead of any objections or any concerns you all have once we actually get into the questions. But I just want to make sure as a basis for those questions that you all have everything they're comfortable with.
May I ask a clarifying question before responding to yours, Your Honor?
Sure.
Is the commission's intention to make all of the documents that you just listed part of the record in this proceeding?
I think it's more, I don't even,
And maybe to elaborate on
No.
why I'm asking.
Go ahead.
I think there's a difference between a document and our position on the use of the documents might differ depending on whether they're being used for purposes of refreshing Mr. Burkholder's recollection about items of which he had personal knowledge at the time, or if they're used for some other purpose that's similar to impeachment or to ask questions for this record. But if they're being incorporated into this record the intention would be to incorporate them into this record based on the fact that Mr. Burkholder may have retained a consultant and may have testified regarding their retention of that consultant in another jurisdiction. I think we might feel differently about those 2 scenarios.
yeah, I don't think it's the latter as much as it is an appreciation for where we are today with the AEP LSEO charges. And it's about, again, and I referenced it earlier, Mr. Ali's and Mr. Burkholder's testimony of wanting to ensure that there's a factual record here of what is actually going on and how it works. And I really want to have an appreciation for how things were, how AEP and Kentucky Power themselves, through their own words, explained how AEP transcos would work in Kentucky and in other jurisdictions, and per Mr. Ali and Mr. Burkholder's testimony, how they're actually, the expenses that we're dealing with in the cost of service today and the genesis of those expenses are actually flowing through to customers and pursuant to what processes.
I have not reviewed these documents prior to today, Your Honor. I know I'm not sponsoring Mr. Burkholder, but I am assuming that Mr. Garcia Santana also has not reviewed them in their entirety, or perhaps at all. I don't know whether Mr. Burkholder has reviewed them, and I think we will need time to review them.
But I'm asking if you want, I don't know that,
Sure.
I don't know that we've ever been under an obligation to provide any documents that we've had questions about in significant advance pursuant to this. And again, raise all the objections you want. Guess what I'm asking for is, would you like the link right now, and would you also like us to make individual copies for you of the documents I'm going to reference?
Both would be great, Your Honor.
That'd be fine.
Thank you.
So as a starter, just before we get there, I will have questions about cases number 2020-62, which is the Kiwani Enterprise 138 KV case. 2020-174, which is the 2020 base rate case. 2017-179, which is the 2017 base rate case. And specifically, case number 2011-42, the application of AEP Kentucky Transmission Company, in which AEP and Kentucky Power witnesses testified in that case.
Is the commission's intention to direct the company and Mr. Burkholder in advance of his questioning to specific documents within
Yeah,
those documents? Okay.
I'll have the documents. That's what I'm going back to make sure you all want a printed copy, an entire printed copy for Mr. Burkholder as well as yourself.
Yes, please, Your Honor. Thank you.
Okay. All right, so what we'll do is we'll go ahead and take a recess until 3. That way we're all well rested. And then we'll come back for witnesses Burkholder, Ali, Mesner, and Niehaus. After we finish with witness Burkholder, I think that Ms. Kahn will likely be able to be excused unless something gets referred back to her.
Thank you, Your Honor.
All right, we'll be in recess until 3 o'clock. Okay, we're back on the record in case number 2023-159. Ms. Blend, before we went off the record a minute ago, you and I had a short conversation about process.
Yes, Your Honor.
Okay. It's my understanding that your two next witnesses are witnesses Burkholder and Ali, is that correct?
That's correct.
Okay. Both of those witnesses, fair to say, I think we can stipulate they talked about transmission.
Correct, Your Honor.
I have a number of documents, waiting for a few more, but we just handed you a copy of AEP Kentucky Transmission Company's post-hearing brief in that 2011 case we discussed earlier. Do you have a copy of that?
Yes, Your Honor.
Okay.
We've not yet had an opportunity to review it, but we do have a
So
copy.
I just want to make sure. I'm going to talk about a couple of things before we get to Mr. Burkholder, witnesses Burkholder and Ali. So I've provided you that post-hearing brief from AEP Transmission Company. There are a number of attachments to that brief. I'm going to be asking about the brief itself, but also the appendix or attachments or exhibits that it has with it. One of them is a, if you'll notice, I think Exhibit 1 to that is a going blank, I apologize. A transcript. That's the word I'm looking for, Ms. Blend. It's a transcript of the hearing in case number 2011-42. It's a transcript of a hearing here at the commission with the Kentucky Power President, Mr. Pauley, Mr. Bodler, Ms. Barton, Mr. Wanhoss. I'll be asking questions about those, but I just want to make sure you'll have a copy of it. I'm going to also ask before you call these two witnesses, because these documents relate to both, that's why I'm not going to wait for you to call Mr. Burkholder. I'm just going to go ahead and make sure you have all these and the record's clear about what they are.
Okay.
The next item is the commission's final order. I'm just doing this for the sake of having everything. So the final one, or the next document, is the commission's order, the January 18, I believe, order in case number 2017-179, which is Kentucky Power's 2017 rate case.
Your Honor, I believe, are you referring to the second exhibit to the company's, AEP Kentucky Transmission Company's post-hearing brief in case number 2011-42, which appears to be a State of Indiana Utility Regulatory Commission?
No, exhibit
order?
one before that document. Exhibit one is there's an exhibit one and an exhibit two, and I think there's 3 exhibits to that.
Okay, and now, so this document collectively, the company's post-hearing brief inclusive of its exhibits,
Oh, yeah.
is one exhibit, and now you're talking about a
This
different
is a
document?
single document filed with the commission, the first one from
Okay.
2011-42. Those are exhibits to the actual brief.
Thank you.
Yeah, sorry. This is just completely separate order in the 2017 rate case. This next document, Ms. Blend, is a document from the 2020 rate case. It's a data request for Mr. McKenzie. The reason I'm providing this, if you go to the next page, you got to flip over the first page, sorry. It's just it's a company presentation, similar to the one we've been talking about earlier, the EEI presentation.
Okay.
The next document is Commission's order in 2020-62, which is that Kewanee, Enterprise to Kewanee, I think 138 kV line we were talking about earlier.
I just put them in there for now.
This is next. And then we'll also be providing you in just a minute a copy of the final order in 2011-42. That application by AEP Kentucky Transmission Company. There will also be a couple of documents that are coming. We just have, you can imagine that in the last 30 minutes, our printers, all 4 of them, have been working overtime to get 5 copies of these documents. Thank you. At least one of the documents that's coming, I think the other one, you probably won't need it, just heads up. One of the documents that's coming is merely a M3 attachment, a PJM attachment M3 local plan submission from the PJM M3 stakeholder process, just regarding a representative group of AEP supplemental transmission projects. But I'm waiting on that because they're making copies, and that's for Mr. Ali and not Mr. Burkle. So. Should be 5 documents altogether.
Yes,
6.
so far, 5 documents so
Great.
far, and then you said there's one more?
There's
on
one
it
more
today,
that's
Your Honor?
coming, but it won't be until Mr. Ali. I won't need that from Mr. Burkle. Ms. Blend? Oh, I've lost my, my witness list. It's okay. No, we're down. Counsel, since I don't have my witness list. It is it's you, Mr. Garcia. Mr. Garcia, would you like to call your next witness?
Mr. Chairman, before we proceed, the company would respectfully object to the introduction of both these documents and the document that you've indicated is still on its way, being introduced into the record of this case. First, on grounds of relevance, in that they are not relevant to the proposals that the company has made in this rate case. Second, the witnesses in the cases that you've presented information for, particularly with respect to the case 2011-42, the Transco case. They're not witnesses in this case, with the exception of Mr. Burkholder. They're not present.
Mr. Burkholder was not a witness.
Thank you. So none of the witnesses in that case are witnesses in this case. They're not present or available to be cross-examined about this information that's being presented by the commission today. And to the extent that any information is provided by Mr. Burkholder today in response to these documents, he hasn't had proper notice, nor has the company, of these topics, nor have we had a meaningful opportunity to know that the commission was considering this information prior to today.
Okay, so I've not moved or actually introduced any of the documents, nor have I been able to ask any questions to determine the relevancy or foundation of the documents. I'm merely providing them to you now so that you have them, so that we don't have to send people around as I provide them to the witness so at this point, I'm going to overrule your objection.
Okay, understood.
Is there anything else?
No, Your
Mr.
Honor.
Garcia?
We want to introduce the thing that was requested. I think we can do it once.
Go ahead.
Your Honor, yesterday you had indicated that you wanted supplemental information on the response of the company to staff question 6-8.
That's right.
That has been prepared, ready to introduce that.
Yeah.
The direct examination.
So that was what I was going to ask. So once you call Mr. Burkholder, I get him sworn in, I'll give you an opportunity to do that one on direct.
Thank you.
Since that was my request. Thank you, Mr. Garcia.
The company calls Joshua Burkholder.
Please raise your right hand. Do you swear or affirm that the testimony you're about to give is true and correct under penalty of perjury?
Yes, I do.
Please have a seat. Please state your name and address for the record.
My name is Joshua Burkholder. My business address is 1 Riverside Plaza, Columbus, Ohio, 43215.
Okay. Mr. Burkholder, I'll just ask you to pull the microphone a little closer to you and ask if you'd speak up a little bit.
Is this better?
That is much better. Thank
Okay,
you. Mr.
great.
Garcia?
Thank you, Anna. Would you please state your employment and your position for the record?
Sure. I'm employed by American Electric Power Service Corporation as Managing Director, Transmission RTO Policy.
And in that capacity, do you provide services to Kentucky Power?
Yes, I do.
In this case, did you cause direct testimony to be filed on
Yes, I
behalf
did.
of Kentucky Power?
Yes, I did.
And did you also prepare, or under your supervision were prepared answers to discovery requests?
Yes, I did.
Do you have any corrections to your testimony?
I have one minor correction.
In what page?
On page 5, line 13, the first word is proving, and that word should be providing.
So how would the full sentence read?
In turn, PJM uses the transmission facilities owned by TOs in providing wholesale transmission service and compensates TOs for this.
Thank you. Do you have any other corrections?
I do not.
If I were those prepared by you or under your supervision, testimony and discovery requests?
Yes, they were.
Responses? If I were to ask you the same questions today, would your answers be substantially the same?
Yes, they would.
Okay. Do you recall yesterday that the commission, the chairman requested some information to supplement the company's response to staff 6-8?
I do recall. I believe that the chairman requested that I provide the 1 CP values for Kentucky Power.
Permission to approach the witness?
You may.
Thank you.
Oh,
Your Honor, I would ask that this document be identified, marked for identification as Company Experiencing Exhibit 2.
Mr. Kurtz? Any objection?
No, no, Your Honor.
Mr. Gary? That'll be fine. This is entered as AEP hearing exhibit number 2.
Thank you. Mr. Bookholder, the document that has been identified as Company Exhibit number 2, would you please explain what it is?
Sure. So this is similar information that was provided in attachment to staff set 6, question 8, that included information about the AEP zone OAT transmission expense, and then how those costs were allocated ultimately to Kentucky Power through the cost allocation defined in the AEP transmission agreement under the 12 CP approach. This information supplements that by adding the 1 CP values for Kentucky Power, which is the basis that PJM would use to allocate costs to OAT transmission expense costs to Kentucky Power in the event that Kentucky Power were not part of the AEP transmission agreement. And so this information, it's laid out a little bit differently as far as its sort of working down. So from 2014 to 2023, it provides the 1 CP peak day and time for the AEP zone. I added, for simplicity and for discussion, kind of what season that represents, summer or winter, as the AEP zone, as we've talked about before, or it has been mentioned before in this proceeding, can peak in either the summer or the winter. The next column is the affiliate load percentages, so the percentage of Kentucky Power as a percent of the AEP affiliates load in the AEP zone. The first column is the 12 CP metric that I mentioned has been provided previously in the attachment I referenced. And then the next column is the requested 1 CP for, again, that would represent the same day as in the second column. And then in my testimony, I reference a previous testimony that was provided by Mr. Kelly Pierce, where he provided information and analysis about the 12 CP and compared it to the 1 CP and drew certain conclusions. So I've sort of continued this analysis, first by calculating the difference between the 12 CP and the 1 CP, where, again, this is where a positive number would represent the 12 CP being higher, a negative number would represent the 12 CP being lower. And then I've added some simple statistical analysis of these two metrics, including the average, which shows that the 1 CP on average is slightly higher than the 12 CP. The standard deviation, which is a metric of sort of volatility. And so this shows that the The 1 CP method is significantly more volatile from a standard deviation standpoint than the 12 CP metric. And then over the 10-year period, the minimum and maximum values for each.
Thank you. And just to clarify, this document was prepared by you or under your supervision?
Yes, it was.
Do you adopt this document also as part of your evidence in this case?
Yes, I do.
Yeah, and just a quick clarification, we'll provide an errata, but the next to last word where it says minimum, that would be M-I-N-I-M-U-M, correct?
That's correct.
Yeah, yeah, just to clarify. One last question on this. Is this document in any way inconsistent with the other information that we have provided in your testimony?
Yes, it is.
I'm sorry, consistent or inconsistent?
Could you repeat the question?
Yeah,
We didn't hear it clearly.
Is the information that it's provided in this document consistent with the conclusions that you reached in your testimony?
Yes, it is.
Yeah. Your Honor, with that, the witness is standing for cross-examination.
Any questions, Ms. Tessie?
No, Your Honor.
Good afternoon, Mr. Burkholder.
Good afternoon, sir.
Okay. You've been with the companies for at least 15 years, is that right?
Yes.
And the question really is, we're going to start on which question, Mr. Burkholder. You got a couple of questions deferred to you during this hearing. Have you been watching this hearing?
I have. There have been a few.
There have been a few, okay. So I think Mr. West deferred a few questions to you. I believe it was Mr. West about capital allocation. Do you remember hearing those questions being deferred to you?
I do recall that general discussion and questions being deferred to me.
Okay, so since you've been deferred capital allocation questions, I just want you to keep that in the back of your mind, because it's just we're gonna be talking about other stuff, and then all of a sudden, we're gonna get to that capital allocation thing. So when you hear all my other questions, just please keep in mind that those questions have been deferred to you. Kentucky Power is a operating subsidiary of American Electric Power, either directly or through some number of intermediary companies. Is that correct?
Yes.
Let's just go, do you mind, counsel, to provide Mr. Burkholder with that 66-page EEI document that we've been banting around? I don't think through this entire hearing indicated that we're going to include this 66-page document in the record. I've really just been using it to ask, is this correct? Right. So I'm going to do the same thing here, Mr. Burkholder. On page 44 of that document, it talks about AEP transmission holdco legal entity structure. Do you mind to turn to that?
Did you say page 44?
44.
Yes.
And there's a corporate, I'm sorry, go ahead.
For those of us in the hearing room, we only have one copy of that document. Would it be possible for staff counsel to display it again?
Oh, yeah, that'll be fine.
Thank you.
Yeah, and this is actually going to be a pretty straightforward question. Are you there, Mr. Burkholder?
Yes, I am.
Okay, do you understand this to be an accurate representation that AEP Transmission Company LLC is a subsidiary? Oh, sorry, Ms. Tussey, take your time.
Well, I was curious, with the handbook one or
The other one.
Okay.
Frankly, either would be fine, but we'll make sure it's the same document. There's a corporate structure on that page, right?
Yes.
Okay. And that AEP Transmission Company, I'm sorry, page 44, AEP Transmission Company LLC, or AEP Transco, is a subsidiary of AEP Transmission Holdco, which is a subsidiary of American Electric Power. Do you see it? That's what that chart says?
Yes,
And does that chart accurately reflect your understanding of the corporate structure of those three entities?
it does reflect my understanding.
Okay. And do you also understand that AEP, and I'm going to, do you mind if I say things like Transco or I&M or APCO? You'll understand the entities I'm referring to?
Subject to potentially me asking to clarify, but absolutely.
Okay. So would you agree that the following are subsidiaries of AEP Transmission Company LLC? AEP I&M Transco, AEP Ohio Transco, AEP West Virginia Transco, AEP Kentucky Transco, AEP Oklahoma Transco, and AEP APCO Transco, or Appalachian Transmission Company?
Appalachian Transco.
You agree?
I do agree.
Okay. Can we, for the purposes of every question I basically ask you today, ignore AEP Oklahoma Transmission Company? Can we just agree, like, when I'm asking questions, I'm not asking at all about Oklahoma?
So you're clarifying for me ahead of time?
Yes.
That I'm
Yes.
not to
I'm
consider?
basically telling you, when I ask you a question, do not assume I'm referring at all to AEP Oklahoma Transmission Company. So I guess it's a direction less than a question. So,
I will do my best.
okay, AEP Kentucky Transmission Company owns transmission rate base within the Commonwealth of Kentucky. Is that your understanding?
I believe that is my understanding based on what's here. I would make the point, though, that my involvement with the Transco companies was from 2009 to 2012, when one of my job responsibilities was part of the team that was kind of getting the Transco started, developing the business plans, including working through state regulatory processes to initiate the operations. Since 2012, I have had no involvement with the operation or any of the projects associated with the Transco companies, either individually or collectively. So I agree that what is represented here likely represents this net plant owned by Kentucky Transco. But I would just add to that to say that I have had no involvement with any particular projects, any decisions to pursue such projects or not pursue projects.
Okay, so let me be clear about the question, and maybe I wasn't initially. Are you aware at all what the rate base in AEP Kentucky Transmission Company represents?
Generally so, yes.
Is it your understanding that those are facilities within the Commonwealth of Kentucky?
That's my understanding, yes.
Okay. I don't think there are going to be any gotcha questions, so I just want to make sure that I'm just trying to make sure that we've got the full record here.
Appreciate that.
AEP Kentucky Transmission Company, but the reason I ask you that is because, working back for a second, rate base feeds into the revenue requirement, which feeds into the OATT rates at FERC, correct?
Correct.
Okay. And your testimony discusses at length those OAT revenue requirements and rates, correct?
It does, Your Honor. That process can be fairly complex and hard to understand, so I tried to kind of lay it out on a step-by-step basis to sort of help all the parties understand that process.
Well, let's start there.
Sure.
Okay? Because you would agree, wouldn't you, that you simplified the rate-making process in your testimony?
I don't necessarily agree with that. I tried to describe it in terms that would be understandable, but I don't necessarily say that I simplified it or...
Oh, I was just using your words, I'm sorry. Like on page 6, you specifically said, in simplified terms, the Kentucky Power OAT expense is what Kentucky Power pays to PJM, the transmission provider, for Kentucky Power's use of the PJM transmission system under FERC regulated rates.
Yeah, that certainly was part of the testimony. So I guess, Commissioner, what I mean there is to say that was meant to be kind of a summary to say, I've sort of tried to describe how it works, and then to say, okay, so to simplify, kind of what I'm saying then is
Yeah.
the statement that you followed.
Okay. All right. I didn't know where the objection. Okay. So, yep. Are you on page 6 of your testimony now?
Would you like me to keep the EEI document?
Yeah, just keep it around.
Okay.
Just general reference.
Let me find room here. Could you repeat the page, please?
6.
Okay, I'm there.
Okay. Line 4, the thing you just simplified here, says Kentucky Power is an LSE in PJM, and as such, Kentucky Power is charged transmission OAT expense by PJM. Is that right?
Yes.
Okay. Let me ask you a lot of questions that I think may be a more direct way to describe what you described here. Does PJM send Kentucky Power or AEP-SC a bill for transmission expense?
I don't know the answer to that.
Okay.
Maybe not a physical bill, but would the payments be done within the corporate structure making those payments, so you may not see a bill?
Yes, so from my understanding is from PJM's perspective, kind of looks at the AEP companies collectively and bills AEP collectively for that service. And then it's then sort of further separated under the cost allocation rules that I talk about. I think the question about sort of specifically sending a bill to the service corporation, I don't know those particular mechanics. So that was the nature of my response, Your Honor.
Yeah, so and that's what I'm trying to get to is the specifics of what you sort of provide here in your testimony.
Okay.
Okay, so let's just use your words. That AEP is charged, using your 6-8 as an example, AEP is charged a bill for its LSE obligation, its LSE costs, on a 1 CP basis for OAT expenses. Is that right?
Your Honor, if I may, did you mean to say AEP or Kentucky Power? You said AEP.
AEP, on a 1 CP basis.
Thank you.
Not exactly. Would it be helpful for me to try to explain?
No, it would be helpful if you could take 6-8, the document that you have in 6-8. Do you have that, Ms. Glass? Could you? And that's your document, correct, Mr. Burkhalter?
Yes.
Okay. On line, well, it's your line 9, but it's Excel line 12. Do you see the term total NITS revenue requirement?
I do.
And below it is a percentage of NITS recoverable. Do you see that?
Yes.
Okay. And then there is on line 11, a Schedule 12 zonal expense. Do you see that?
On my line 11?
Yeah, your line 11.
Yes.
Okay. And then the total of those, called total NITs, which is the OpCos, which would be the operating companies, correct?
Yes.
Transcos, which are the AEP transmission companies, correct?
Yes.
AMP-T, which is the American Municipal Power Transmission Affiliate, correct?
Yes.
And something called 30.9. Do you know what 30.9 is?
I could give a short explanation if it would be helpful.
Go ahead,
It's
please.
quite immaterial.
Okay.
Okay, there is a,
Can we Oklahoma it and just say that it doesn't matter to what we're
I
talking
would
about?
love to.
Okay, let's do that.
Because it would help to avoid having to describe what line 10 recoverable kind of has to do. There's sort of an adjustment there that happens that,
Okay.
I'd love to.
Then let's just
Oklahoma
ignore that.
Transco it.
Let's just think, we'll round to the nearest billion here. We'll just ignore that for a minute. Then you've got, and zone, end of the parenthetical, and zonal RTEP revenue requirement, right? So those are the NITS expenses, network integration and transmission service, and the zonal requirements that are described above. Is that right?
Yes.
And then those are allocated.
Yes.
Those are allocated to all the load in the AEP East zone. Is that right?
Yes.
On a 1 CP basis, correct?
Yes.
And the bill to AEP, and I'm not using like a mailed, actual physical bill, but the bill to AEP is approximately 85% of that line 12 for, let's just take as an example, the 2013 year.
That's correct.
Okay.
So 15% is load-serving entities that are not affiliated with AEP.
Yeah, non-OpCos, the AMP is a great
AMP,
example.
Buckeye,
Yep.
yes.
Okay. Then the dollar denominated amount of that percentage of the revenue requirement is that $700+ million below that, correct?
That's correct. So that is taking the number from line 12, the total, what I think of as sort of the total AEP zone owed expense, times the affiliate percentage.
And then that AEP bill gets divvied up between all of the load that is affiliated with AEP, right?
Yes,
And that's done on a 12 CP basis,
under the terms of the AEP transmission agreement.
under the terms of the FERC tariff.
Under the terms of the AEP transmission agreement is the step where the reallocation of the cost occurs on the 12 CP basis.
Do you know whether or not that agreement is a FERC tariff? Is an agreement filed at FERC?
I believe it is.
Okay, that's, I'm just trying to say, it's a wholesale agreement is what I'm trying to.
Okay, appreciate that. Yeah.
You agree with that?
Yes.
All right, and I don't want to get into tariff or a contract, I'm just saying it is a wholesale agreement, is your understanding?
Yes.
Okay. And then the portion that year on a 12 CP basis of that AEP bill in 2013 was 6.479%, right?
Correct. So that's the Kentucky Power 12 CP as a percent of the AEP affiliates. So not of the whole zone, of the AEP affiliates.
Yeah, it's 6.479% of the dollar denominated value immediately above it, correct?
Line 16, the Kentucky Power expense is 6.479% of the dollar value above it. Yes.
Okay. That's been the case all the way through this chart, 14 on, right? And I don't mean the numbers, I just mean the process, the allocators.
Correct.
Okay.
Correct.
And just hypothetical here, if AEP was not an affiliate and was treated the exact same way as Buckeye and Buckeye Power, for instance, it would just get a 1 CP allocation under the FERC tariff.
Can I clarify? I think
Sure.
you may have said AEP at the start of that sentence.
If Kentucky Power was not an AEP affiliate, such as Buckeye, and got allocated NITS and zonal transmission, like a non-affiliate, it would have been allocated on a 1 CP basis as opposed to being allocated on a 1 CP and then reallocated on a 12 CP, correct?
That's correct.
And that's what you sort of drew up, and not the dollar denominated amount, but the percentage values that are in AEP Hearing Exhibit 2. If we wanted to know what Kentucky Power would have been allocated in terms of NITS and zonal revenue requirements any given year since 2014, on a one CP basis, we could just merely take the one CP allocator and apply it to that, line 12. Is that
Yes,
correct?
that's exactly the purpose of providing the supplement that you asked for, was sort of that direct apples-to-apples comparison of the
Yeah, but-
12 CP to the 1 CP.
And I just want to make sure you agree it's line 12 that amount should be applied to.
Oh, good point of clarification. No.
Okay, why not?
Okay, because the number on line 15 of my original attachment is the Kentucky Power 12 CP on an affiliate load percentage basis. The percent of Kentucky Power's 12 CP as a percent of the AEP affiliates within the zone. That's the same approach here for the Kentucky Power 1 CP. So the idea here is to make it directly comparable to
Okay.
the 12 CP. Does that make sense?
Yeah, so let me just,
Could I add a clarification?
sure.
The 1 CP that is provided on the exhibit, this one,
AEP here, Exhibit 2.
AP Exhibit 2. So in 2014, Kentucky Power was 5.653% of the load associated with the AEP affiliates within the zone.
Okay.
Recall that that's about 85% of the total load. So if you wanted to know what Kentucky Power's 1 CP was as a percent of the entire AEP zone, you could take this number and multiply it times 85%. So it would be less, it would be, in the ballpark of, 4.5 or 4.8 or something
Okay.
like that.
Okay, so literally take the 1 CP here and divide it by the amount, multiply it by the amount.
I'm saying this, given the in percentages, multiplied by the.
Multiply it by the amount
Yeah.
on line 13. The Kentucky Power 1 CP.
Yes.
Okay, great. And then you could apply that number to line 12.
That's correct.
But you would get the exact same amount, I think this is the mathematics here, but you would get the exact same if you just took affiliate load percentage Kentucky Power 1 CP and multiplied it by the amount on line 14.
Talking about arithmetic can, get a little tricky, but yes, that's correct.
So, okay. If you could, look for a minute at 2016 and 2017.
Which document would you prefer that I look at?
Oh, I'm sorry. So the 6.8 still, 2016, 2017. For year 2016, 2017, sorry. So you see you have 13, 14, 15. Oh, no, I'm sorry, I'm looking at 12 CP. You have 14, 15, 16, 17, 18. Do you see that?
Yes?
Okay. Do you know approximately what percentage of that, and I think we should be able to tell from this document, at least like roughly,
Okay.
what percentage of the amount of Kentucky Power expense on line 16 is a revenue requirement tied back to Kentucky Power's affiliate OPCO and Transcos?
I do not believe that you could identify that from this chart.
Not approximately. So here's why I asked. Let's take column D again, which is the 2014 amounts. Of that approximately $900 million revenue requirement, 1/9 of it is approximately the zonal revenue, approximately 1/9 of it is the zonal revenue requirement, and the remaining 8/9 is approximately the revenue requirement for NITs of the OPCOs and NITs of the Transcos.
Could you repeat that?
Okay.
I'm sorry.
Line 12
Yes.
is the revenue requirement, the the total revenue requirement.
I
Zonal
see
plus
what you're
NITs.
saying.
And the NITs portion, NITs for that purpose are from affiliate OpCos and affiliate Transcos. Would you agree?
Correct. So the NITS is the revenue requirement associated with projects that are cost allocated 100% within the AEP zone. And then the line 11, Schedule 12, is the AEP zone's share of costs that have regional cost allocation. And so I do see what you're saying about how that was, about $800 million for NITS and about $100 million for Schedule 12.
So you as a general rule of thumb, you can see that we'll call it 80-90% of the revenue requirement Kentucky Power is paying is for NITS, which at least in the early years, we'll get to the later years, are the revenue requirement of affiliate OpCos and Transcos in the AEP East zone.
I apologize. I may have misheard you. I thought your question originally had to do with the amount of transmission revenue, which, what was Kentucky Power's revenue requirement here? I now better understand your question to say, you could figure out kind of what share of Kentucky Power's expense is kind of broken down between NITS and Schedule 12. And yes, you could figure that out by adding, another line and, a simple calculation.
Yeah, so if a customer comes in and says, gosh, what is all this Kentucky Power transmission expense? Where's it all going? You could really take 6.8 here and see 80 to 90% of it is paying the revenue requirement for transmission for the AEP OpCos, the AEP East OpCos, and the AEP East Transcos.
That does include Kentucky Power.
We're going to get to that part in a minute, but yes, thank you for that. But you would agree?
Yes.
Okay. So let's move on across, I guess.
Sweep right.
To 17 and 18, G and H. So the revenue requirement at the very bottom on your line 16, it's going to go up and it's going to go back down. Do you see that?
Do you mean the number on line 16? Mm-hmm. Yes.
And it goes up and then it goes back down because FERC lowered the ROE. Is that right?
That's correct. Okay. The two lines, line 5 and line 7, labeled OpCo ROE refund and Transco ROE refund, is attributable to the result of a complaint regarding the ROE of AEP affiliates that was filed in 2017 and resolved in 2018. Okay. And so the effect was adjusted here as far as a lowering of that revenue requirement.
Okay, great. All right, I'd love for you to look, before we start getting into all these other documents, we're going to look specifically at D4, M4, as compared to D6 and M6. Okay?
Are we talking about specific cells in the spreadsheet?
We'll go to it here in just a second. So, okay. And I said it wrong. I confused your lines and the Excel lines. Let's take 2014.
Okay.
NITS revenue requirement for OpCos.
NITS revenue for OpCos.
Could you bring 6.8 up, Ms. Tussey? Sorry, just so that we have
687.
$687 million.
Okay.
Okay. That's the revenue requirement for NITS for all the operating companies in the AEP East Zone. Is that right? The transmission revenue requirement.
Correct.
What is that in 2023?
It is $1.225 billion.
What is the revenue requirement in 2014 of the NITS revenue requirement for the Transcos in 2014?
116 million, approximately.
Do you know what it is in 2023?
Approximately 1.465 5 billion.
Okay. You've got that EEI document there with you still? Open to page 44.
Okay?
What's the, for sake of this question, what is the Oklahoma amount?
The Oklahoma amount?
Yeah, I know, I told you not, I'm not really asking, but what's the Oklahoma amount?
You said no gotchas.
I know.
1.681 million, so
Okay.
1.6.
That's great. And then below that, it gives a Transco amount for, a rate base amount for all of the Transcos. What is that
The
amount?
number that's sort of below the boxes.
Yeah. It's like a 14 billion.
$14 billion, right.
Okay. So you would agree that, okay, let me take a step back. As a general matter, does that sound about right to you? Is your understanding of what the Transco's rate base is?
It's my understanding, based on this information, as I've said, I haven't been involved in decisions around capital budgeting for the Transcos or.
I guess what I'm asking, you've got the AEP NITS revenue requirement for the Transcos this is your information, at $1.4 billion. Does that seem out of whack with a rate base of 14 billion?
We're including Oklahoma, right?
Yeah, that's what I'm, so let's call it 12 and a
yes.
half, sorry,
Yeah.
12.5 billion?
Yes.
Okay. And that's why I asked you about Oklahoma, so we could net that, and I forgot to do that. So about $12.5 billion on a $14 billion, or a $12.5 billion rate base on a $1.4 billion revenue requirement.
So kind of adjusting out the Oklahoma Transco from the net plant.
That's right.
I understand.
Okay. That seems, is your understanding of all this, as the witness talking about all these revenue requirements, as I think I asked earlier, rate base revenue requirement, which goes into rates, that seems to correlate to you?
Yes.
Okay. And so that is a more than tenfold increase since 2014 in the NITS revenue requirements for Transcos.
Correct, recognizing that in 2014 was at the initial phases of those companies sort of getting started.
Yeah, and it's not going to surprise you. That's why I've got all these, because you were around, and I kind of want to ask about how they all started. So I think you're right. I think they all started in about 2010, 2011, 2012, all the Transcos, right?
I would not necessarily agree to say that they all, kind of started there. That was when the process began to get these companies started. When each individually started, I couldn't say exactly, but that was the time frame when the Transco operations in general were beginning.
And 09 to 12 is when you were involved in that world, we'll call it.
That's correct.
Okay, great. So in the time period between 2014, which this goes to 2014 because that's the data you all had, right?
Yes.
Yeah. So the time period between 2014 and 2023, revenue requirement for OPCO transmission doubled, revenue requirement for Transco transmission tenfold. Is that accurate?
I agree with the statement, with adding the comment that the starting point for the OPCO number was significantly different than the starting point for the Transco number.
Okay. Having been around, as you sort of self-described, between 2009, 2012 in the Transco world, what was the purpose of the transmission companies?
Sure. And so again, I'm happy to discuss this. I would just recognize I am kind of working off of my memory of matters from over a decade ago. But as you said, I was certainly part of that team and had an understanding of sort of the overall, what was the terminology you used, the overall
Purpose
of those companies?
Yeah, and okay, so let me withdraw the question.
Okay.
All right, and I'll ask it differently. Do you have a copy of this post-hearing brief?
Yeah, Your Honor, at this point, we would like to renew our objection stated by Ms. Glass about the notice and opportunity to review this document.
he's about to get an opportunity to review it. So I'll
Yes,
overrule
Your Honor.
the objection.
Your Honor, if I may, council has received hundreds of pages of documents that are related to what we're saying, and there has not been opportunity to review them.
Okay.
That-
I'm sorry, is that a renewed objection on that basis?
That's the basis for the objection.
Okay, I will continue to overrule the objection.
Thank you.
All right, so on the first page, do you see that it's stamped November 18, 2011?
Yes, I do.
Okay. On page 3 of that document, there's a paragraph, or a section B. Do you see that?
Your Honor, if I may, I don't think that there has been a foundation established for this document to ask this witness.
So I'm literally trying to do so. Okay.
Thank you, Your Honor.
Or is that a renewed objection?
At this point, there is no foundation, but I understand that you are just about to try to lay it. At this point, there isn't.
Okay. So on page 3 there, do you see the section B, the need for and purpose of Kentucky Transco?
Yes, I do.
Okay. So the first sentence says, Kentucky Power, like the other AEP operating companies, faces significantly increased capital spending demands to meet environmental and transmission revenue requirements over at least the next decade. Did you see that?
Yes.
Okay. Is that statement consistent with your memory of the purpose and need for Transcos in the different jurisdictions?
That is certainly consistent. Again, it was, my recollection, Your Honor, is our transmission planning team, and witness Ali can talk about this as well. In the 2009-ish timeframe, kind of looking out over the next decade time horizon, saw the tremendous need for transmission investment and the tremendous value that that transmission investment would provide to customers at the AEP system.
Was there concern that you remember about the impact? Well, let me withdraw that. Have you heard questions that I've had in this case about whether or not the reason for not having generation in Kentucky Power's expected capital plan over the next 5 years? Have you heard me ask those kind of questions?
I have heard you ask those kind of questions.
And have you heard some of the answers along the lines of, we can get power through PPA, we can't make transmission investments and distribution investments through PPA. That's where we can best use our capital given our current financial shape. Is that your general impression of what the responses have been?
It is my general impression, again, acknowledging that I haven't been involved in any of those sort of generation-related matters or decisions.
Yeah, and that's not the reason I ask you. I'm just asking, is it your understanding that those kind of same financial pressures and trying to balancing the amount of investments made versus the financial impact of the underlying utility, it was part of the impetus for the need or the purported need for the transmission operating or the transmission companies?
Correct. So sort of one kind of pillar of the strategy behind the Transcos was that sentiment from the transmission planning team about the tremendous need. Another one was from the corporate finance team, and that was looking at the effect that making the level of transmission investment might have on the financial condition of the operating companies, which at the time was the vehicle to invest in transmission exclusively. And if the ability for the operating companies and their financing capacity, that the impact on their balance sheets and credit metrics to make those transmission investments along with other investments in generation and distribution.
Okay.
So that was kind of that was sort of the other piece, and so it was those two needs that sort of came together to form the opportunity, the impetus behind forming the Transco companies.
Okay. And then do you see later, it's skipping a sentence, there's a sentence after the reference to footnote 13 that talks about the heavy demand for Kentucky. Well, I'll just read it. Thus, in addition to the environmental investment to be made at the company's Big Sandy facility, Kentucky Transco projects an additional $260 million will be needed to invest in Kentucky Power's transmission system over the next 10 years. This heavy demand for increased investment in transmission and generation assets, the timing and requirements of which is beyond Kentucky Power's control, comes on top of existing strains on Kentucky Power's ability to finance needed investment. If we go to the next page, there's a block quote at the top of page 4. Now, read you the block quote to see if it's consistent, again, with your memory of the need for these transcos. If what you remember is the same as this reference to Mr. Bowler here in the block quote. Kentucky Power's cumulative long-term capital investment program is large given its size. Although the company has temporarily delayed some of the investment programs in 2009, 2010, and likely 2011, we expect the program to resume its full force in the next few years. KIPCO, Kentucky Power Company, received approximately $30 million in equity contributions from its parent AEP in April 2009. However, we expect increasing upstream dividends in the next few years and free cash flow to return to negative over the intermediate and long-term horizon. While we generally view investments in rate base positively, we would be concerned if Kentucky Power Company's spending plans result in a persistent negative free cash flow position that will be primarily funded with internal or external debt. Should this situation materialize, Kentucky Power Company's financial profile could become stressed given its Baa2 rating category. Is that general description of the risk of I guess, putting too much investment in the operating company as opposed to transmission company consistent with your memory on the basis for the Transcos?
I would note that it's my understanding that this block quote was in the pre-filed testimony of Mr. Gerald Boatler, and it represents comments made by Moody's Investment Services credit opinion issued in January 14th, 2011. I do not recall any of the specifics that are referenced here. I recognize that's not what you're asking me. You're asking, is this generally consistent with my understanding of sort of the thinking behind forming the Transco companies? And I would say it generally is.
Okay.
It was the sentiment from the investment community that adding incremental, significant transition investment would potentially stress the financing capabilities, the financial condition of the operating companies. And the Transco was presented as kind of a sister company, as effectively a financial vehicle, as a way to separately raise capital for needed transmission investment, with the benefits being protecting the financial quality of the operating company, where potentially that deterioration of credit metrics, to the extent it leads to downgrades, that, again, I'm getting a little bit over my skis here on the corporate finance world, but would lead to higher financing costs. So kind of one benefit was the protection of the credit quality of the operating companies. And the other was the possible favorable financing terms that the Transco company might be able to realize, financing terms specifically being cost of debt that would be passed on to customers in the form of benefit of lower costs versus sort of the alternative.
Well, the other side of that is with stressed financials and downgrades in credit rating, increased cost of debt increases the cost of all capital needs. Agreed?
Agree.
Yeah. And would you look then at the bottom paragraph on page 4? It says a downgrade of Kentucky Power's credit rating would increase the cost of debt for Kentucky Power. Not only would the cost of borrowing increase, but the increased cost would be applicable to all Kentucky Power Company borrowings and not just to transmission-related investment. That's effectively what you just said, right?
Yes, so
Okay.
a downgrade in credit, a higher cost of debt would not just apply to in this case, Kentucky Power's transmission investment, but it would apply to all of raising capital for all of their capital needs.
Okay. And the Transco was intended to be a targeted solution for that issue. Would you agree?
I agree with that statement.
Okay. So we can move on to page 5 there. Mind just read that first sentence?
I'm sorry, did you ask me to read that sentence?
Yeah, do you mind to?
Kentucky Transco is a targeted solution for this problem, with
Okay.
footnote, 22.
which is the transcript of, that's attached to the document. That's okay. So, other states, when this was going on, other states had already had Transcos approved or were operating. Is that your understanding? I'm sorry, just November 18, 2011.
Subject to check, it is my recollection that initial operations, some initial investments may have begun in other Transcos, but again, I don't recall all of the specifics of the timing, that went on at that point.
Okay. So the brief says, next sentence, I think, 2 sentences. Indeed, because other AEP operating companies are facing these same demands, applications by AEP Transcos to operate as public utilities have been approved by Ohio and Indiana. Do you see that?
Yes, I do.
Okay. Indiana's footnoted at 25. There's an order there, a reference, which is attached as Exhibit 2. Is that a proceeding you were personally involved in?
Subject to check, I believe it was. I believe that my recollection is that there was a settlement agreement to the initial proceeding, and I may have submitted testimony in support of that settlement agreement. But again, that's subject to check and, based on my recollection of those events from over a decade ago.
Okay, do you mind then, just real quickly, I'll try to help you recollect your recollection. There is an attachment there at the back, Exhibit 2. It's about 140 pages back. And it's an order of the Indiana Utility Regulatory Commission from November 2nd, 2011.
Your Honor, is it before or after the transcript? Just to help
After
me
the
move
transcript.
along.
Yeah,
Okay.
that will, there's about 100 pages of transcript there.
Okay.
But if it helps, it's immediately after the transcript.
Okay, I have located a page listed as Exhibit 2.
Great. All right, and this is the November 2nd, 2011 order.
Starting at the next page.
Yeah, it says approved November 2.
Approved November 2nd, 2011, order of the commission.
Yep.
I-
Okay, and if you'll go.
Recognizing I haven't had time to review this, that's what this appears to be.
Okay. So if you go to page 3, I'm sorry, page 2 first. There's first where it talks about the joint petitioner's case in chief. Do you see that?
Is that item 4, sort of towards the bottom?
That's right.
Okay.
There's a reference to a Paul Chodak III.
Chodak.
Okay. Who's the president and COO of I&M? Is that right?
Yes, that's what this
Okay.
says.
Then on the next page, there was a testimony, it looks like, from Ms. Lisa Barton, Senior Vice President, Transmission Strategy and Business Development for American Electric Power Service Corporation. You see that reference?
Are you referencing the first sort of full paragraph on,
That's right.
on page 3? Lisa Barton provided an overview.
Yeah. Did you work directly or indirectly for Ms. Barton at the time?
Yes, I did.
Then it also talks that there was testimony taken at the top of page 5 by Mr. Gerald R. Bodler Jr., Director of Corporate Finance of AEPSC.
First full paragraph at the top of page 5.
That's right.
Mr. Gerald R. Boatler discussed.
Yeah. Do you
Yeah.
see that? Did you know Mr. Bodler?
Yes, I did.
Okay. There's another, below that, a paragraph describing a Mr. Roderick C. Griffin. And then below that, at the bottom paragraph, is a Mr. Joshua D. Burkholder, Manager, Transmission Strategy and Business Development for AEPSC. Is that you? Are you the same Mr. Joshua Burkholder?
I believe so.
Okay. Do you mind to just take a second and just read the Indiana orders recital of your testimony in the case in chief in that?
So read the paragraph at the bottom of 5 that starts with me.
That's right. I know this may be surreal for you, but yes, that paragraph.
Bringing up many, okay, yeah, I'll do that, yes. Okay, I've read the paragraph.
Apparently in this case, 12 years ago, maybe even 13 if it occurred in the previous year, you presented a, quote, illustrative pro forma analysis comparing Indiana retail jurisdictional cost of service for a transmission investment of $300 million under a Transco build scenario versus an operating company build scenario. You also explained that your pro forma analysis calculated the Indiana jurisdictional cost of service resulting from a $300 million AEP zone transmission investment, $60 million of which is assumed to be made in the I&M territory. Do you have any memory of the analysis that you conducted there?
I would say that I have a general analysis of what the purpose was, what it was trying to show. I can't say that I recall any of the specific sort of methodologies or approaches that I used, but I do recall kind of the purpose of such analysis, what we were trying to communicate with that analysis.
On the next page, you talk about how the you compared. Mr. Burkholder also explained that the network integration transmission service cost and billing of charges under the two scenarios modeled, and that you stated the difference between the two scenarios of $230,000 approximately, and the Indiana jurisdiction is expected to diminish or possibly reverse over time. Was that the difference between whether or not a Transco made the investment versus the OPCO made the investment?
Subject to check, I do believe that that's what that difference here is representing.
Okay, and that's what it seems to describe. That's
Yeah,
why I just want to make sure if that's what your recollection was. Let me ask, how are those, and this is particularly relevant to your testimony on page 10,
okay,
where you talked about the difference between the revenue requirement, the difference between the LSE OAT expenses and the LSE OAT revenues for Kentucky Power.
yeah.
Right, that's the cumulative equivalent of approximately that $230,000 difference. Is that right? Well, let me take a step back. What is it your memory of the difference of that $0.23 million being reflective of?
Yeah, I'd be happy to answer that question because I think it highlights one of the key aspects of the Transco that I haven't yet had the opportunity to describe. One of the key aspects of the Transco was that it would provide wholesale transmission service in effectively an identical manner as the operating companies provide wholesale transmission service. So for example, the rate structure, the Transco's, my recollection is, sought a formula rate at FERC that was substantially similar in all sort of practical ways to the formula rate structure for the AEP operating companies. Same ROEs, same calculations generally. So from the perspective of if a dollar is invested in a Transco company or a dollar is invested in an operating company, it would generate substantially the same revenue requirement at the wholesale level that we would call in this proceeding LSE owed expense. What my recollection is, Your Honor, that what this pro forma goes on to show was trying to sort of show, okay, then how would that revenue requirement that starts out the same potentially be treated at the retail level in the state of Indiana? And this is where my sort of knowledge of the details sort of ends as far as being able to describe exactly why there was a difference in it of 0.23 million between those two scenarios. But that's my recollection of what that type of analysis tried to show. It was the Transcos and the operating company scenarios would start with the same cost structure, the same, as far as, so that the Transcos had, for example, had no employees. All of the services for the Transcos were provided by primarily Service Corp employees through a service agreement. In really exactly the same manner as services are provided to the operating companies. So from all kind of operational and rate-making kind of perspective at wholesale, effectively identical between sort of the Transco model and the operating company model.
Okay.
Does that sort of help?
That's with regard to the revenue requirement.
I'm sorry?
That's with regard to the revenue requirement, right?
It would generate substantially the same revenue requirement at wholesale.
Okay. Trying to think of the most, bear with me here.
Sure.
Are you generally aware that retail ROEs can be lower than FERC-approved ROEs?
Without specifics, I believe I'm.
If you're not aware, that's okay. I mean, it's fine that if you're not, but as a general matter, is that your understanding?
At the time, at this time, that I wouldn't really speculate. No, I'm
Okay.
I'm not.
Then let me ask you a different question. Do
Sure.
you know the revenue requirement in 6.8? Do you approximately know what the FERC-approved revenue requirement is for that transmission?
Could you say that again?
Okay. For your 6.8, the NITS.
Going back to my 6.8? Okay.
Your 6.8, the
Okay.
NITS.
Yeah.
Do you know what approximately the ROE is that's included in the calculation of that revenue requirement?
Okay, my iPad is frozen here, if you could just give me a minute.
Okay. That's all right. That's
Thank you. Okay, could you repeat the question, please? I'm sorry, can you just repeat?
Do you know what the underlying, for the revenue requirement in 6.8 for NITS and for NITS for OPCOs and Transcos, do you know what the wholesale FERC ROE was that calculated that revenue requirement?
Subject to check, I don't have these numbers in front of me, but my recollection is that for the period that we talked about, how the ROE changed. So prior to that change, I believe that the ROE was, the base ROE was 10.99%.
Okay. Did that include, or should we also add the 50 basis point ROE adder for all of the states except for Ohio?
At the, prior to, we're talking about the previous period, that would, in all of the states at that time, would include the 50 basis point RTO adder.
So it would have been 11.49?
Subject to check, that's my understanding.
Okay, great. So if the calculation for Kentucky Power's NITS revenue requirement at the wholesale level, the revenue requirement on the transmission rate base was calculated using an 11, I'm just making up here, but 11.49 ROE, and that cost then gets allocated down through, we'll just take the column D here for the 2014 in your 6A. Allocated on 1 CP to the AEP companies and then a 12 CP to all of the OPCOs. The money that Kentucky Power gets from that is based off of a revenue requirement at 11.49%, right?
When you say the money, do you mean the expense allocated to?
LSC OAT revenues that it would get,
Okay, the LSCO revenues.
the other side of the business, that's
That
right.
Kentucky Power would receive as a transmission owner for
Yep.
their assets.
That's right, as a credit,
As a revenue.
as a revenue, which in a rate case is used to offset the revenue requirement at the retail level. Is that your understanding generally?
My general understanding is those are two, as I've explained in my testimony, those are sort of two separate items, the wholesale revenue and the wholesale expense. It's my understanding that it can be convenient to kind of net those two together when calculating retail rates.
Okay, but I guess what I'm trying, so Kentucky is a vertically integrated state. Its transmission is already in retail rate base, right?
That's my understanding.
And then it recovers a portion of that, whatever it can, at the wholesale level through OAT, that same transmission.
I'm sorry, I'm not following.
Okay. Is it your understanding that Kentucky Power's OAT revenues and OAT expenses are included in a retail cost of service?
While I'm not an expert at the retail rate making, that is my understanding, yes.
Okay. And so the revenues, this is exactly what you say though, the revenues that a utility receives, wholesale OAT revenues that they receive for transmission revenue requirement include a 11.49% ROE, like historically, I think what you're saying.
At the time prior to the.
Yeah, but let's say at Kentucky, the retail ROE is 9.5 or 9.7 or 9.8.
Your Honor, if I may clarify timeframe. I'm not entirely sure that the timeframe that you are describing, it's entirely clear for the record.
I'm just trying to make an illustrative example. I'm not trying to do a specific time frame. I'm just trying to ask if the wholesale revenue requirement, if the wholesale OAT revenues that a utility receives use a higher ROE than the retail amount, that higher ROE is effectively a credit in excess of the amounts that retail customers are paying for transmission rate base. Do you know that?
Your Honor, I apologize. I'm certainly not trying to be difficult here.
Let me withdraw that and ask you a very different question.
Okay.
Is it a good thing for retail utility customers if somebody else pays a portion of their transmission expenses through wholesale rates?
Can you restate that?
Yeah. Is it a benefit to Kentucky Power's retail customers if a portion of the transmission they need, the tab for that gets picked up partially by somebody else?
I would agree with that.
Okay. Yeah. It's a smaller slice of the pie at the end of the day. Would you agree?
I was waiting for the pie analogy to emerge, and here it is.
Yeah. It's what you get for doing a hearing after Thanksgiving.
Well, I had a series of jokes planned, but I will save those. Sorry.
And let me just, I think I can really get to brass tacks if you can agree to that. Do you know Matt Satterwhite?
I do.
Do you know Matt Satterwhite used to be the COO and president of Kentucky Power?
Yes.
Okay. So I have lots of memories of Mr. Satterwhite while he was in that position. One of them is testifying on the 2017 base rate case, 2017-179, which we'll talk about in a minute.
Okay.
And specifically, in that 2017 rate case, were you aware of that the Kentucky PSC permitted Kentucky Power Company to track a portion in an 80% incremental or decremental amount of LSC OAT expenses over a base amount?
I'm not familiar with the details of the rate making which occurred in 2017 at Kentucky Power, no.
You didn't know that Kentucky Power got a tracker for a portion of those costs in 2017?
I did not.
Okay. Did you know they got a tracker for all of it in 2020?
I gleaned that information from reading the order, I believe, from 2020, where that was, the details of I sort of just think about it generally as a tracking mechanism.
Yeah.
I understand that that was approved and that there was some pretty heavy caveat
Okay.
language associated with that approval. So I've read
Yeah.
that order.
Let me, it was my understanding from his testimony at that hearing that as a general matter, and I, using a lot of rounding here, that if an AEP affiliate, an AEP OpCo,
An OPCO.
could attract approximately its 12 CP allocation of LSE owed expenses.
Attract?
Yeah,
Can you clarify?
just wait.
Okay, I'm sorry.
Attract,
Okay.
ATT, I'm not gonna trust that. Attract approximately its 12 CP LSE owed expense allocation percentage or more in available capital for transmission investments, that state financially, or its customers financially, would effectively be a winner. And that was in the sense of the difference in PJM LSE OAT expenses would be lower than the PJM LSE revenues. Do you agree that that would be the case?
I'm sorry, what would be the case?
That if you attract, okay, so,
No,
that's okay.
I'm not trying to be difficult here. I had trouble kind of following the premise of what you were saying Matt Satterwhite was saying.
yeah, it's my understanding of what Mr. Satterwhite said.
Okay.
I'm not trying to, I'm just asking. If let's just use 6-8 as an easy example.
Okay.
If from here for the next 5 years, Kentucky Power Company continues to pay the 2023 12 CP allocation of 5.627% on PJM LSE owed expenses. You following up to now?
I'm sorry.
It's okay.
Could you?
If for the next 10 years,
Yeah. The next prospective
for the
10 years?
next 10 years from 2023,
Okay.
Kentucky Power's 12 CP LSE owed allocation is the same as it is in 2023, 5.627%.
Would now be the appropriate time to inject that it might change?
No,
Potentially lower?
I'm using it as an example.
Okay, okay.
It's the same. It stays the same. It's just
Under the example that we're building?
Yes.
Okay.
Stays the same for the next 10 years.
The 12 CP allocation,
The amount of the allocation of LSE owed expenses to Kentucky Power is constant over the 10 years we're about to talk.
okay? Okay.
The allocation of capital, okay, the allocation of transmission investment that feeds into the NITS revenue requirement opcos, okay, relative to all of the transcos and opcos in the AEP zone, Kentucky Power gets 10% of all of that capital to invest in its transmission system for the next 10 years, each and every year.
Kentucky Power gets 10% of the total system capital over the next 10-year period?
The total transmission investment. So 10% of the capital.
The total transmission capital?
Yep.
Okay.
All of the capital put in transmission, the AEP zone for 10 straight years, 10% of it goes to Kentucky Power. Okay? You following up still to now?
Yes.
Okay. It's being allocated 5.627% of 85.41% of the revenue requirement each year, assuming 2023 stays constant, correct?
Say it again, please.
Okay. Column 2023 there.
Okay.
It would be paying 5.627% of 85.4163% of the whole zone's revenue requirement, right?
Understand, yes.
But its own rate base would be growing by approximately that 10% of capital each and every year, right?
Yes,
Okay.
factoring in depreciation.
Appreciation, I get you. Yeah. But most of these assets are in the last decades, right? Transmission.
Yes, absolutely,
Yeah.
yes, and have lasted, in some cases, centuries.
The numbers that you have on page 10, the delta, the $50 million delta on page 10
Oh,
of your direct testimony in this case. If Kentucky Power,
could you clarify the $50 million?
you have two numbers on page 10.
understand.
An expense and revenue requirement, or an expense and a revenue, right?
Yes,
And the difference of them is approximately $50 million, correct?
yes.
If Kentucky Power only pays 5.627% of 85.4163% of the total NITS and zonal RTEP revenue requirement for the next 10 years, but gets 10% of the total capital invested in that zone each and every year for the next 10 years, directionally, which way would that delta go?
I believe in the illustrative example that we've constructed here together, that delta would go down.
Okay. Is that delta a reflection of the relative amount of capital invested in other states in their transmission as opposed to Kentucky Power?
Is that delta representative to the amount of capital in other states relative to Kentucky Power? I would say that's accurate.
Okay. The reason Kentucky Power is paying $50 million more a year in FERC wholesale transmission costs is because AEP affiliates are spending more capital on transmission relative to the way the costs are recovered than Kentucky Power is getting allocated.
Your Honor, I think the important point that I need to make here is that the level of investment is driven by the need for that investment on the system and the benefits of those investments. And Witness Ali can talk in detail about what those needs on the system have been. And so when we think about one area spending relative to another, the primary factor is the need for investment.
Is the allocation of capital exclusively related to need? For AEP, I'm sorry, just for AEP, is the allocation of capital exclusively related to need?
I am not involved in the capital allocation decisions that the company makes or that process. I think that company witness West described that process well when he described an iterative process, and I believe he referenced investment review committee, for example. So I'm not involved in that process. I'm not involved in the investment review committee, for example. So I don't have perspective on the capital allocation.
I'm sorry to snicker, but Mr. West specifically pushed this type of question to you, Mr. Burkholder. That was what we discussed earlier, correct? Capital allocation amongst the AEP companies.
I heard you say that, but I think that may have been not the sort of the correct kind of handoff from Mr. West. I don't have additional perspective on capital allocation decisions. My role is the policy lead in the RTO.
Was Mr. Bowler an expert on capital finance? In your estimation?
In my estimation, yes.
Your Honor, and if I may, before we move away from the topic, the witness did clarify that the aspect of investment as to the needs is something that is within the witness Ali domain. I don't know if that's part of the confusion about the word allocation of capital relative to the needs. Just wanted to make sure that.
Yeah, let's just talk about this for a minute, counsel.
Yes, please.
Because I'm really in a rough spot. I have testimony given to this commission from representatives of AEP and AEPSC on behalf of, or AEP, AEP and Kentucky Power regarding this very issue. Okay. I attempted to ask the questions earlier. I was told this witness would be the person to ask. I've waited. I have verified testimony. It puts us in a rock and a hard place where if in many cases the people who previously had a position no longer have a position, and if one person said something in the last rate case, the person says something in the next rate case, the objection is we can't ask the person in the exact same position here what the other person said 3 years ago. So I'm trying to have an appreciation for who the right person to ask these types of questions are. Because I have testimony in this commission reproduced by AEP Kentucky Transco, who, by the way, in this case was on behalf of Kentucky Power asking to step into the, this is the quote, step into the shoes of Kentucky Power. I have quotes here from AEPSC affiliates or AEPSC employees that say, and I'm not testifying, I'm trying to get to the bottom of who we can find that can talk to whether this has played out the way AEP said it would play out. That, and this is on page 36, it may just be easier if you'd look. On page 36 of Exhibit 1 in that document. Mr. Raff, who I think everybody in the room's aware of, who the room's named after him, is asking questions. Mr. Overstreet objects. Mr. Raff revises the question at the bottom of 36. Do you see that, Mr. Garcia?
I have not had an opportunity to review this in detail, Your Honor.
Oh, that's okay.
I do see what you're referencing.
That's okay. I just pointed out. And so Mr. Raff asks the question there. And it specifically is asking the question about what if the commission does exactly what it did a number of weeks later in denying Kentucky Power, AEP Kentucky Transco, a designation as a utility. And that all future transmission facilities needed by Kentucky Power are constructed by Kentucky Power. In that situation, would the parent company, AEP, provide the equity necessary for Kentucky Power to maintain a proper capital structure in order to finance those transmission facilities? And I appreciate your all's objections, and I'll continue to receive them when you make them. But I can't imagine anything more squarely in front of the commission in a rate case than a utility's appropriate capital structure and the revenue requirement basis for transmission expenses. And the answer there specifically discusses capital allocation with and without a Transco, or the purpose of a Transco as it relates to capital allocation. And I'm sorry, just finally, the question I just asked Mr. Burkholder, which why I believe all this is relevant, is that as Mr. Burkholder just testified, that delta in the revenue versus the expenses is or can be attributable to the distinction in capital allocation. And I'm going to have plenty of questions for Mr. Ali regarding the actual underlying need, but Mr. Bottler specifically discusses something different. And I would ask if we could take a few minutes for you to look at Mr. Bottler's answer there on 36 or on 37 and see if there's another witness that was available in this case that can specifically speak to that, given Mr. West's push to Mr. Burkholder to now that there's nobody available to discuss it.
You know, with all due respect, apart from the fact that a few minutes may not be sufficient to sort what you are indicating out, the present case that we have before the commission for approval of settlement and the testimony of Mr. Burkholder refer to things that are occurring in the present, and this is a case that it's more than a decade old, and certainly information it's tendered, as the witness has recalled, about the general purpose of the Transcos, both questions that have to do with the needs in the system and the related allocation are the subject domain of Mr. Ali, who can speak to the timing and the need of those. And then the, relative to capital structure, which, if I may, I'm not entirely sure that the Transcos are directly related to that, but to the extent that they were, a question about capital structure for Kentucky Power would be directed to Mr. Messner.
And
If I may,
just real
the
quick, testimony related
Yeah.
to the relative financial shape of a utility as it relates to a parent's allocation of capital based on that financial shape. And which witness would that have been? Because it's my understanding from Mr. West that was Mr. Burkholder, because that was the question I was asking Mr. Burkholder.
Oh, I'm sorry, Your Honor. If you are talking about the ability of utility to attract capital, that would be Mr. McKenzie.
Yeah, that's not what I'm saying. Specifically, AEP's allocation of capital to Kentucky Power as its parent company.
Yeah, relative to the needs, that would be Witness Ali. Relative to capital structure, that would be Witness Messner. Relative to the points of the decisions to make investments in Kentucky Power, that is, I would say Mr. West probably it's the most appropriate, specifically related to the decision to go forward with particular projects and the financial strength of Kentucky Power.
Is it the allocation of capital, as I understand it, to Kentucky Power is actually not in Kentucky Power's authority? Is that legally? I don't know. They can't force somebody to. I'm not asking you all to testify, but this is an AEP issue at the end of the day. Is that my understanding?
I mean, I believe that's correct, not
Okay.
being a corporate finance expert and not being part of the finance organization within AEPSC. And respectfully, this reflects to me the underlying issue with this subject and its relevance to this case. The question of the parent's allocation of capital to Kentucky Power really has not been a subject of any discovery in this case. We're not on notice of it being an issue in this case. It's not been an issue in any of the company's prior rate cases or in any other utility rate case that I'm aware of in the Commonwealth. And it's not relevant to the company's cost of service, which is the subject of this proceeding.
Ms. Blinn, respectfully, that's the primary basis for your DRR, for instance, is exclusively to attract additional capital to make additional investments to improve reliability. That's the testimony of Phillips and Blankenship.
And Your Honor, Mr. West spoke about the IRC process and how Kentucky Power specifically raises capital or requests capital from the parent to fund and finance projects like the DRR projects. I believe the record also reflects that a primary purpose of the DRR is not necessarily or solely only for capital attraction, but for the company to be able to deploy capital more quickly to address those reliability issues than it's able to do through base rates given its financial condition.
This is not an opportunity to argue their specific point.
I understand, Your Honor.
You told me that your argument was that capital attraction and capital allocation was not relevant to this case at all, nor has there been any discovery propounded on the issue. That is not the case. That is absolutely false.
With respect, Your Honor, capital allocation as to distribution has been a subject of this case. How AEP chooses to allocate capital as between a Transco in Kentucky that can no longer make investments in Kentucky and that we've committed not to make investments in, and as between Kentucky Power has not been a subject of this case.
So I'm going to continue my questions, but I'm going to, insofar as any of those were objections, overrule them. That I'm going to ask you real quick, Mr. Burkholder. Going back to the example we gave, if Kentucky Power invested more in its transmission system than it paid, do you have any reason to believe that Kentucky Power, do you have any reason to believe that Kentucky invested less in its transmission system since 2012 than it would have had AEP Kentucky Transco been approved as a utility.
I do not have reason to believe that.
Okay, do you have a reason to believe that's incorrect?
I don't have knowledge, as I've said, on the investment practices of Kentucky Power since 2012 or more recently.
Okay. Do you know which states the capital, let me say this. You still have that EEI document, page 44 with Transco rate bases?
I do. There's a lot piling up here.
That's okay. A lot of paper.
So you said page 44
Yeah.
of the EEI document? Okay, I'm here.
Okay. Do you know whether, do you know what the Virginia Commission did relative to a request for a Transco in Virginia?
I am generally aware that the Transco was not approved in Virginia.
Okay.
I wasn't involved in any manner or have any kind of further knowledge of any specifics there.
Okay. That is perfect. I don't need that one now. Okay. There's another document. There are a lot. I know you just said they were piling up. That's great, Ms. Tennessee. That'll be fun. You've got another document, which is the final order in that case in which we were looking at the brief earlier in 2011-42.
The Kentucky case?
Yeah, the AEP Kentucky Transco case, 2011-42.
Your Honor, just to clarify, are you referring to the document that was number 5 in the list?
Yeah, I didn't even number them, but it's the 2011-42. It's about a 13.
Okay, does it say
13-page order?
Case number 2011-00042 and then order underlined? Okay, I have that document.
Yep, and at the bottom, the footnote 1 is Kentucky Transco application Act 2.
I see the footnote.
Okay, great.
yes.
On the second page of that commission order, it talks about the background. Do you see that?
Yes, the top section is background.
Okay. I'm gonna read this. Tell me if it's wrong. Parties intervening in this matter are the Attorney General of the Commonwealth of Kentucky and the Kentucky Industrial Utility Customers, Inc. Neither party filed testimony or a post-hearing brief. The hearing in this matter was initially scheduled for June 21, 2011, but was canceled, and Kentucky Transco was required to file supplemental testimony after it had filed press releases regarding AEP's plans for adding new transmission facilities in Kentucky, and after the commission became aware of the publication of statements by AEP officials concerning AEP's possible divestiture of Kentucky Power. Kentucky Transco and Kentucky Power addressed these issues in supplemental testimony, and the case was heard on October 19, 2011. Kentucky Transco filed its post-hearing brief on November 18, 2011. By order dated March 22, 2012, the commission directed Kentucky Transco to provide additional information and file testimony by a consultant whose report on investor perceptions of transmission-only companies was presented in support of its request for a CPCN. Kentucky Transco submitted the additional information and testimony of its consultant on May 6, 2012. The record is complete, and this matter now stands submitted for a decision. Is that what you read?
Yes.
Okay. The footnote after CPCN, footnote 2. Do you see that at the bottom?
The footnote on page 2, the footnote 2?
That's right.
Yes.
It says Miss Julie Cannell, a financial advisor, authored a report on investors' views of AEP's formation of Transcos. She had not been presented as a witness, but her report had been filed as an exhibit to the testimony of one of the witnesses who appeared for Kentucky Transco at the October 19, 2011 hearing. You see that?
Yes.
Okay. Kentucky Power, AEP, Kentucky Transco, and Kentucky Power filed Ms. Cannell's testimony. And as I read it, the testimony indicated that, I understand from the testimony that Ms. Cannell was initially contacted by you to do that white paper. Do you remember that?
I remember that statement from a couple hours ago. I remember that the company that AEP engaged with an external advisor. I remember that was Julie Cannell. I certainly don't remember the phone call reference to initiate that, but I generally recall that a financial advisor, an outside expert was engaged to prepare perspectives on the Transco strategy. I do recall that in general.
Okay. And I was just really asking, do you remember contacting Ms. Cannell, not even actually the substance of the contact?
That certainly may have fallen within the scope of my duties at that time.
Let me withdraw the question.
Yeah.
In the context of all of this, did you have interactions with Ms. Cannell?
I believe that I did.
Do you know if you ever came across or you ever shared that resulting white paper?
Did I share the white paper?
Was it ever shared with you? Did you ever have it in hand?
I believe that it was.
Okay. Okay. So that $50 million delta between AEP Transco revenues and or AEP OAT LSE expenses and OAT revenues. What do you ascribe that delta to?
I describe that.
I'm sorry, ascribe. Why is there such a big difference between the amount that Kentucky Power is paying for LSE OAT expenses and the amount that it's receiving in the associated revenues?
Because the revenues and expenses are sort of fundamentally independent matters. The revenue represents the compensation that Kentucky Power receives as a transmission owner for providing wholesale transmission service within the PJM construct. In contrast, the OAT expense represents what Kentucky Power pays for receiving wholesale transmission service, for using the PJM transmission system, and that access to the PJM transmission system that provides is what provides Kentucky Power with all of the benefits of participating in the broad footprint and robust markets represented by PJM. And so what I'm saying is those are two independent matters, and so that is primarily what I attribute that difference between those two amounts to be.
Is it your testimony that the PJM LSE OAT expenses scratch that. The increase in the PJM LSE OAT expenses that Kentucky Power is incurring is related primarily to the increase in investment throughout the AEP East transmission system. Wouldn't you agree?
And that level of investment is directly attributable to the needs on the transmission system that Witness Ali can describe, and the benefits of those investments that are generated for customers who use those transmission facilities.
So was that a yes and or just an and?
I'm sorry, could you say that
Well,
again?
so I asked a question and you started the answer off with "and." So I'm
Okay,
still trying to figure out whether
I
you
apologize.
agreed with my, I'm sorry, I'm still trying to figure out, did you agree with my primary question?
I hate to say this, could you repeat the question, please?
Yeah. And it'll help if you answer the question that's asked and not the next one.
Okay.
Is the PJM LSE owed expense and the increase of that expense that Kentucky Power is observing since 2014 to 2023 attributable to the increase in transmission investment in the AEP East transmission zone?
Yes, I agree with that.
Is the difference between the AEP East, is the difference between the is the reason that the AEP East, sorry, this is too many,
That's okay,
too many acronyms. Is the reason that Kentucky Power's LSE OAT expense is increasing faster than its LSE, or than its OAT revenues, is because there is a relatively greater investment over the last 10 years in the transmission system of other transmission owners in the AEPE system than proportionally Kentucky Power's transmission system.
I agree with that statement.
Would you agree that on a 1 CP or a 12 CP basis, the allocation, would you agree that there is not a significant difference between what the 1 CP and 12 CP allocation on average over the years 2014 to 2022?
So referring to the Kentucky Power Exhibit 2, over that period, the difference seems like it ranges from about minus 1.2% to maybe a positive 0.8%. And I think that does represent a material difference between those. And as the analysis I've tried to show, it certainly shows that the 1 CP is considerably more volatile.
Let's look at this. What I'm really trying to ask is, you have on 6.8, you have that in front of you. I'm sorry, Ms. Glass needs to come. That's okay. You've already made the trip here. We're gonna on 6.8, you've got those Kentucky Power expenses there on line 16, directionally the way they're going. You see that?
I do see the Kentucky Power expense on line 16.
Do you know directionally what the Kentucky Power revenues have been doing over that time period?
I do not.
Okay. So I'd like, as a post-hearing data request, if you could provide us the revenues by year, the same way you provide us those expenses, the revenues for 2014 through 2023 of the amount that's included in your page 10 of testimony, the same amount represented as OAT revenue.
Okay.
Would you be able to do that? That's information you have?
I believe so.
Okay, great.
Mr. Chairman, at the next best possible opportunity, I was wondering if we might take a break. We've been going for a couple hours.
I have just one or two more questions,
That's
and
fine.
we'll take a break. Thank you, Ms. Glass. Let me ask you this way. If, looking at 6.8 and looking at the 1 CP allocations here, would it have directionally changed the cost incurred by Kentucky Power at PJM LSD expenses?
I believe the answer to your question is the averages are pretty close, with the 1 CP being slightly higher. And so I believe, subject to kind of looking at this, that the implication of that would be that the 1CP allocations would have been slightly higher on average over the time period.
Okay, which is consistent with your response earlier. The reason Kentucky Power has a higher PJM LLC owed expense directionally or on a basis over the last 10 years is because of the increase in the underlying revenue requirement. Is that right?
That is a factor, yes, for sure.
It's just to round it out here. It's, would you agree it's not a matter of how you slice the pie is getting bigger? The revenue requirement pie?
Yes, the main factor is the level of investment over the time period.
All right, at this time, Mr. Garcia, do you have a comment on including the EEI exhibit as a hearing exhibit?
What about the pages that were used during the hearing, not the entirety?
Yeah, Your Honor, if I may, the document that we have been referring to, we have only been referring to some specific pages. If the commission wanted to identify those specific pages, I think that those have been discussed in the hearing. The rest of the document we have no foundation for.
Okay, so I hate that we're here because the preference I've heard in previous, I think I've received objections from you all before where somebody tries to only provide a portion of a document to introduce an evidence so that the rest of the document wasn't there for your all's benefit.
Your Honor, we have not had an opportunity to review the documents that have been provided here, and the document that you are referring to was not something that we had noticed that was going to be introduced into the records. So if I may, we probably would benefit from having more time to respond if you need a response right now about the EEI document specifically, and the other documents definitely
So let me finish here. I have no intention of actually moving any or putting any of these into the record. That's why I'm asking about the EEI document itself.
Understood, Your Honor.
So
If we're about to
Are
take
you-
a break, Your Honor, could we discuss over the break and pick it back up after the break?
that'll be fine.
Thank you.
All right. Do you have any questions, Mr. Booker? Okay, we'll take a recess until, we'll just take a 5:35, we'll take a 15-minute recess, and come back for Mr. Garcia if you have a redirect to Mr. Burkholder.
And before we go off the record, Your Honor, just one other administrative item. Does the commission expect that we're going to, and it's just really more for scheduling and witness communication, continue such that we will get to witnesses Messner and Niehaus this
I
evening?
think we'll get to everybody tonight.
Okay, thank you.
All right, we'll take a, be in recess for 15 minutes. Okay, we're back on the record in case number 2023-00159. Mr. Kurtz, we talked earlier, I said that my questions for Mr. Barron would depend on the answers from Mr. Burkholder. Pleased to say, pleased to say for Mr. Barron, I'm not sure about anybody else, but pleased to say for Mr. Barron that he can be dismissed as long as there's no objection from the other parties. Anything, counsel?
No objection.
Thank you, Your Honor. He's watching on TV right now, and I'm sure he's very happy.
Be very happy. All right. Mr. Garcia?
Yes, Your Honor, we also discussed, and the company is not going to raise an objection about the admission of the EEI document.
Okay, we'll include that in the record as Commission Hearing Exhibit number 1, marked as such.
And it will be the complete document, just to clarify?
Yes, the 66-page EEI 58th Annual EEI AEP document.
Thank you, Your Honor.
Mr. Gary?
Your Honor, if I may, sorry. Before the break, the chair indicated that he plans to finish with the witnesses this evening.
Yep.
Is that with regard to the company's witnesses or with regard to all witnesses?
Absent unforeseen circumstances, that would be the hearing.
Okay. With regard to joint interveners witness, Mr. Cummings,
Yeah.
I'm not sure that he will be available this
So-
evening.
So let's go ahead and, I'll get to that in just a second.
Okay.
Joint interveners, witnesses, counsel, do you have questions for the interveners witnesses?
Not for Mr. Cummings. I think we had one for Mr. Collin, or Blaine Collin, yes.
Yeah, just for Mr. Collin, but not for the joint interveners.
No.
Okay. I only have questions, for, I'm going blank, for Andy. But I think, yeah, Mr. Greenhall, thank you. But I think, I was actually, considering this at lunch, I think that it may be best to ask that as a post-hearing data request. It's a clarification around, his testimony regarding, the solar garden, testimony. Do you all have any objection with us taking that up as a post-hearing data request?
No, Your Honor.
So with that, is there any objection to, excusing, joint interveners witnesses?
No.
No.
Thank you very much.
Mr. Garcia?
Thank you, Your Honor. Just a few. Mr. Burkholder, you were questioned about the relationship between the OT expenses that Kentucky Power is charged and the levels of investment in the AEP. So do you recall that line of questions?
Yes, I do.
Does load have an impact also in what those levels of OT expenses are?
Yes, it does.
And would you explain a little bit how load affects those OT expenses?
Absolutely. Maybe it's best to kind of go back to the pie analogy. The load share represents the size of the slice. So to the extent that the load share of Kentucky Power would go up or down, representing the sort of relative peak load of Kentucky Power versus the other affiliates in the zone, that could very significantly impact the future level of transmission expense allocated to Kentucky Power.
If you know, to discuss questions about the levels of investment and the need and the possible relationship with load, would that be a question for you or for Mr. Ali?
Questions regarding the need for investments would be best directed to Company Witness Ali.
Okay, and then one last question just to clarify. The OT expenses and the OT revenues that you have been discussing, those are regulated, the allocations of those costs are regulated by the Federal Energy Regulatory Commission, FERC. Is that correct?
The allocation of those costs are regulated by FERC, yes.
Okay. Thank you, I don't know nothing further.
Yeah, I'm sorry, one other question got pushed to Mr. Burkholder. Mr. Garcia, I just want to ask, do you know if there's anybody at, in the 2017 case, if you've been listening, I was asking earlier, Mr. West, about, I was asking Mr. West about whether there was anybody at Kentucky Power that he was aware of that had a certain skill set or experience or expertise in transmission and wholesale transmission issues in PJM. Do you remember those questions that I asked him about that?
I generally do recall those questions.
You do or you do not?
I do, yes.
Okay, okay.
Sorry, do I need to speak up again?
Yes, you do.
Okay.
It's okay. You just get, comfortable is probably the wrong word, but you get a little complacent, I think, when you, not you. You get complacent here, you just start talking, and so it's.
I feel like I've gotten 5 minutes for roughing or something like that.
In the 2017 rate case, final order, the commission specifically discussed a couple things. One is on page 74 of that order, and I'm happy to give you a copy. I think council has a copy, but it just says, The commission strongly encourages Kentucky Power to recognize that it must make a determination regarding its participation in PJM that aligns with the interests of Kentucky Power and its ratepayers. And then separately, it said on page 54, the commission order said, regarding proposed transmission projects at PJM, the commission expects Kentucky Power to work through the PJM stakeholder process to protect its customer interests. Do you know, have personal knowledge of anyone at Kentucky Power with the experience or expertise to do either of those things?
I do not know the answer to that question.
You don't know whether you know anybody at Kentucky Power with that expertise or experience to do either of those things?
I'm not familiar with all of the folks at Kentucky Power, and so I don't know if there's anyone there kind of qualified.
Yeah, then let me ask you, do you know of anyone at Kentucky Power who is qualified to represent Kentucky Power, who has the expertise or experience to do either of those things?
I don't know anyone.
Can't think of anybody that you know could do those?
I don't know.
Okay, that's great. And is it your understanding that Kentucky Power is depending on AEPSC for that sort of skill set?
I think they are specifically counting on myself and the team that I work on to do that.
Okay, and then, well, and in relation to the proposed transmission projects at PJM, is that you and Mr. Ali and his group?
Oh, absolutely. So as it relates to specific transmission projects, that's without question the transmission planning team represented by Witness Ali here, who brings projects through the planning process at PJM.
Okay, all right. And I'll ask Mr. Ali as it relates to him, but I'm just, for what you do at PJM, it's you, not someone specifically at Kentucky Power, correct?
That's correct.
Okay, great. Mr. Garcia?
Just to avoid a misunderstanding, Your Honor, because Mr. Ali's and Mr. Buchholder's advocacy at PJM covers different areas, and I don't want you to ask Mr. Ali a question that would be for Mr. Buchholder. If I may ask just one. Mr. Buchholder, would you describe a little bit the type of advocacy that your team does on behalf of Kentucky Powers and other customers of AEP?
Certainly. So I am part of a small team that is engaged at every level of the stakeholder process at PJM, from working groups up to the highest level committees. And our role is to be, I think of us as kind of the eyes, ears, and voice of the AEP and its affiliates, Kentucky Power certainly, and AEP's customers, within that PJM process as policy changes are considered, as various matters arise at PJM. It's my team's role to assess those changes, understand how they might impact our affiliate companies, and then work with those companies to develop positions and advocate for positions at PJM. And that certainly does include kind of how transmission planning might work, how the planning process might work, how transmission costs is allocated, for example.
Thank you, Your Honor.
Thank you, Mr. Garcia. Is there any reason that Mr. Burkholder can't be excused? No. Thank you, Mr. Burkholder. Mr. Garcia, would you like to call your next witness?
Yes, Your Honor. The company calls Kamran Ali. Oh, Your Honor, if I may ask, can Ms. Khan be excused?
Ms. Khan can be excused.
Thank you.
All right, Mr. Ali, please raise your hand. Do you swear or affirm that the testimony you're about to give is true and correct without any perjury?
Yes, I do.
All right, please have a seat. State your name and business address for the record.
Cameron Ali, 8500 Smiths Mill Road, New Albany, Ohio, 43054.
Mr. Garcia?
Thank you, Your Honor. Mr. Ali, did you, actually, before I ask you whether you did, Would you please state your position and employment for the record?
I am currently employed by AEP Service Corporation as Vice President of Transmission and Telecom Planning.
And in that capacity, do you have responsibilities relative to Kentucky Power?
Yes,
Do you provide services for Kentucky Power?
yes, I do.
Okay. On behalf of Kentucky Power, did you cause direct testimony and discovery responses to be filed in the record in this case?
Yes, I did.
And were those prepared by you or under your supervision?
Yes, they were.
If I were to ask you the same question, do you have any corrections to your testimony or discovery responses?
No, I don't.
If I were to ask you the same questions today, would your answers be substantially the same?
Yes, they will be.
And do you adopt your testimony and discovery responses as your evidence in this case?
Yes, I do.
Your Honor, the witness is standard for cross-examination.
Counsel?
No cross.
Good afternoon. Good afternoon, Mr. Ali. Do you all have those? I'm going to provide you a document. I'm going to guess it's a document. It's a portion of a document. It's a representative portion of a document that I believe you may have personal knowledge of. These are the title right. These are a selection of submission of supplemental projects for inclusion in the local plan. And actually, let me, you give that one to the, tell you what I'm gonna do, Mr. Ali, real quick, I'm gonna give this to send this over to Ms. Tussey so that she can bring it up on the screen, the entire document. Just take a second to look at them. This is actually, I'll represent to you. These are pages 10 through 25 of the PDF. Submissions of supplemental projects for inclusion in the local plan by AEP. And we'll bring this up, the whole document up in a second so you can see it. But this reflects the revision history as of November the 29th, 2023, where it's version 12 and slides number 177 to 181 were added, which represented supplemental project 3006. And if you could just do the very last page real quick, Ms. Tessie. Do you see that, Mr. Ali?
So, Your Honor, I do see that on the screen, but not in.
Oh,
in
yeah,
the
yeah, I'm sorry. And this
document I
is,
have.
what I've handed you is just pages 10 through
Sure.
25. They're just a couple of pages, and I just want to, per your testimony about the attachment M3 process, it would be handy to have an illustrative example here so you can walk me through what it was exactly you're talking about in your testimony in this case.
Sure.
As a visual matter.
Your Honor, if I may, just to clarify, so
Yeah.
we don't have a paper copy of what has been presented in the screen?
That's right. What you have is pages 10 through 25, which are going to be the only pages I'm going to reference. I just want to make sure Mr. Ali is comfortable with the fact that this is the AEP local plan submission in its entirety, and it's the current version, so that there's not a concern that it's a previous one or an outdated one.
Okay, just reflecting in the record that the witness does not have a complete copy of the
Yeah,
document.
he has 10 through 25, and
Thank
those
you.
are the pages I'm going to be referencing. So you go to page 10, please. Page 10 is, do you see AEP 2021-OH030? That's the need number.
Yes, Your Honor, I see
Okay.
that.
All right, so I'm going to kind of do a short version of your testimony, make sure I have it right. The transmission owners that are located in PJM have a process, a 890 FERC Order 890 compliant process called the Attachment M3 process for supplemental transmission projects. Is that correct?
Yes, that is correct.
As part of that process, you all have an annual assumptions meeting, is that correct?
Yes, that is correct.
And that's coming up soon?
Yes, it is typically end of the year or beginning of the year.
For the next calendar year, correct?
Yes, that is
Okay.
correct.
And then that assumptions meeting, can you, at least from the perspective of AEP, just at a high level, tell me what AEP as a transmission owner, its intent is as a assumptions meeting each year?
Yeah. So in essence, Your Honor, there are three types of projects that are reviewed and in some cases approved by the PJM RTO. One category is the baseline projects, and these projects are projects that are addressing criteria violations. So what I mean by that is, NERC has a standard, a criteria that, for example, states that a given facility, if it's taken out of service, it doesn't cause capacity constraints on other facilities to avoid outages and cascades. So the baseline projects are projects that are approved by PJM, and they're reviewed and approved by them. So that's one bucket of investments and types of projects. The other bucket is network upgrades. Network upgrades are projects that are necessary to interconnect generation to the grid, or in cases of existing generation, if they're modifying their interconnection point or they're expanding their capacity, then whatever needs those generators drive on the grid, those needs are addressed through network upgrades. Network upgrades are also identified by PJM in collaboration with the transmission owners, but most of the cost, almost all of the cost for network upgrades is assigned to the generators who are causing that investment on the grid. And the third bucket is the supplemental projects, and supplemental projects are pretty much the biggest bucket of investment or drivers needed to ensure safe, reliable, and affordable grid. Pretty much everything else falls into that bucket. So any new customer connections are going to be part of that. Contractual obligations are going to be part of that. If there is a compliance mandate, to for example, have dual relay system, that is part of that. And also transmission owner-driven investments are part of that. So the M3 process, it pretty much facilitates transmission owners taking that investment through the stakeholder process. The first step, like you said, in that process is assumptions. And what we do on a yearly basis, we put out there the criteria, the standards, the assumptions that we as transmission owners utilize to identify the needs on our grid, so that those needs can be addressed to ensure a safe, reliable, and cost-effective grid for our customers. So that is the first step in that process, Your Honor.
So for the next year, each year, calendar year, at the assumptions meeting, you all present to stakeholders, to the public, the basis in which you're going to be identifying needs and solutions for that next year.
Yes, Your Honor, just to be clear, we put out the the assumptions, criteria, standards that we would use to define needs that are internal, not the external ones, right? Those could come, externally from customers. It can happen as a result of a standard change outside, like a NERC standard or something like that. So these are for internal needs that we have, some control in identifying, if you will.
Your criteria, that's
Yes.
the term you all use, right?
Yes.
Criteria.
It's criteria, assumptions, guidelines, standards, all those things.
All right. So, so then after you have an assumptions, then you use the assumptions that you've provided to identify needs on the transmission system, right?
That is correct.
Okay. And then once you all have identified needs through the M3 process, you bring those to stakeholders. Is that correct?
Yeah, yes, that is correct. Every single need has to be brought to the stakeholders.
Okay. And the needs are supposed to be brought before the solutions are brought, correct?
Yes, in almost all cases, that is correct, and that is the practice. Now, there could be some emergency situations, like a failure. In those cases, we may bring the solution and need at the same time, but I think our stakeholders understand that in those cases, we have to restore service very quickly. One thing I do want to mention, Your Honor, since you mentioned this, we bring topology changing needs to the stakeholder process. there are needs that are non-topology changing, that are not brought to the stakeholder process because they're very minuscule in scope. For example, adding fiber to a transmission line, which is going to provide shielding as well as communication. Well, when we say we're going to rebuild a transmission line, it goes kind of without saying that it's going to require a shielding wire and it may have fiber on it for communication. So the non-topology changing needs are not explicitly brought to the stakeholder process. It's only the bigger topology changing needs.
Is that that's because it's not a requirement under Order 890?
It's not, and again, as you mentioned, the M3 process is a FERC-approved process, and it is pretty much clearly spelled out as to what are the types of needs that we bring to the stakeholders.
Yeah, I guess what M3 is your process to comply with Order 890, and non-topology changes, you're saying, are not necessary to be brought through that process.
Yes, it is, like I said, it is understood that those investments are going to be part and parcel to the bigger investments that we're making.
Okay, so the first page, there are 10 of your all's, sorry, I skipped a step. Okay. After you've identified the need or after you've identified the need and you've presented that to stakeholders, absent the exigent circumstances you talked about, then you all go back and find a solution. You bring forward the solution with notice requirements, all the different rules that apply to M3, and then you all can choose the solution and include it in the local plan. Is that correct?
Yes, Your Honor. So PJM includes that in the local plan. Of course, we would take that solution through the process like you just explained. And then once that requirement is fulfilled, then all the solutions that were reviewed in the last quarter, they are added by PJM to the local plan.
Okay. The local plan is the topology that PJM uses as the base of its subsequent regional transmission expansion plan, correct?
The local plan is really the modeling changes to the grid that PJM would keep up to date every 3 months to ensure it has accurate models. And those models are not only used for future expansion analysis like the RTEP, but also for, operational reasons in cases that those projects are getting completed within that year.
Right, but I appreciate the full answer. I'm just trying to make sure I have an appreciation that RTEP, that RTEP I was asking about, you take the local plan, you change the models according to what you all, the transmission owners, are planning on doing at the supplemental level, change the models according to what the solutions are going to be, the changes are going to be, and then that's what they use going forward, including for the RTEP, which is the driver for, or how they plan for baseline projects. That one of those other 3 buckets.
Yes, Your Honor, that is correct. There is one additional step that PJM undertakes, and that's called no harm analysis. So in essence, when transmission owners are proposing supplemental upgrades to meet their obligation to serve, those supplemental projects are then analyzed by PJM to ensure that they don't cause any harm to the grid. In essence, they're not inadvertently overloading or exceeding capacity on other facilities. So that step is taken before that is included in the local plan.
Said differently, just want to make sure I have an appreciation. They ensure that the changes from the local plan don't violate their planning criteria. Is that right?
And that of the transmission owners, and that of NERC.
So I've just, okay, and then so you all, 4 stakeholders as part of M3, have that local plan, and you all keep it out there as a version for public consumption in the form that's up on the screen, right? That's what the 128 pages is the current version of the local plan?
Yes, Your Honor. That is the current version. Like I said, it gets updated every quarter.
Yeah, and that's what we saw on the last page, that version 12 is what this version is, right? Okay, so I just pulled out a couple of pages, completely random. I didn't realize at first that this was 182 pages, so that's why I just stopped page 25. So let's look at this first one here, just a representative document, or a representative project, AEP 2021-OH030. It's in, I don't know, they'd probably say Finlay, but in Kentucky we'd call that Findlay, Ohio. Do you see that?
Yes, I do.
Okay, and then so on the fiction, yeah. So we've got it's submitted, the process stage. It's put in the local plan. right? On 1/10/2023.
Yes, that is correct.
Yeah, and then previously presented, the solution was presented in August of 2022, and the first needs meeting was May of 2021, and those are the meetings we talked about earlier, right?
That is correct.
And you have your project driver, those words there, they're capitalized words, equipment, material, condition, performance, and risk. You would agree those drivers are presented each year at your assumptions meeting and are part of those assumptions documents, right? That explain further what those possible drivers might actually be.
Yes, that is correct. And by the way, Your Honor, also, I'd be remiss not to mention that these are categories of drivers that all the transmission owners have adopted, right? So we have really 4 categories that we use for supplemental projects. One is the equipment, material condition, and performance risk, which means, we look at the condition of the assets, we look at their performance, we try to forecast the risk those assets pose to customers and reliability in the future, and prioritize and address those proactively. The other category is operational performance, as to things that we are seeing in operations that maybe the criteria violation analysis doesn't capture, because there may be a lot more outages in real time than what our analysis 5-6 years ago had predicted. And then you also have customer-driven projects, and there is another category for other investment that don't fall neatly into these 3 buckets.
Okay. Then you also have the specific assumption reference. Those are, I say new, going back to the original assumptions, but those are fairly new, where you all have these pre-1930s lines that over time, your assumptions meeting, you all basically said, look, we're internally prioritizing this. This is a specific assumption. That's a change from those first couple of assumptions meetings, right?
So that is partially true, Your Honor. And so really the AEP assumptions document generally covers that attributes that we are looking for. For example, I said performance, as to how many outages a given asset has accumulated over its life, and how is that trend changing over time. We look at the condition when we do inspections on these lines and these assets out there on a regular basis, as to what is the actual condition of that. Is it deteriorating? Are there spare parts available? Is my vendor even supporting that type of equipment anymore? And then based on that, we draw the risk profile for that. So that right there is what we do in general for all these assets. But then there could be specific needs that we may identify for certain assets that require a lot more detailed conversation. So in those cases, what we would do is we would put a special document together just for a specific piece of equipment, come back to our stakeholders, like in case of these 1930s lines. We were seeing a lot of grillage issues. We were seeing, conductor that had pretty much all the aluminum, deteriorated and strands broken. So we took the specific, we got into a lot more specificity. I'm going to get it wrong, but I think you guys got it. We got into a lot more specifics with those customers in the stakeholder meetings as to what is it that, that is needed when it comes to ensuring safety and reliability of that particular type of asset.
Is a good example of that those double circuit steel lattice towers with vertical insulators?
Your Honor, there are a lot of them, so I need to qualify that. What do you mean by that?
So I just have my understanding from your all's assumptions is you all have concerns about the steel lattice towers built prior to 1930?
Yeah, pre-1930s, because there are lattice towers that were post-1930s. Those, at this point at least, we don't have what I would call concern with all of those lines. There may be some specific ones in certain areas, but the pre-1930s, we're seeing pretty much the entire population of that. We're seeing significant deterioration with that.
So then you got at the bottom, you go on to give examples. So original construction date, that's not, all of it goes back to 1940 necessarily, but that's the original construction date for the facility, correct?
That is correct.
1924. Then condition summary. So when you talk about condition as a project driver, you now give a summary of the actual condition, the issues. Here it says this facility, just as an example, currently there are 44 structures with at least one open condition, which relates to 22% of the structures on this line. Could you, just for a second, explain what an open condition is?
Yeah, that's a great question, Your Honor. So open conditions are conditions that, we put them, and again, it depends really on the type of equipment. For transmission lines, We put them in A or B categories, and even there are subcategories for A, it's A1, A2, A3, and then Bs also have subcategories. And what we are trying to assess is, really A1 category for us is that something's already broken. So meaning the line is already on the ground, it's a emergency, it's a restoration. A2 is something that we know can very quickly become A1 if the wind was blowing a certain speed or there was another type of an event. And then A3s are ones that we may have a few years, couple of years, 2 to 3 years before they become A2 or A1. So those are the open conditions we are logging. And then we are looking at this asset, and in this particular case, 44 structures, which is 22% of the line, had unique conditions on the line that need to be addressed, otherwise we'll have an imminent failure.
Yeah, so that's what it used to, you guys used to just say we had this many open conditions. Now you identified that it's not just all the open conditions are on one pole.
Yes.
How many of the poles or
Yes.
how many of the towers actually have those?
Yes, yeah, we're getting a lot more granular, Your Honor, I mean, based on feedback we're getting from all stakeholders. So again, before we would just put, there are 44 open condition, and stakeholder wanted to know how many of them are impacting individuals' towers, so we're getting a lot more granular with that information.
Yeah, I think I personally asked that question about a dozen times until they started showing up in the slideshow. So you guys provide these high-level overviews. On the next page, you give additional information, customer impact, risk. And then on the third page there, page 12, you actually have a solution which shows some of the engineering existing and proposed, correct?
Yes, Your Honor, what
Okay.
what we're seeing on the slide 12, page 12 of what I have here is the solution to remediate the issues that we have uncovered.
Okay. All right, so that's the sort of primary questions. We've got just one representative random project here, okay? And this is what you're talking about in your testimony, right? The M3 process, right?
Yep.
Okay. How do you prioritize? I mean, there are thousands of needs, I assume, at any time across the entire AEP East transmission zone that need to be addressed. Does the assumptions that you discussed in your testimony, the assumptions you provided during that meeting, did they identify how you all prioritize those needs?
I mean, at a high level, they do, Your Honor. At the end of the day, our prioritization is data-driven. I mean, at the, there are, like I said, there are needs that are externally driven that we as the transmission owner, Kentucky Power as the transmission owner, doesn't identify. For example, a new customer wanting to connect to the grid, that's an external driven need. Let's say we had built a transmission line 40 years ago in public right-of-way, and now the road needs to be expanded. That's a contractual obligation. It's an externally driven supplemental need. But when it comes to the internally driven needs like modernization, aging infrastructure, we do prioritize that. And that prioritization is based on performance, condition, and risk. We look at the historic performance of that asset, how it was performing. We look at the actual condition of that asset, the condition it is in today. And then we look at the future trend and the future risk that the asset poses to the customer as well as to the system. And then we prioritize based on that.
Is that prioritization exclusively formulaic, or is it also qualitative?
Your Honor, there is definitely some engineering judgment that goes into it. Like I said, in the list before this particular facility, there are a lot of pre-1930s lines that we got. And, we would definitely use the data to prioritize them, but there is a possibility that two lines may have very similar data. But then we will rely on our engineers, we'll rely on our field services to tell them if we can only do one this year because of an outage constraint, we can't take outages to take both lines out of service, then we will definitely rely on our engineering judgment to make those decisions as well.
How does the financial health or capital allocation of a particular utility impact the timing of addressing needs?
Your Honor, so for me, what I'm responsible for as the Vice President of Transmission and Telecom Planning is, number one, identifying the needs on the grid that if they are not addressed, they would pose reliability or safety risk to our customers. I come up with solutions in working with all stakeholders. I ensure that we have transparency. All this information, like you mentioned earlier, it goes through a stakeholder process, so everybody has eyes on the information that we're sharing and plans that we got. And then I prioritize that investment based on that performance, condition, risk. And then I discuss that with the operating company leadership, in case of Kentucky, that's Cindy and Brian, to determine as to how much we can do from a budget perspective. So that's a lot of collaboration that takes place there, but at the end of the day, it is the decision of the utility, Kentucky Power, as to how much investment in a given year we can make. And then we can prioritize the list that can be accommodated within those bounds.
Do you solve for the solution if I'm just, based on your experience, if you identify the need and you have that conversation with the utility, if they know they're going to be capital constrained, or they know that, they've got this other thing they need to do, and you tell them, this is the problem, but it's something that can be resolved. Well, let me ask you. Is it ever the case that you identify, well, look, this is a need, but solving it can be delayed a number of years? It is not necessarily an emergency or a pressing need. Did you ever have those come up?
That always goes into our prioritization. I mean, we always are prioritizing needs that should be addressed right away versus needs that are farther out. The project that you are just sharing that we're going through is a project that is going in service in 2026.
Okay.
But we have taken that need through the stakeholder process in 2020 so that we can give the transparency to our stakeholders. They understand what's coming. We can give the transparency to, our finance and budgeting organizations. So again, all this portfolio is planned well ahead to be able to optimize a lot of that.
So, you deal with transmission, transcos, and opcos, both, correct?
Yes, that is correct.
Okay. And when you identify the need, as a general matter, is it a need on a transmission system? I just make sure I understand the whole. You work in lots of states, so when you identify a need on the transmission system, is it effectively at that time, at least for the last 10 years, a need on the opco's transmission line?
Your Honor, for me, at least in the models that I utilize and the data that I analyze, there is no distinction between Transco assets or operating company assets. It's all grid, and we're using the same metrics, same methodology, same criteria, same standards, same assumptions to assess the adequacy of that grid. And then once we understand and once we know that there are challenges or inadequacies that need to be addressed, we come up with the most cost-effective solution in working with all stakeholders, including our, external stakeholders, including our customers that are served from those facilities. Once the solution is identified, and of course we take them through the stakeholder process, as you know, along with the alternates, it's really at that point that it is determined based on the project selection guidelines as to which components of that solution may be funded by Transco or which components of those solutions may be funded by the operating company. And again, in some cases, the operating companies make that decision. Also, for example, in Kentucky, as you know, no more investment going forward is going in Transco, so pretty much all of that goes in Kentucky Power Transmission. Similarly, in Virginia, there is no Transco, so everything goes in the Virginia transmission. So again, I am indifferent to that, if you will.
Yeah, and I'm not saying that, a need is, I understand for your testimony effectively, if I had to boil it down to a sentence, a need is a need. But if a need is on a transmission facility owned by this whoever, versus a transmission facility, a need on a transmission facility owned by this person, by definition, do you go to a different person with those two needs to start talking about addressing those needs?
So, Your Honor, I think maybe I need to expand on your question a little bit so I can understand. So, are you asking me that if the need is in Kentucky, I go to a different person to discuss that versus if it's in Indiana, Michigan, for example?
Well, let me clarify the question. So, Ohio Power Company is big. It's a good-sized utility, right? AEP Ohio Transco is also, has billions of dollars in rate base, right?
I'll have to check that, Your Honor, but I'll take you for your word on
Well,
that.
I mean, I guess what I really said, there's a lot, they both have a lot of transmission.
Yes, that is
They have a
correct.
good portion of transmission.
That's a
So
fair
like,
statement.
what's that?
That's a fair statement.
Yeah, okay, so they both have a lot of transmission. So if there's the same sort of issue on two different lines, they look the same. One is the Transco, one is an OpCo. Are those different people that you go and talk to, even within the same state, about those individual needs?
No, Your Honor, I mean, from a solution perspective, from a need perspective, like I said, it's the same standard, same assumptions, same criteria that we utilize. Also, from a solution perspective, our goal is to come with the most cost-effective solution. So it's not going to be different here if it's the same type of need versus, in another jurisdiction. Now, once the solutions are identified, the stakeholder process we have gone through it, it's all transparent, everybody knows about it. From a budgeting perspective, as to how much of that we are going to put in the pipeline, because, affordability is very important and it's very different for each of those jurisdictions. Absolutely, I got to work with the leadership of the operating companies to make that determination.
That's what I'm trying to have an appreciation of. If a transmission issue for AEP is in a particular state, is it as a general matter the leadership of the OpCo in that state that you're talking to about how that solution is you can go ahead and close out of this, actually, that's fine. Is it the operating company leadership that you're talking to, regardless of which AEP affiliate owns it, as a general matter?
No, so Your Honor, just to clarify that, so are you asking, do I talk to all the OpCos for a solution, or the
OpCo leadership
Yes.
in that state?
Yes, we talk to the OpCo leadership in that state. Every single transmission investment we're making in a given jurisdiction, at the end of the day, has to be approved by up to the president of that utility. So in case of Kentucky, Cindy has to approve those investments in our internal processes.
And so that would have been the case back, let's call it pre-2020, when AEP Kentucky Transco, what to do, where to put it, that was the call of Mr. Madison and previously Mr. Satterwhite.
That is correct.
Okay. So the page 13 is another one. It's a Kentucky one. It's Johnson County, Kentucky. You see that?
Yes, I do.
In a little place called Dewey. See that? Okay.
Yes, I do.
Again, you've got the when it was submitted, when the need was presented, when the solutions were presented, the problem statement, the solution was on the next page, and then there's a cost on the next page. Do you see that 2.98 million?
Yes, I do.
Supplemental ID. You see that?
Yes, sir, I do.
Project status, scoping, and then there's the engineering next to it. And then on the next page, there's another Johnson County project. And so these are all AEP slides, right? Branded.
yes,
I'm just talking about branding. I know you're not the marketing expert, but these are all like just AEP slides.
Yeah, the one that you have shared with me, Your Honor, these are all AEP slides.
Yeah, but I guess what I'm saying, when you all submit the slides you all use in the M3 process, is really I'm asking. They're just branded AEP slides.
Yes.
And you glean where they are, or maybe what company they refer to, just by the state that they operate in. Is that right?
Yes, that is correct.
Okay. And do you ever? Well, I know you.
Your Honor, if I may say something there, just to make sure I'm answering it fully. So if you look at the need number, that, at least for us, that is telling, and again, I know the stakeholders that are present in these meetings on a regular basis, they understand that. So you see it says AEP 2021 OH. OH stands for Ohio in this case. And then if you go to the next one, Johnson County, Kentucky, it says AP, which stands for Appalachian. So those do identify, I guess, where the investments are.
Well, that saves me a couple of the questions, but I guess guess it raised one with 13. Do you know why this is an APCO project and not a Kentucky Power Company?
Yeah, so Your Honor, the Appalachian region, at least from a PJM perspective, has Kentucky, APCO, Wheeling, and Kingsport. So again, for that reason also, we mentioned the state and the city so that we can distinguish between them.
Okay. So, you occasionally participate in, this is the easiest question of the night, you occasionally participate in retail cases as an expert, right?
As a
Like
witness,
these.
yes.
Here you are.
I do.
Yeah. And occasionally those are regarding CPCNs or approval citing authority for particular transmission projects, right?
Yes.
Now, you talk in your testimony between 12 and 13, you kind of put it to Mr. Burkholder, but he didn't say much on this front either, about how at the bottom of 12, transmission owed expenses are subject to FERC's oversight and are charged pursuant to rates on file with FERC and are calculated using a methodology that FERC has determined to result in just and reasonable rates. Are these projects projects, as a general matter, the transmission that you are doing here, are you at all involved in, let me take a step back. So first, can we have somebody turn the air back on, please? Thank you. 1 second, Mr. Ollie.
Thank you, Your Honor.
You're not the one doing all the work. All right. So, you participated as a witness in cases here regarding transmission, right?
Yes, I have, Your Honor.
And do you participate in those types of cases in other states in which AEP, the AEP East states?
Yes, AEP East and West states, yes.
Okay. Do you have an appreciation for the differences in requirements for building transmission in the AEP East zone across the different states? Like the regulatory approval required to actually build the projects?
Your Honor, maybe I'll put that as an understanding more than appreciation. Yes, I
Okay.
do have an understanding.
Yeah, appreciation would mean you might like it, yeah.
Okay.
But as a general matter, like a wreck and rebuild, you know what I mean by wreck and rebuild? A wreck and
Yes.
rebuild in Kentucky more than 1 mile would require CPCN, that general understanding. Like new transmission in Kentucky needs a CPCN. As a general matter, have you participated in many cases in like Ohio regarding building transmission that are supplemental projects?
So, Your Honor, myself, I participate a lot in the bigger cases, like rate cases. Earlier in my career, I did participate in a lot of CPCN, CCN filings. But my staff gets to do that a lot in jurisdictions. I don't get to do that as much as I used to in my past life, if you will. But to answer your question, each state has a different process. Of course, Virginia, Kentucky, Ohio, even West Virginia, we have citing process. Each one varies somewhat. Indiana, on the other hand, doesn't have a citing process. Similarly, the western regions are a little different. So yes, we do support those citing applications, and it is the transmission planning organization that supports the need in all the CCN filings pretty much.
Okay. And then have you experienced a distinction between those citing processes in states, whether there's a distinction between the requirements around whether an OPCO does a project or whether a Transco does a project?
To be very frank with you, Your Honor, no, I have not seen a big distinction as to how they are treated.
Okay.
I know in Kentucky it was a little different when we had the Transco because of the designation, but not the remaining states in the east.
Okay. So like, yeah, that's too much of a legal opinion. Is in your experience, Kentucky and Virginia similar with regard for requirements around transmission?
Your Honor, I mean, I guess that's in the eye of the beholder, right, in my view. I mean, I think there are some differences there. The requirements are different. what is needed information-wise is somewhat different.
So, have you ever met Commissioner Christie at the Federal Energy Regulatory Commission?
Yes, sir, I do remember him.
Have you ever heard him extol the virtues of transmission regulation in his great Commonwealth of Virginia?
No, sir, I don't think I've heard that.
Okay. Have you ever heard him talk about, well, so you and I were both on a technical conference at the Federal Energy Regulatory Commission, right?
Yes, we were.
And you remember Mr. Commissioner Christie's questions and comments as a general matter during that technical conference?
It's been a while, Your Honor, but I'm sure if you say something, I'll probably remember it.
Yeah, and the reason I ask is you talk here about, and you reference really Mr. Burkholder's testimony about oversight.
Yes.
Okay. As a general matter, does FERC do like need or CPCN proceedings similar to the way like the state of Kentucky or the Commonwealth of Kentucky or the Commonwealth of Virginia might for transmission?
No, Your Honor. I mean,
Okay.
not for transmission. That is regional and local in nature.
Same for Indiana. That's what you were referring to, right? They don't have a need process, a pre-review process before you build it. Is that what your statement was earlier?
So to clarify, Your Honor, Indiana, what I was saying is Indiana doesn't have a formal siting process, but that doesn't mean there is no siting. You still got to go through individual municipalities and cities and localities, and they have their own permitting requirements there. And again, at the end of the day, Your Honor, I think what I'm really trying to say here is that the transparency and the stakeholder review is a three-step process for us. One is upfront in PJM, where we are utilizing the attachment M3 process, which is a FERC-approved, FERC Order 890 compliant process, where we are taking assumptions, then needs, then solutions, giving stakeholders a lot of opportunity to ask us questions through the process. Then, of course, in some jurisdictions, whether they have a formal siting process or informal siting process, we have the interactions with our stakeholders and our regulators. And then finally, the FERC Formula 1 filing is where stakeholders get another opportunity to ask questions or challenge any investments. And we get thousands of discoveries in the FERC Formula 1 filing concerning our investments and the need for those investments.
Yeah, that was going to be the last question on this line, is that in some states you got Kentucky, you got to seek a CPCN for certain types of projects. You answered there's not necessarily that at FERC. There's also not stated rate cases at FERC, right?
There is FERC Formula 1 filing.
Well, they're formula rates, but they're not stated rate. They're not like this.
They're not state rate cases, yes.
Yeah, they're not formal rate cases. They're formula rates.
Yeah, but then you have 205 and 206 filings, which are more formal, as you know very well.
Okay. Can I ask you, I'm just going to ask you a very direct question. Mr. Raleigh, I've always found you to be a very forthcoming and direct person. So, the qualitative way that a couple of these, the qualitative way in which you earlier mentioned that you prioritize needs pursuant to the assumptions meetings, that was my understanding in addition to qualitative or quantitative formulaic determinations. Do you make those formulaic determinations? Is that something like, is that a model or an analysis or a set of analysis?
Your Honor, it is a set of analysis.
Okay. And do you, per your testimony here, you talk about this a little bit, but is the, proportionately, it would seem to me that, let's call it relative to current rate base, or the current size of each utility, or even the state operations of AP, that taking at face value Mr. Burkholder's testimony, and I think yours as well, that need drives investment decision, at least directly, that there are more needs for transmission investment in Indiana, Michigan, and Ohio, and West Virginia than there are in Kentucky. Do I understand that correctly?
Your Honor, are you talking about presently at this point in the last, few years?
Let's call it the last 12 years.
Yeah, I think that is fair to assume that at least and again, 12 years, when you look at assets that we are now focusing on addressing, I'm talking about lines that were built in 1930s, right? So we're talking about 100 years ago almost. Of course, a lot of those lines were built in Appalachian and the Ohio region, and that was the backbone transmission we had back then to supply Kentucky, to supply the rest of West Virginia and Ohio and Indiana, Michigan. So of course, those are the lines that are now needing investments because they were the ones that were there first to supply all the demand we were seeing spurring up back then. So yes, when you look at transmission investment, if you look at a broad scale of 100-year, 50-year, 60-year, it's very volatile. It changes over time. I can only remember, Your Honor, if we go back in 2010, we had retired 7,500 megawatt of generation along the Ohio Valley, and including some in Kentucky as well. And as a result of that retirement, we saw significant flow pattern changes to a point where we had to make investments in Ohio to ensure that Mitchell is deliverable all across our footprint, including in Kentucky. So these are, I agree with you that I think if you look at last 10 years, there have been more investments in those regions because that's where the needs are. But that doesn't mean it's going to stay that way, and that doesn't mean that's how it was 15, 20, 30 years ago, because it's volatile, it changes.
Okay, but I want to make sure that I'm appreciating. My question is around needs, and what your response was focused on the investments that have been made. And that's what I want to make sure, if there's a distinction between whether there are more needs out there than here, or whether the needs are just being addressed in other states as opposed to Kentucky Power.
Yeah,
So
so
I just
maybe-
want to make sure I ask the question again so that's clear.
Yes. So Your Honor-
Proportionately to the size of the utilities, or whatever measure you want to use, are there more needs in the other states than in Kentucky, or have there just been more investment in those other states than
Yeah, so Your Honor, first of all, I apologize if I use the word investment. Because for me, investments are driven by needs, right? So there is a direct correlation there. So using the right terminology there, yes, there are, as it stands right now, and looking back a few years, we have seen more needs in those regions for the reasons I mentioned, because that was the infrastructure that was developed first, and that was the infrastructure that was bringing power to the rest of the system, including Kentucky. But I don't see that trend, staying flat in the future. Of course, there are assets we have built in Kentucky. In my testimony, I discussed there are roughly 2,000 miles of lines in Kentucky that are 70-plus years of age. And there will be time in the coming years that we will have to also address that infrastructure when it reaches its end of useful life. So again, that's volatile, but yes, to answer your question, at least right now or in the past few years, that has been the trend. The needs have been higher in those regions.
Okay, and I just want to make sure you said earlier you don't have input into that. Mr. Burkholder talked about some things as it relates to the use of the system and Kentucky Power's use of the system. I have a couple engineering questions related to that. I've always heard people use the phrase that electricity follows the path of least resistance. You come to find out as an adult that's apparently not the case. You're an engineer, that's not really the case, right? It doesn't exclusively follow the path of least resistance. It kind of follows all paths. Is that right?
Well, yes. I think it's partially true. More electricity will flow towards a path that has less resistance and less impedance. But again, you would still see electricity flow pretty much on all lines. So it's not like all of that's going to go on one line and not others. So yes.
Kentucky Power owns half of Mitchell. Mitchell generates. Kentucky Power is using that power. It's Kentucky Power's power. Kentucky Power is not getting the electrons produced by Mitchell Power Plant. Is that fair? Not exclusively. Electrons don't follow the path of the place that's planning on using them. Would you agree?
Well, Your Honor, I think what you gotta look at is, if I look at Kentucky, for example, all the generation in Kentucky is sitting outside or at the cusp of Kentucky, right? So regardless of whether you're getting the electron from exactly Mitchell or another plant, that electron cannot get into Kentucky without the transmission system being there. So absolutely, Kentucky Power is relying on the transmission network around it, APCO's network, Ohio network, to get those electrons to the customers to serve them.
But as PJM and frankly historically the AEP East, it's a subsidized collective system, right?
I don't know, Your Honor, if I'll use the subsidized word. I mean, it is an integrated system that was holistically planned. I mean, back in the day when we built the system, there were two philosophies, right? One philosophy is every utility is self-sufficient. And one philosophy is that as a pool, we're self-sufficient. When you have winter peaking areas like Kentucky and APCO, and you have summer peaking areas like Ohio and I&M, it's more cost effective to be as a pool self-sufficient, because you don't need to build a lot more generation. And then you can build it together more efficiently by building big plants. So that's how the transmission system got designed and built and is being owned and operated, it is an integrated transmission system between those jurisdictions.
Yeah, I guess what doesn't make sense to me with the proposal here is that if Kentucky Power swapped its Mitchell Power Plant with a power plant in Pennsylvania, it doesn't necessarily use more of the transmission system. Would you agree?
I mean, my argument would be, Your Honor, if that is being considered capacity, then we would need to run capacity deliverability, and I would think that you would probably use, you would use more transmission because it's farther away.
But the fact that it is capacity means it's deliverable. That's the one thing PJM's good at, right?
Yes.
I say the one. I don't mean that's one of the things PJM is good at, right?
That's what I'm getting at. But you have to run that test, right? And that test would show that farther away the capacity is sitting, more transmission that capacity has to traverse to get to where the load is.
Deliverability is not a supplemental project. Transmission necessary for deliverability.
Generation deliverability, load deliverability are baseline projects.
Thank you. Mr. Garcia?
No redirect, Your Honor.
Thank you very much, Mr. Ali.
Thank you, Your Honor.
Very nice to see you.
Nice to see you, sir.
Let's go ahead and take another witness.
Thank you, Your Honor. The company calls Franz Messner.
Please raise your right hand. Do you swear or affirm that the testimony you're about to give is true and correct under penalty of perjury?
I do.
Please have a seat. State your name and business address for the record.
My name is Franz Messner. My business address is 1 Riverside Plaza, Columbus, Ohio, 43215.
Thank you, Your Honor. Mr. Messner, would you please state your employer and your position for the record, please?
I'm employed by American Electric Power Service Corporation as Managing Director of Corporate Finance.
And in that capacity, do you provide services to Kentucky Power?
I did.
Did you cause, on behalf of Kentucky Power, testimony to be filed in this case and discovery responses?
Yes.
Okay. Do you have any corrections to that testimony or discovery responses?
No, I do not.
If I were to ask you the same questions today, would your answers be substantially the same?
Yes.
And do you adopt those testimony and discovery responses as your evidence in this case?
Yes.
Your Honor, the witness is standard for cross-examination.
Counsel?
Thank you. Mr. Mester, I would like to have you look at, I'm sorry, your response in staff's 6 data request, item 4, about the pollution control bond.
I don't have that in front of me, but I think I could probably,
Okay, I can
Respond.
just ask him, and if you need it, then
Sure.
that'll be fine. It looks like the bonds are remarketed in 2017, 2020, and 2023. Is there anything that required that pollution control bond to be remarketed every 3 years?
yes, there is. The term that remarketing, it depends on each remarketing. We can remarket it for periods of between 2 and 7 years typically. But as you stated, the last several times, it was a 3-year remarketing period.
And that's just a choice that Kentucky Power made or AEP made?
It's a choice that I made on behalf of Kentucky Power, yes.
Okay. And
Mr.
what?
Pitt,
Oh,
May
sorry.
I approach him with a
Oh,
copy
yeah,
of this?
that's fine. Sorry.
Yeah.
And I'm sorry, this may be a basic question, but can you explain why or how remarketing is different than refinancing?
So the pollution control revenue bonds are initially issued, and the terms in the agreements provide for the remarketing. It's not a new issuance, it's basically a repricing as opposed to a refinancing.
And just going back to the 3 years, can you say why you decided to do it every 3 years? Is there a particular reason?
There's not a particular reason. In a couple of these periods, the bonds were bought in by KeyBank, and we liked the rate at the time. Most recently, it was publicly remarketed externally, and we chose the 3-year period, based on market conditions at the time of the remarketing.
Okay. And are there any expenses in the test year for that remarketing, like any issuance fees or attorney fees or anything like that?
For the most recent remarketing, no. For the one that was done in 2020, I'd subject to check, there may be some residual costs associated with that, but that 2020 remarketing subject to check was actually where KeyBank bought those bonds in.
And then, I'm sorry, in that chart in Part B, subpart B and C, it looks like the interest expense is increasing every year. And has there been anything done internally to decide whether or not, since that is going up, on whether it should be remarketed every 3 years?
We remarketed in each of these periods to support liquidity of Kentucky Power. We do have the option, depending on the financial circumstances or conditions of Kentucky Power, to buy them in and hold them. But most recently, the decision was made to remarket because of Kentucky Power's existing liquidity position.
I'm sorry. Right. Moving to a different topic, in your direct testimony, it's just a really brief thing. I don't know if it was a typo or not, but in your FDM2, it lists the upfront costs. AEP is listed as the servicer of ongoing costs for the securitization, but then in the proposed financing order, Kentucky Power is the servicer of those ongoing costs. Is it supposed to be AEP or Kentucky Power?
Could you restate the question?
Yes, I'm sorry. In your exhibit, FDM2, you have that AEP is listed as the servicer of ongoing costs from securitization. And then in the proposed financing order, it has Kentucky Power is the servicer of the ongoing costs. So which one is it? Is one of them a typo or?
I would need to follow up on that. It's probably most likely that AP Service Corps functioning as support for Kentucky Power would be providing the service.
Okay.
But the technicality I would need to check on.
Okay. And then I just have one question, and we didn't know if it would be better for you or Ms. Niehaus. And I'm sorry, I'm getting it. I apologize. When you did the modeling for the net present value calculation for the securitization, did you assume a constant weighted average cost of capital and interest rate when you did those?
Yes.
Okay. That's all I had. Thank you.
Good evening.
Hello.
Can you hear me okay?
I can.
On page 5 of your direct testimony, the question you were asked was if any of the decrease in equity relative to debt was due to payment of dividends from Kentucky Power to its parent company. And your response there was no, Kentucky Power made no dividend payments since the last base rate case in 2020. Do you know when was the last time that Kentucky Power paid dividends to its parent company?
Subject to check, and I believe this was a discovery question. I believe there was a $5 million dividend payment made in 2019, and there was no dividend in 2018. And then prior to that, I believe there were dividends. I just don't remember offhand which discovery question that was.
You think $5 million in 2019?
That's my recollection, yes.
Thank you.
Good evening.
Hello.
I want to follow up on a question Ms. Temple asked you. You aware of the tab conventional Big Sandy in your work paper?
Yes.
Attachment 10, Messenger work paper 1?
Yes.
Okay.
If I can grab the iPad, I can pull that up for him.
Yeah, and it's really, I promise you won't need it. The question you answered was that you applied a constant weighted average cost of capital of 8.3% as the carrying charge for that
Correct.
asset, right?
Yes.
And that was over the 17-year period?
For Big Sandy, yeah.
Yeah, the
Yes.
conventional period, the period that it, i.e. would have otherwise been recovered for absent securitization, is that right?
If the question is, was Big Sandy treated over a 17-year period at the 8.3, yes, the answer is
But
yes.
the use of the word conventional is
Oh,
a
fair.
reference to what it otherwise would be or is being recovered over absent securitization.
Correct.
Okay. You also had a conventional other, is that right?
Yes.
That's an amortization or a recovery of 5 years.
Correct.
At the same weighted average cost of capital.
Correct.
Do you know how the Big Sandy, as a general matter, how the Big Sandy decommissioning rider works today?
I have a general understanding.
That's all I have too, so I promise I can't answer, probably ask you any questions you don't know. But does the factor from that results each year from an update to the Big Sandy decommissioning rider, does it get updated for under and over recoveries? Are you aware?
I don't know.
Do you know whether, based off of subsequent rate cases, whether the weighted average cost of capital is amended, like after a base rate case where an ROE is changed?
I would assume so.
Okay. Did you hear Mr. McKenzie's testimony earlier?
I heard some of it, yes.
Did you hear the question I was asking about directionally, which way did he think, in the future? I asked for 20 years, I think, or maybe even 30, but directionally, which way he thought ROEs might be going? Do you remember me asking him that?
I remember you asking. I don't remember his direct response to that question.
Would you be surprised if it was basically up?
No.
Okay. Would that be your, I mean, I know you don't do that, but you have a good idea of capital markets, I'm guessing, from your experience. That's your general, like, directionally expectation too?
Yeah, I would defer to witness McKinsey, but yes, I would.
Okay. All else being equal, assuming that the ROE does go up, and assuming that Kentucky Power did file for subsequent rate cases in the next 17 years, and that the Big Sandy decommissioning rider, the conventional recovery stayed the same through that rider. Assuming a scenario that looked like that as your conventional case to compare net present value savings, all else equal, would that increase savings pursuant to securitization or decrease them?
I would need to check that. I've been told not to do math on the stand, but I understand a higher weighted average cost of capital, which is also being used as a discount rate. So I would just need to update the model.
Yeah, I'm just curious, your understanding of these kind of models, increase in the discount rate, do you know what it does to a net present value analysis?
Yes. I would assume that the savings would be higher than my original calculation.
And in large part, would that because the conventional cost would increase, whereas the levelized, or assuming levelized, but the securitization cost would be constant?
Right, it's largely driven by the difference between the securitization bond rate and the weighted average cost of capital.
Would it be unreasonable to compare the savings of securitization to, for instance, the way you did the conventional, to assume that the weighted average cost of capital increases at some reasonable amount over, or at some reasonable increments? Would that be a reasonable way to also do that conventional analysis?
It's reasonable. I mean, it's maybe adjusting some formulas in an Excel file, but I'm guessing it's something that could be done.
I guess what I'm asking for is, do you think that would be an unreasonable way to capture what the likely or possible savings of securitization might be compared to the conventional recovery?
Did you ask that question again?
Yeah.
Are you asking?
Let's just take Big Sandy.
Sure.
The Big Sandy decommissioning rider. Assuming the past is the future, utility comes in, periodic rate cases, I don't know, just pick them, 3 to 5 years, 3 to 7 years, whatever it is, but sometime between now and the next 17 years, and directionally asks for a higher ROE. That would increase, all else equal, the weighted average cost of capital applied to the Big Sandy decommissioning rider, correct?
Absent securitization, yes.
Yeah, the conventional.
Right.
Yeah. And so if you just made that single change to that tab on the conventional comparison, your understanding is that that would actually increase the net present value savings reflected from securitization.
Again, I would need to do the math.
Okay.
So I don't have an opinion on that.
Yeah, so let me ask you this. As a post-hearing data request, we're just going to ask you to see if, look at that. Because I don't know that it's reasonable to assume the weighted average cost of capital is constant for the next 17 years. Has that been your experience in corporate finance, that a utility has a constant weighted average cost of capital over a decade?
That has not been my experience now.
Okay. And so we'll put some parameters in the data request, but just to kind of reflect what might be a reasonable assumption regarding what will happen to the weighted average cost of capital over that conventional comparison.
Okay.
All right. Thank you, Mr. Mesner.
I'll redirect, Your Honor.
Anything else from Mr. Mesner?
No.
Can he be excused?
Yes.
Thank you, Mr. Mesner.
Thank you, Your Honor.
Counsel, would you like to call your next witness?
Yes, Your Honor. The company calls Katrina Niehaus.
I'm sorry. Please raise your right hand. Do you swear or affirm that the testimony you're about to give is true and correct under penalty of perjury?
I do.
All right, please state your name and business address for the record.
Katrina Niehaus, 200 West Street, New York, New York.
Counsel? Oh, I'm sorry, this counsel. Do you have any questions for the witness?
Thank you, Your Honor. Ms. Niehaus, by whom are you employed and in what capacity?
I'm employed by Goldman Sachs, and I am a managing director in the investment banking division there.
Did you cause to be filed on the record of this case direct testimony and responses to data requests?
I did.
Do you have any corrections or changes to any of those documents at this time?
I do not.
If I were to ask you the questions contained in those documents today, would your answers be the same?
They would.
Thank you. Your Honor, the witness is available for questions.
Counsel?
No questions.
The questions I was just asking Mr. Mesner, you've been involved in securitization and other state utility securitization in other jurisdictions?
I have.
Okay. Do the other jurisdictions require some sort of reporting that you're aware of regarding what the actual savings or expected savings are of securitization?
It varies by jurisdiction, but in general, as part of the filing post-pricing, there would be issuance advice letter to the commission that outlined the savings based on the final rate upon closing of the transaction.
Okay. The known cost of securitization, the cost of securitization is known for that purposes of that analysis, right?
It is.
Okay. The counterfactual is a little bit of, you gotta have some assumptions. Is that fair?
Correct.
Okay. Have you seen any that you think are more realistic to reflect the savings than others? Any particular jurisdictions?
It varies. It tends to be, quite honestly, a discussion between the utility and their commission, and it is not something that I would generally be a part of opining on the appropriateness of.
Okay. Can you remember any jurisdictions in which it was required as part of the issuance advice letter to indicate the savings or the expected savings as a result of securitization compared to some sort of conventional recovery?
Yes. It is not unusual to provide those numbers as part of the issuance advice letter.
Can you think of a couple states in which that has occurred, or a couple of utilities that you've previously done work for?
I think nearly all. I want to believe in Texas and a few other states. I would have to go back and look at the details. As you can imagine, they do start to run together a bit.
Are the issuance advice letters in those other jurisdictions public documents?
They are filed with the commission, yes, and in general are public documents.
Okay. Could you provide us the issuance advice letters and maybe the last 5 transactions you've been involved in?
As a follow-up item, we would be happy to.
I'm sorry, I'll return.
I can't snap my fingers and manifest them, but as a follow-up item, we'd be happy to provide the last publicly available issuance advice letters.
So we'll ask as a post-hearing data request those last 5 that you've been involved in. Well, let me ask the last 5 that have a stated expected savings from the securitization.
We will have to go back and look at what the format is of each of them, and we will find the publicly available ones and provide them to you.
Okay. You got that? Okay. All right. Thank you very much, Ms. Niehaus. Counsel?
No redirect, Your Honor.
Okay. Thank you.
Your Honor, the company has no further witnesses to call, so we are finished with our case.
I'm happy to excuse witnesses West, Phillips.
Wiseman?
No. That's why, so I think it's only those 2. There's only 3 left, right? That I did have not. It was Khan, and I've let Ms. Khan go, and it was,
I believe Mr. Bishop may not have been excused
I did
yet.
excuse
You
Mr.
Okay.
Bishop.
Excused. So Wiseman, West, Phillips, Khan's been excused,
Yeah.
Burkholder's been excused.
I think everybody except for Ms. Wiseman has been excused. I guess, so my question is, would you all like to call any additional witnesses or recall any of your witnesses?
No, Your Honor.
Okay. I would like to recall Ms. Wiseman. I have one question regarding the, sorry, can I use your witness?
Sorry.
Ms. Coburn, I had questions for Ms. Coburn about the reports on calls and complaints that she may receive regarding the call center regarding Kentucky Power, and she indicated that she did not receive those reports that Ms. Wiseman might. So I have limited cross-examination on that issue that I'd like to recall Ms. Wiseman for.
That'd be fine.
Okay. All right, Ms. Wiseman, thank you for coming on up. Just remind you, you're still under oath.
Right.
Were you here, or were you able to listen to the questions that I had for witness Coburn?
Yes.
Is Ms. Coburn an employee of yours at Kentucky Power?
She is. She reports to Amy Elliott now, yes.
Okay. Do you remember me asking about how if somebody picks up the phone with their Kentucky Power customer, where does necessarily the call go if they have concerns about service or billing or something like that?
Yes.
Okay. And my understanding of Ms. Coburn's testimony is that it goes to Hurricane, West Virginia?
Yes, that's correct.
Unless
Our
there's.
call center, yes.
Yeah, unless there are other exigent circumstances that require it to go somewhere else. Is that right?
That's correct.
Okay.
Mhm.
And my question was, like, if there's a disproportionate or a significant number, whatever term you want to use, if there's a unique number of calls from Kentucky Power to that call center, who is made aware of that at Kentucky Power, and how are they made aware of it? Do you know whether the call center has a requirement that if they get X number more calls than normal, or certain types of calls, who they contact at Kentucky Power, and how they contact Kentucky Power?
Yes, so actually, I'm afraid Witness Coburn sold herself a little short on the stand yesterday, because she has a team of customer service folks who work in in our territory, and she would, I think she said on the stand, that she's the liaison between the company and the call center, and she's actually a former employee of the call center. And so, we have a relationship with the local call center management. They participate on my staff calls. And so if there's a situation that has escalated, or something unique as you described, it would go back to Ms. Coburn. And then, and that happens pretty regularly. If there's the goal of the call center is to resolve whatever the issue is at the call center level, but if it can, it gets escalated back to Stevie and her team. She has a team of employees who handle residential inquiries. Stevie also works with the staff here at Rosemary, I don't know her last name, and then, she also receives the inquiries from the AG's office and other places, the Better Business Bureau too, and they resolve those if they cannot be resolved at the call center level. And so, and that's what I mentioned earlier in the week, that her team will also, if it can't be resolved by the phone or through email or whatever, we visit people's homes to like there might be a heat pump issue or something like that, or a meter issue, and that's what her team does, the customer service representatives in the field. And then we also have a customer services manager, Barry Nolan, who also reports to Amy Elliott, and he has a team of key account managers, or some of them are engineers, and they are assigned to our C&I accounts. Some of them, they're not all assigned. But for instance, like Marathon would have an account manager, Calgon, the coal mining operations, some commercial businesses, hospitals would obviously, those types of places.
Okay, so if there's an ad hoc issue, they'll contact Ms. Coburn.
They would, yes.
How about on a recurring basis? Is there anybody at Kentucky Power that receives recurring reports on calls or complaints to the center in Hergen?
I did try to go back and see if there was one report, and Stevie wasn't aware of one either. There's not one report that we receive. There's a dashboard that customer operations group at AEP, who oversees call centers, will send to us about call wait times, and it's not specific to Kentucky. I think that information is available. There are some reports that I understand that can be run if we want that, and I think periodically over the years, I haven't, but I think the team has looked at that. And then also there is a customer survey platform called Medallia that is linked to the call center, and it gives, as the way I understand it, it sends out random surveys after a customer has ended a call with an agent at the call center, and they rate the call and the experience and their issue or the company. It would be back to Kentucky specific, and Ms. Coburn receives those and her team, and they review them periodically, and then the ones that can be addressed, or if there's something significant about them, sometimes they're pretty benign in what is said or they don't want to be contacted. So if they want to be contacted, she and her team will reach out to the customers.
Who has
So is the dashboard in central location at AEP? So is there like what, National Operations Center?
I think so. I don't,
They could pull the reports? They're pretty.
so I know, and I know also in Medallia you can run reports. So I'm sure there's information available and maybe through a couple different ways.
Who has those reports and the medallia available to them at Kentucky Power?
Ms. Coburn and her team.
So just so I have an appreciation, and you may know this, but the commission has a particular interest, past interest on this issue with, I'm not calling it issue, subject as it relates to Kentucky Power and the different interactions with customers over the years. That the report is something, they call it a report, I'm just using the term, but a report is something that you go get. It's not necessarily something sent to somebody. Is that a fair characterization?
Yeah, not that we've been able to identify in the past couple days. I wasn't aware of a report that we get. Now, we do track on our own, again, Stevie and her team, the inquiries that we get from here and the BBB and AG's office and anywhere else, and we categorize those. So, and we compare, over the years to how it's trending and what may be triggering increased inquiries and that sort of thing.
Okay. One last question, it just occurred to me. Historically, and I asked you this question about the CEO. The CEO of AEP has historically been the CEO of Kentucky Power. Do you remember me asking you that
Yes.
question? Historically, I think also the CFO of AEP has also been the CFO of Kentucky Power. Do you know whether that's the case?
I do not know if that's the case. I'm not sure.
And we get your all's annual reports, but they're filed by March 31st for the previous year that indicate the officers and agents of the officers of the organization. I think Form 1s have similar information, but they're not filed until like February, or maybe even later than that. So when it comes to the officers or directors of Kentucky Power, do you know where that information would be?
I don't know right offhand. I'm sure it's available and would be in some of our public filings.
Okay. All right, thank you, Ms. Wiseman. Any redirect?
Just very briefly, Your Honor. Ms. Wiseman, I believe there was testimony earlier this week that there are periodic meetings between Kentucky Power's customer service organization and the call center management team.
That's correct.
Is that correct?
Yes.
And can you remind us, how frequently do those meetings occur?
Well, the call center manager participates on my monthly management calls, or a representative from the call center if she's not available. And then, so we have that interaction, but then also just recently, Miss Elliott and her team went to the Hurricane Call Center, talked about Kentucky-specific issues. We also have a knowledge base, which is a database that our agents use and our employees use. So, for instance, before we file something like a rate case, we would have a brief meeting with the call center management to make them aware of what is some of the activities in our territory.
Thank you. And in meetings like the ones you described, either the monthly meeting or other meetings between Kentucky Power employees and call center management, does the call center team raise or identify issues to Kentucky Power that it is hearing from or has learned from customers who call the call center?
Yes, on a fairly regular basis if there's an issue. I mean, as I said, we established Stevie Coburn as a liaison between the company and the call center several years ago when I first came to Kentucky, and that has served us well. And, certainly like the example that pops to mind is that, there are a lot of utility scams going on, and so we're often alerted by the call center that they're getting an unusual amount of calls from our territory, and then that will prompt us to, post messaging or put something out about that to remind customers not to be taken advantage of. That's the example that comes to mind.
And when you reference posting messaging, are you talking about doing so, at least in part, through social media?
Social media would be included for sure, yes.
Does Kentucky, and do you have employees who monitor social media on Kentucky Power's behalf?
Yes, I do. That would be our corporate communications manager.
Okay. And is it the case that customers also contact Kentucky Power directly through social media, Facebook, Twitter, or other social media platforms with complaints? Or with concerns?
Or any inquiries, actually, yes. We have a social media center where we have trained agents who work in the messenger platform of social media and serves really as a call center type environment, and answers the same questions or will escalate them to us as needed.
And so that's another respect in which Kentucky Power's customer team is directly interacting with customers to resolve their concerns and inquiries?
Yes, absolutely.
Do you or other Kentucky Power management receive regular social media summary reports regarding
We do.
those
We receive a
communications?
daily summary. It's not just exclusive to Kentucky. It's all of the company, but we see a summary of what if we've been tagged or what customers may be saying or other operations.
And so if someone tags Kentucky Power via social media or sends a private message to Kentucky Power through social media, in addition to that directly routing to the Kentucky Power customer service team that you talked about, you and other Kentucky Power management also receive a daily email with that information.
We do. We receive a daily email, and then, of course, our corporate communications staff would alert us if there was anything else that we needed to know about quickly.
Thank you. I have no further questions.
Is there anything else from Ms. Wiseman?
No.
Thank you, Ms. Wiseman. Maybe excused. Is there anything else from the company's case, Ms. Glass?
No, Your Honor.
Okay. And I just want to make sure through the company's case, we have 3 documents in the record: the EEI document, the commission's document, hearing exhibit 1, and then hearing exhibit 1 and 2 from Kentucky Power, which is Mr. Vaughn's additional exhibit and Mr. Burkholder's additional exhibit. Is that right?
We'd move to have both of those exhibits entered into the record.
All right, so granted. The AEP Kentucky Power hearing exhibit 1 and 2. Right.
And before we move on, would now be an appropriate time to take a short break before we get into the other witnesses?
You all don't have cross from Mr. Collin, right?
Correct.
I don't want to try to upend the settlement. I think it may be convenient to just go ahead and take Mr. Collin.
Okay, that's fine.
Yeah. Okay. Mr. Kurtz?
Thank you, Your Honor. We call Lane Collin.
Mr. Collin, please raise your right hand. Do you swear or affirm that the testimony you're about to give is true and correct under penalty of perjury?
Yes.
All right. You shaved your mustache, Mr. Collin. I'm sorry.
Mr. Chair, we've discussed this previously.
I'm sorry. I was not laughing at you. I was just genuinely surprised. I wasn't looking. All right. Please state your name and business address for the record.
My name is Lane Collin. My business address is J. Kennedy and Associates Incorporated, 570 Colonial Park Drive, Suite 305, Roswell, Georgia 30075.
Mr. Kurtz.
Thank you, Your Honor. Mr. Collin, do you have in front of you a document marked the direct testimony and exhibits of Lane Collin?
Yes.
Was that prepared by you or under your direct supervision?
Yes.
If I were to ask you the same questions as those contained therein, would your answers be the same?
Yes.
Any corrections or additions?
No.
Your Honor, the witness is tendered for cross.
Counsel?
Oh, I'm kind of going to piggyback off of Mr. Kurtz. You've had the opportunity to review the settlement testimony and the rebuttal.
Yes.
And does that change anything with regard to your original recommendations on the revenue requirement? Like, for example, the property tax. I think the settlement, you all went 50-50. But does anything in the record change your original recommendation with regard to that reduction?
Let me just preface the answer by saying I support the settlement. I think it's a reasonable settlement. Nevertheless, I still believe that all of my recommendations are correct and correctly quantified.
Okay, well, in that case, I have just one more question.
Okay.
Originally, I think your recommendation, the settlement agreement accepts the recommendation as to the allocation for each rate class, except for the $500,000. And it's allocated differently than I think you recommended. Is that correct?
Actually, I did not recommend an allocation, except with respect to the FSR, the securitization rider.
Okay.
And Mr. Barron addressed the allocation other than the securitization rider.
Okay. Well, that's all I have then.
Okay, thank you.
You've been in the room today?
I have
Yesterday,
been,
day before?
yes, more or less. I was out for a couple of hours.
You
because
didn't take
of
a nap in here as well. You didn't stay here last night, but you've been around for the hearing.
I did not stay here last night.
Yeah, I just want to make sure I have an appreciation. You came to your executive compensation adjustment that you recommended in your testimony in this case, your intervener testimony in this case, from different documentation than that included in Kentucky Power Company's response to Kentucky Public Service Commission staff's data request 1-33, confidential exhibit 1, right?
Yes, that's correct. And in fact, in my electronic work papers, everything is documented. The source as to the factors that I applied, like the 90% factor or the 50% factor. The incentive compensation adjustment that I calculated is what is reflected in the settlement agreement, and it has only to do with financial performance measures.
And that's, again, the LK13, I think, is your, do you mind to look at it just so that we're on the same
Sure.
page? That's the, when you say the basis for it or the work papers or supporting documents, that's the word you use. That's LK13 exhibit, correct?
Let me just verify that. I did rely on this, but my electronic work papers have my calculations of that $3.458 million adjustment.
Well, but that, I guess what I'm saying, the source of that are the documents attached as LK13
Yes.
to your exhibits? Okay.
That's correct.
Did you know, just curious, before today, did you know that that witness Whitney in the company's original cost of service study only made an amendment to the Kentucky Power Company customers' target incentive compensation to put it back to 100% target in the test year and not the AEP-SC portion?
Yes, I knew there was a different treatment.
Okay. And was your proposed adjustment and the adjustment that was adopted in this case related to an adjustment to the actual for the AEP-SC portion or 100% target?
At least with respect, well, not at least, but with respect to the Kentucky Power employees, it was the 100% target because that was the starting point in the company's request.
Right.
And if I could just refer you to my exhibit LK13, the response to AG KIUC 1-35 specifically asks for the AEP Service Corporation incentive compensation expense and for the Wheeling Power Company incentive compensation expense because a portion of that Wheeling Power Company incentive compensation expense is billed back to Kentucky Power Company. So,
Okay.
so a little bit of a supplemental response to your prior question. Yeah.
Okay. All right. Thank you, Mr. Cullen. Any additional redirect, Mr. Kurtz?
No, Your Honor.
Okay. Thank you. May be excused.
Okay, thank you.
It's my understanding at this point, I've excused all witnesses in this case. Is that right?
That's my understanding as well, Your Honor.
I disagree. All right, so we're going to do a couple of things. First, I'm going to read, everybody that's present and participated in any of the settlement agreements, we'll read some admonishments and ask for you to agree or disagree with them. I hope not disagree. Hopefully agree. Well, you disagree with the code, so. Take up the admonishments, everybody involved in the settlement discussions that led to the proposed settlement agreement. I'm going to ask for Mr. Cook and Ms. McCann and anybody who participated for any of the parties in the settlement agreements that is not here present in the room to file an affidavit with the commission asserting responses to the same admonishments I'm about to ask the people in the room.
Your Honor, one quick clarification
Sure.
question from your company counsel who has not settled a case in Kentucky before. Does that include non-attorneys?
Does.
Okay, thank you for that clarification.
It does. And I'll just say, my opinion is that if attorneys have to file affidavits saying that they agree or disagree with this certain admonishments, it does not make them a witness in the case, because that would put them in trouble with the bar.
Thank you, Your Honor. All counsel are here. We just have one non-counsel.
What was your?
Does that include all of our client representatives, or would one representative from each of our?
Everybody who participated on behalf of an entity, in this case,
Okay.
in the settlement negotiations.
Thank you.
Okay. All right.
Your Honor, may I ask a question?
Sure, Mr. Cook.
So, since the Attorney General is not a signatory, I'm not exactly sure what it is you want the Attorney General to testify to.
You, Mr. Cook, I don't think will have to file the admonishments because you do not support each and every provision contained therein of the settlement.
Right. Correct.
Okay.
Right. Okay, so we don't need to file anything, correct?
Great. We
Okay, well,
will,
Sir, this is Kim McCann.
go ahead, Ms. McCann.
If I may, we also signed as non-opposing on behalf of SWBA.
Same goes for you.
Thank you.
Yep. So we will have counsel provide a copy of the written admonishments that we have for everybody so that you all have them for the benefit of not trying to have to come back and listen to what we say here. We'll provide a copy so that you all can file the affidavits accordingly. So, all right. So if everyone who signed in support of the settlement agreement and participated in those activities could please stand. Please raise your right hand and please respond aloud for each of the questions. Were you aware of and did you have an opportunity to participate in all of the negotiations that resulted in the settlement agreement?
Yes.
Did you voluntarily sign the settlement agreement and do you fully support each and every provision contained therein?
Yes.
Are there any provisions in the settlement agreement that you do not understand, object to, or take issue with?
No.
Was any consideration of any kind offered, or were any promises made other than what is expressly set forth in the settlement agreement to induce you to negotiate and sign the settlement agreement?
No.
Are you aware of any reason why the commission should not adopt and approve the settlement agreement in its entirety?
No.
Okay, all right, thank you all very much. Well done. Council, I'll ask Ms. Tussey or Ms. Temple to provide you all the written version of the admonishments.
Thank you.
For your all's benefit. We'll have a number of post-hearing data requests. Today is Thursday, the 30th of November. We can have those data requests out by,
We actually have them mostly done, but we would like for you all to have the opportunity to review them, so.
we can have those out by December the 5th. What are the chances, council, that you all would be able to provide full answers if those were provided by the 5th, by the 15th?
I think that's perfectly fine, Your Honor.
Okay. So the post-hearing data request will be issued on the 5th to be responded to on the 15th. I'd like to ask the company, would you all like to do simultaneous briefing, original and reply for all parties, or would you like to do, you all file an initial, everybody else files a response, you all file a reply?
I think, Your Honor, that simultaneous briefing makes sense in this case.
That'd be great, and it takes a lot less time. So, how does everybody feel about a brief due before Christmas instead of after Christmas?
Great.
Okay. No complaints? All right. So how about a brief due on the 22nd? It's a Sunday. given that Christmas and New Year's are soon after, how about a reply on the 8th?
January 8th?
Yeah.
Do you need that much time?
I don't think we need that much time, Your Honor.
Sure?
Yeah.
All right. Well, the only reason I say that is because the 25th is Christmas. I don't want to surprise
Understood.
anybody here. And yeah, if you all want to do it earlier, that's fine. What about the, oh, and I said that, that's the wrong date. I'm sorry.
What about December 29th, Your Honor?
I
for
said
our
January,
briefs?
5th. How about, so initial briefs on the 15th.
Oh, initial briefs. on
Oh,
the
I'm sorry,
15th.
22nd. Yeah, the data request response on the 15th, briefs on the 22nd. I mean, ordinarily I would have said the 29th, but
The company
Christmas.
can accommodate the 29th, Your Honor.
Is it at all possible to do the second? I'm going out of town the week of Christmas, so that I'm supposed to be with my in-laws.
Yeah,
It
I
would
don't
be
think
really
that's-
nice if that
not-
whole week was,
not-
I mean, maybe I will wish I
So
was drafting the.
I was gonna throw out the 29th, but I think the second would be,
Yeah.
I think the second would be fine.
That's fine.
I mean, if I weren't out of town, I wouldn't mind, but in this particular case, it's.
I just don't think there's any need. I mean, I'm interested in everyone's arguments on the evidence or record, but the evidence will be closed on the 15th for us to start reviewing it.
Yes.
Yeah, okay.
And, Your Honor, if the parties, upon reviewing one another's initial briefs, conclude that there's not a need for reply briefs, we could file notice with the commission to that effect as well, just to notify the commission that reply briefs are not forthcoming.
Yeah, that'd be fine. So it's my understanding, I'm going from memory here, that the, well, I know the suspension date is on the 14th, which is a Sunday, although I don't think you get the benefit of counting when it comes to suspension dates. I think those are month dates. But it's my understanding that the deadline for the securitization portion is the 10th. The legislature's got to stop passing some things that say months and some things that say days, 'cause it's 2 cases in a row, they fall on different dates. So that would be tough. But, so if you all know, after reading everybody's initial briefs, that you will not be filing a response, that would be, or a reply, whatever, that would be very helpful to give us as much indication.
It would be shocking if we filed a reply brief.
Okay.
I think that's also true for the company, and I also think, Your Honor, that if it would help the commission, recognizing that the commission has 2 different deadlines, one of which is shortly after the winter holidays, to move up the initial brief and the reply brief. Well, subject to
No, that-
Ms.
if-
Frenman's
if-
scheduling.
To your point about the likelihood of filing the reply brief, I'm generally fine with moving up the initial date of the initial brief with the likelihood of there not being a reply brief.
So,
So here's the thing, I'm fine doing all of that. Everybody can file their brief as early as they would like.
Okay.
Okay? The reason I gave you all 10 days for the data requests is because I think it's a reasonable amount of time, all else being equal. I get the suspension date and everything being what it is. If you all are already working on this, if you get the data request due before the 15th, and everybody, you all get together and decide to file your brief on the 15th, that there's not going to be anything issued, included in our order that will preclude anybody from doing that.
Okay, that's fine, Your Honor.
It's not like you can file an initial brief and somebody gets to respond to it in their initial brief. That's gonna.
We know that you
Just
do
file a
not-
motion
that
to
the commission
strike
does
and
not
we
like
will, we will happily take that under if somebody decides to do that because somebody decided to file a brief early. Just don't, people have it done, file it.
So we're the 22nd, we're keeping the 22nd and the
Yes.
2nd. Yes.
Okay. Is there anything else that we need to take out? Sure.
Just timing on the admonishment affidavits, when do we need those?
Yeah, let's take those 5 days from today.
Okay.
5 business days. Same as any corrections that were taken on the stand today, 5 business days. Anything else?
No, Your Honor.
Okay.
Thank you, Chairman.
All right, thank you all very much. This hearing is adjourned.